It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
What's up?
What's up? We just had the biggest burn Vanetta did to my son.
God.
It was so bad.
I don't know if I'll ever recover.
Don't
I don't know how
me.
you can. I'm just glad she said it to you and not
Blame
me.
it
I'd
on
be
the
in a fetal
Celsius.
position.
Blame it on the
God.
Celsius that I need
Blame
to
it on
get
the Celsius?
through. That I need to get through Peach Vibe.
Is that your beverage?
Went to Costco. No, I like the whatever this whole pack is at Costco. It's Peach Vibe, Retro Vibe, and Tropical Vibe. So it's a vibe.
It works?
Yeah.
Works for you?
Does it have like extra caffeine in it, or what's
I mean, it's got caffeine
just the flavor?
in it, and then it supposedly burns your body fat during the day.
Ooh.
Oof, look at that.
But I'm sad though because it's cold and I mean I'm obviously still Midwest sized, but I miss the body fat that I had. So I've been working out, but body fat keeps you warm and I'm cold.
I've been warm all winter long. You kidding
Yeah.
me?
Yeah. Wish I had a fat ass and was warmer, but How are you, Nikki?
I'm great. Cold as well.
Living your best life.
Living my best life.
Yeah, did you drive today or did you walk?
I did.
Yeah.
Yeah. So,
It's hard. New parking lot rules here.
it was kind of nice. Went right in.
Yeah.
Yeah.
You just
I
zoom
know,
in.
but I kind of got dinged because I had paid for it in the app, but I didn't know which lane was which. But I had already downloaded the app for another place that I go, and so I just got to make sure.
It's like a Roach Motel in here now.
Oh, it matters
right.
which lane you have to go in?
Well, if you went right through and it went up, then it's gonna take it from your Metropolis account. But if you already paid in the parking.com app, then you need to go through another lane.
Oh, you do?
So I paid twice today. It's fine.
Oh, God.
It's okay.
What if I don't have it just let me right through. Which lane are you supposed to?
But maybe you've signed up for this app before. So
I didn't sign up for that.
You're not going to be able to get out, is what's going to happen. So you didn't.
No, you have to scan the QR code to get out.
Oh, okay.
So
All
you're
right.
gonna have to download the app, the scan, like.
But you can do it ahead of time.
Yeah.
Like you can go downstairs and just download the QR code, and then you.
I already paid for it on the parking app.
Oh my God.
That's what I'm
Did
saying,
you pay for it
Nikki.
today?
Yeah.
Yeah, Nikki,
Oh.
you did what I did then. Yeah.
Yeah, so I'm fine.
I'll help you. I'll help you.
What is
I
this
did the
shit?
same thing. No, but I did the same thing. So yeah, we paid twice today, so it's fine.
Such a
In this economy,
in this economy,
can't afford
and
to pay twice.
parking is just such a in Chicago.
But we
The
didn't come
fact
in yesterday, so that's how because
Yeah.
it was a snow day, and so we didn't come in yesterday. And it is pre-tax dollar. This is not interesting at all.
Yeah.
Sorry.
I've never been to a parking lot where it just goes up before you even pay, and it's like you can get in,
So
but you
it's
can't get out.
actually
Yeah, you're
interesting.
stuck.
It's the company itself is a startup, but they're worth like $1.8 billion. Like I looked into like it's
1.8 billion?
Yeah, it's kind of interesting for
because they have a freaking
we sold- we
monopoly.
sold
use
this place
AI.
too cheap.
Yeah, they use
Yeah.
technology for parking, and it's a
Oh,
new.
well,
business.
technology going to cost me double today. So
That's why they're-
GFY to their technology.
That's why
whatever
they're
the
worth
hell it is.
$1.8 billion.
Probably.
They found a way to get money twice. I mean, that is a good thing.
Yeah.
Crap.
But it's because I use it in Chinatown, but it sucks because that lot in Chinatown used to be able to like park there, go pick up your takeout, the validate, you pay $2. Now it's this same company, $10.99.
$10.99, there
So
you
I
go.
may as well just use Uber Eats because
Yeah.
if I'm paying a $11.
Because you don't want somebody to eat your food before you get it. That's why you don't do Uber Eats. Drink your drink and eat your food. That's why you don't do it.
I guess. How was your evening, Nikki? You watched any of the Eagles-Packers game last
No, I'm still in Monday Night Football blackout.
Oh no!
I'm very-
because you're fighting with ESPN.
Yeah, I have been looped. I need to get my $20
You gotta opt in for the
Yeah.
credit.
opt in.
yeah.
Like,
for the stimmy.
yeah, for the $20 stimmy. I'd rather have my freaking football.
It was another horrible game, 10-7 or something like
Yeah,
that. I think I saw
yeah.
the score. Yeah, I didn't watch it, but I saw
Primetime unders.
Primetime unders. Pays again.
Pays
Who'd you
again.
have?
I had the
Good.
Eagles plus 2.5.
Eagles plus 2.5. Oh, so you
Yeah.
won.
Yeah.
Nice.
Yeah.
I think I came out with 16
16
of
21
21.
points or something like that.
Let's see. I mean, I'm, you know.
I'm surprised you haven't looked yet. This 7:05 in the morning.
Well, you
Usually
know.
wake up to that stuff.
Well, I'm leading the league by 17 points, which is pretty much a full week. I mean, that was, that's pretty.
Well, this year you haven't forgotten to put some scores in, which is good because last year it was my money. You didn't care. You didn't put anything in.
I missed 1 week. Yeah, I went 4-2 on the week, 16 points.
That's not bad.
4-2.
Yeah. I mean,
I hate it when he brags.
yeah,
I really do.
my season standing or my season picks 63.3%
That's pretty good.
against
Very
the
nice.
spread. Well,
Dominant performance.
Yeah,
That's very nice.
I mean, if that was on a sports book, it would, I'd probably be.
My anti-testicles.
They'd probably cap my betting.
Yeah.
No, I'm just,
Oh, Captain Betting. Oh, they wouldn't let you bet anymore?
they would probably they'd be watching me.
Get the concierge service.
Yeah.
The-
Got my eyes on you.
3% above the juice. I mean, you got to hit 60%.
You got to reckon with that.
60% is break even.
yeah.
You know?
Okay.
When you're paying 10% juice on every bet, you got to.
Something you don't have to do here.
Yeah.
That's right. When you
That's
trade
true.
in penny-wide markets, beautiful
true.
thing. Beautiful thing.
Yeah.
How was your evening, Mr. Bat?
Last night was a good night, I believe. I mean, I
hockey
made a fatal
practice,
flaw. I made a rookie mistake. I listened to my wife. Usually she steers me correct about everything unless it comes to the hoses outside the house.
Okay.
So we've been freezing last 2 days, and I said, I got to pull the hoses out. Now, my wife likes to use, she's an animal person. I'm not an animal person. She feeds all the squirrels and the birds and.
She's a sweet, kind-hearted lady.
Yeah.
How she ended up in this situation, I will never know. But
Right.
go on.
Right. So she likes to use the hose to fill up the water that's now heated for the birds.
Oh, that's nice.
Yeah, sure. And the squirrels and everything like that. But she likes to use the hose. Otherwise, you got to put the pail in the water. She's like, just leave it right now. It's going to be 60 degrees this week. And I
She's
listened.
not wrong. It's going to be 65 degrees on Saturday.
But everything's frozen.
Yeah.
So yesterday I was able to take them all out and get the water running again. This morning when I woke up, I went out there and checked it again. It's frozen again. So she's either going to be underwater or it warms up a little bit. And she.
Yeah, it's going to be like 45 today. So
Yeah, hopefully.
she'll be.
Hopefully, if not, she'll be canoeing it out of the kitchen.
No, or she just gets to call the fire department again.
Yeah.
Win.
Win-win. Right.
Getting a call.
That was really my day. Nothing else though. Double practice tonight. A big game tomorrow. Gotta win.
Oh, against Naperville?
The arch nemesis team right there, Naperville.
I think Joliet Catholic, but I'm not 100.
Oh, not
Ooh, the
Joliet
Catholic.
Catholics.
You got to watch out for the
no.
Catholic boys.
Maybe not. Yeah, you
We're
do
on a
have
mission
to.
from
The
God.
They
Catholic
make them
schools,
big over there.
they're big and they're disciplined.
York. Never mind. York. Playing York.
Yeah.
All right.
I got my 5-iron league today.
Oh, I was going to ask.
First day.
The first day. So.
Haven't swung a golf club in 2 months.
That's never a good thing.
Could be rough.
Do you
know
have
what?
a partner, or how does the it's
We are-
all just individual, or how does it?
4 per team, and then they switch up the like games each week. So I don't know what we're doing this week, but they'll switch you between like stroke play and scramble,
Sure, skins,
fastball,
whatever.
yes.
I don't know. Yeah.
And then you play against another foursome.
Okay.
So so today will be the first one.
That's a great idea for
It
the
is a good
winter.
idea.
You gotta hang with the boys.
Yeah,
Yeah, that's cool.
little sim golf.
Goes faster too, right? Doesn't it?
Yeah, I think it's only like an hour and a half or 2 hours, something like that today.
Yeah, that's good. That's good.
So should be fun. Yeah.
See, then you're
We'll see.
gonna be in. Then it'll keep you in peak performance. For,
Peak shape.
Yes.
Yeah.
There it is.
Yeah.
For when it's warm enough to play golf
Yes.
again.
Yes.
I'm getting a lot of feedback on you this morning so far that you're acting a lot like Tom already. That's what people are saying. So, I mean, pretty soon you're going to be telling me how I like my steak is what a couple of people wrote.
With what?
Just your whole thing, whether it be, the betting and, everything else. I mean, I don't know. They're saying that you're starting to act a lot like him.
You mean his dominant performance in everything that he does?
Yeah. Being the greatest at anything I touch.
Soon to be ranked. Yes.
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 Simulation golf.
Get into it.
Yeah.
Get into it.
Wow. Wow, the shade that is thrown my way. I mean, I do feel a little bit of this seat kind of.
It's permeating
It
into
permeates into your like bloodstream a little bit.
your brain. I
have
see
to
that.
burn
I
it.
get that.
Yeah, so maybe I get a different chair. Maybe I just get like
That's what we need.
I don't know.
Do you have a craving for a bowl of pistachios right now?
Somebody on
Do you have a craving to eat with your hands everybody else's food?
Yes, I do. On Friday, somebody said, "Do you think you can find a leftover pistachio nut somewhere?" on the
100%.
Oh, 100%.
I'm like, there's got.
100%.
I was looking for one on the clothes, and I'm sure there is one in here somewhere. So I will look for that as a souvenir. We'll make something out of it. I'll put it.
We
Like,
should.
yeah, as an homage. Mm-hmm. Yes.
There you go.
Yes.
I think that's nice.
What about you, V? Everything okay?
Yesterday was like the best day. I was cozy and warm in my house. I didn't leave my house all day. I made a big pot of turkey chili.
Ooh.
So the house smells like spices and.
Yeah, but turkey chilies.
Have you
Yeah.
seen beef prices? I don't even eat beef, but I'm just saying,
Please.
like I eat turkey chili. It's fine, whatever.
Yeah.
Yeah.
But it's good. I'm sorry that the food that I cooked in my house by
For you.
myself
It's not up to my standard.
to your standards.
Hey, you would never say that to Tom, okay?
But I froze half of it because I can't. Obviously, if I make a big, like I can't eat all of it.
Could have
So-
brought some in. I mean, we would have tried it.
But you're gonna turn your nose up at it.
No, maybe you can, you could turn us. You know what I mean? You could
but it was
make
great.
make us know how wrong we really are.
Yeah.
I mean, don't you want to fix us?
But it's good. I put beans in my chili, which is
beans?
controversial, I guess. I don't know, but I like
Red beans, white beans
red
combination.
kidney beans. Red
kidney beans.
Yeah, in
That's like my
chili.
mom.
Yeah,
Yeah.
not mad at
Mm-hmm.
that. But put little cheese on top.
You still do the crock pot thing? You're not doing a crock pot thing. You need a crock pot? I got an extra one.
Sometimes. I use a crock pot sometimes.
Okay.
I did make tomato soup.
Tomato soup.
Ooh.
Grilled cheese, too.
Grilled cheese
Do you
and
put
tomato
cream
soup.
in your tomato soup, or do you just put like broth?
Horse and cheese.
Oh, okay.
Oh, that's the secret.
Put a block of that in there. Makes it thick.
Ooh,
Nice.
all right.
And a little bit of cream, too. You got
Yeah.
a little bit. But you do like half cream, half cheese. Horse and
Interesting.
cheese. Yeah. Black truffle Borson cheese.
Oh, excuse me.
Yes.
You
In
got
this
it like
economy?
In this economy, I know.
that. Hitting 60% of his bets. So.
That's right. No,
right.
no
They're
turkey for me.
subsidizing.
Yes.
I like that.
Yes. So I have soup in my freezer
Yeah.
Very
for,
nice.
for the winter. Yes.
Yeah, I like to freeze stuff. Like it's great.
It's all about the grilled cheese, though.
How
that's
do
the
you
best
do
way
yours?
to
Do you
eat.
put mayonnaise on yours?
No, I just do,
Outside? That makes it
I
crispier.
get Amish butter.
Oh.
Yeah, you like that?
Peeps in Indiana.
Yeah. I like my Amish butter. I get the eggs too, Amish eggs.
Yeah.
Well, just
So do you butter your toast for your
I
bread
just
first?
I just put like a big old knob of it in the
you
pan.
gotta butter. You gotta butter.
No, yeah.
Use
first.
So-
mayonnaise. You got to use mayonnaise. That's
Nah, you
what-
do the big butter in there. You do like a smoked Gouda. I like a little smoked Gouda.
I love a smoked
You do
Gouda.
little shallots. You,
You gotta
fry
shave
up
the
some
cheese
shallots.
for it to melt properly. That's
Oh.
the secret.
What do you think? You just put a block of it on
Well,
there?
you watched me when I was a kid. You gotta shave the cheese
Watch
when you make a grilled
Watch
cheese.
you. But you made hockey pucks. That was what you made on the grill. That was it.
Made that last
Hockey
night
puck.
for Vinny.
Yeah?
Steak.
What did he say?
Yeah, steak. It's good, Dad.
Yeah. Well, you got the thermometer now.
Right,
That
I
was
do. I
that
do.
invention did not
a game
exist in the
changer.
90s.
No, it did
Or
not.
it did in the 90s, but we just didn't have
We
it.
didn't use it.
Yeah, we
Yeah.
didn't use it. It was just
I was
one.
a man.
It was one temperature, charred.
I like it like that.
I do kind of like a nice like char on the end.
Most
but,
men do, but they gotta.
But that's
they
on a
gotta pose
burger.
and
A
say they like
burger-
it rare. I like it mooing.
No.
Right.
For a steak, it needs to be. You need to have the crust, but
Yeah.
it needs to be medium at most in the middle.
Yeah,
You would just cook the crap out of it. Burger, you can do like medium well. That's fine. And you get the crust on the outside, and that's fine. I'm okay.
I like it like that.
I'm okay with that. Yeah.
All right.
That was trauma. I was releasing.
Obviously,
trauma.
it's still bothering you. It's been about,
No, Dad, I can't finish. I can't finish it.
it's been about 20 years. Yeah.
Please.
Eat it.
Yeah, once upon a time we had to finish the plate before we left the table.
Sure.
Now,
Wait a minute,
now
did I
you
really-
might only have to have one piece of your Wagyu steak and one piece of your
Sashimi.
sashimi or your Chilean sea bass.
Did I
didn't
really do
even
that to
know
you? Did I
where
really do that? I
Chile
didn't do that to
was
you.
back
I
then.
didn't do that to you. You were a good eater. You guys ate. Did I really make you finish your food on the plate?
Some siblings would say that might have contributed to eating disorders.
Wow. Well, that took a turn.
No,
What
no.
in the
Seriously,
Judy
did I? I didn't do
novel?
that.
No. Yeah, it was finish the plate.
Was it a rule?
Yeah,
Finish
Well,
it.
were you guys eating garbage beforehand or something like that? I mean,
maybe. I don't know.
Okay.
You're children.
All
You're
right.
you're like
Yeah. All right.
Those
Well, we
little
don't have that
standoff
rule
there.
anymore.
Clean Plate Club.
Yeah, the
What
Clean
do you-
Plate Club.
yeah, the Clean Plate Club.
Yeah, we had that too.
You had that too?
See,
Yeah.
you see, that was a thing. Now the kids rule the world.
But then they
Parents
blame
are-
that though, like on like American obesity rates though, or whatever. Like all these kids were forced into being in the clean plate because you're supposed to eat intuitively.
I
You're
was
supposed
just trying to keep him fueled because he was going to sit there for 3 hours doing his math homework and all his other homework that he had to do.
No, math wasn't the one that.
I know,
took me
but you
3
would sit
hours.
there and
that
do
took
all
me
your-
like 30 minutes. The English, the writing. That was the 30 minutes. The 3
Yeah, it
hours.
was the opposite.
Yeah, yeah. That wasn't
So
my fault.
that's why he had to sit there.
That's okay.
Hey, we got a great show for you today, whether you finish your plate or not. It is a perfect Tuesday here on Tasty Live, coming at you at the top of the 8 o'clock hour. Little options jive, shutdown fallout. What history tells us, we're edging closer to the possible reopening of the American government. We will see what happens as the bill gets kicked into the House. But we're going to look
When does that vote go? Do you know?
I do
When,
not know.
Thursday?
I do not
I thought it was
know.
Thursday.
I
trying to
don't.
find
I don't. I don't know what our government is doing.
Okay.
But I honestly don't know when it will be brought to the House floor. But we are going to look at shutdown fallout, what history tells us in today's options jive at 8 o'clock. And then we got Let Me Explain. Oh, been a minute since I said that with Mr. Chris Vecchio. What are you talking about with Chris today? He's back.
Ooh,
Back.
I don't know. I don't know what he's got in store for us.
He's going to explain why he's been gone for a month.
Yeah,
What
He's been
gonna
gone
do.
for like 3 months.
yeah.
Okay. Well,
8 weeks to be exact.
Took 2 days off when Nick was born. 2 days off. Thursday and Friday. Back on the road on Monday.
what do you want?
That's not true.
It's 100% true.
Well, you were back to the pit.
no.
No, you're talking about Vinny when Vinny was.
I'm sorry, when Vinny was born. Yes, when you were born, you're right. I was back to the pits.
Well, that was awkward. So at the 9 o'clock market measures.
Unbelievable.
When one of you was born.
Decoding theta vega trade-offs. That's market measures. I'll say that again. Decoding theta vega trade-offs. What does that mean?
Talk
You'll just have
about
to tune in and find out.
yes. It's centered around implied volatility and where your risk is and how much data you're getting on those strangles when you're looking at SPY. So we're looking at the level of theta relative to implied volatility in SPY.
Okay.
Theta and Vega.
And then live from the trade desk, we got Quentin and G Money in the house. Quentin counting down the top trending tickers over at Tasty Trade, and Glenn giving some insight to the Tasty FX side of things. So that is very interesting. And then because it's Tuesday, we have Liz and Jenny live from the floor of the SIBO. It's always electric when the ladies are live from the floor. So tune in for that, Liz and Jenny at 10 a.m.
And bonds are all electronic today.
Yes.
Open outcry.
Yes.
Is, not there. Those guys get the day off.
Yes. But hey, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story.
today's
Breaking
headlines.
news. Across the wire. Our leading story. Top story. Just in.
In today's headlines,
Breaking news.
All right, everybody. Today is a terrific Tuesday. It is November the 11th. This is the part of the show we like to call this Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. I would like to extend a very happy Veterans Day to all the veterans out there, which includes both of my parents, who are Air Force veterans. So thank you for your service. But I always ask my dad, I'm like, Dad, you get so much free stuff today. He's like, that's not why I did it. And I'm like, yeah, but Applebee's. He's like, He's like, that's great.
Ooh,
He's
what does
like,
Applebee's do?
I mean, there's so much free stuff for veterans. I would have my day stacked, bell to bell, getting free stuff.
Well, if you're not from the bank, the banks are closed today. So you
know.
can't get a free toaster.
Yeah, but you get free stuff if you're a veteran today. But anyway, thank you for your service. All jokes aside,
It's going to be very crowded at the veteran parking spots at Home Depot today. So get there early.
Any earnings for today?
No, it's a non-event
Okay.
day. I mean, there are a few, but they're all fringe players.
OKLO.
Today?
Yes, after the close.
Oh, I did not know that. Thank you for the tip. You're right. OKLO. Thank you very much.
This morning at MBIS. And
Yeah, that was this morning.
Yeah.
Retail investors are dialing back their risky bets after the longest bullish streak in recent years, JP Morgan analyst wrote in a note, marking a shift in sentiment that could zap momentum in high-flying U.S. stocks. There's a drop in bullish option bets with call volume slipping compared to puts. Is the retail rally running out of steam?
I don't know, but I don't know what floor that is.
I don't know. I just find pictures late at night.
This one is AI generated, that's why.
No,
I'm
it's a real
just
photo.
kidding.
It's a real photo.
No, I just don't know what floor is. Must be in New York somewhere, I would imagine.
I don't think this is. I think this,
It's a nothing burger?
it's a nothing burger.
I'm
Well, what are you
surprised. 'Cause
seeing in liquidity and in trading and in options volume and things like that?
Yesterday was a little bit slower, believe it or not, on
Okay.
volume than past days. I
Yeah,
think.
but it ended like on normal numbers.
Yeah,
Like, we had, like,
it wasn't
one-
over, wasn't under.
Yeah, it was just a normal session. We had like 1.5 million spoos traded.
I'm talking about option
like-
volume was 62 million contracts, about 13% below recent averages.
Yeah, all right.
All right.
Sources.
All right.
I mean, puts leading calls 3-2. Nothing. Nothing.
That's good. It's a good headline though, because if
It is a good headline.
If retail's getting out now, they're getting out at what is the top currently.
I mean, after a huge move in the market yesterday, I'm surprised they didn't say we were going to like 10,000 or something like that. Usually they like to jump on to the.
Well, I will say it is interesting that
They must need to buy something.
one
Yes.
in 4 ETFs now is a leveraged ETF.
Hmm.
So I was surprised by that, and I was like, oh, okay.
Low volume in those, even stock
Sure,
volume
sure.
in there. Yeah.
There's an ETF for everything now.
There
Yes.
sure is.
Yes.
Sad news, Warren Buffett's no longer going to write the annual letter, nor will he speak at Berkshire Hathaway shareholder meeting. In a letter to shareholders published yesterday, the outgoing CEO announced that he would no longer write the letter or speak at the company's annual meeting. He says he's got other things to do. He's got to figure out ways to give away
Yeah, like
all of
trying
his
to
money.
breathe. He's 95 years old.
Yeah, and he's got to give away
know.
billions of dollars. He's like, I got to get on this. He's like, I don't have time for y'all.
I mean, I don't blame him.
It's the end of an
Probably
era.
10 years ago. Yeah, I kept him young. It's good. I mean,
Yeah.
But I mean, it's nice to have a different perspective in there than Warren Buffett at 95 years old.
Sure, right. There's a new changing of the guard. But my question to you, though, is who is that figure, though? Like, for our
That
generation.
person will emerge. I mean, somebody always comes to and picks up the flag and runs point.
It's not going to be like a FinTok TikToker, is it? I was like,
Gotta hope not.
but I'm being sincere.
Find out they had an OnlyFans account at one time.
I don't know, but I'm being
not.
sincere.
You dig
like,
that up,
Right.
Yeah, afterwards, like they become famous, and it's like,
There's seed money from a feet account or something like that.
Like,
Gotta
good or
hope.
bad, we're seeing a shift in politics to like younger, more dynamic
Yeah.
people. But I'm like, who is
Yeah.
that figure in finance?
Don't know. They're gonna emerge.
yeah.
Yeah.
That's the $64,000 question.
I don't
Or in
know.
this economy, $64 million economy.
I just thought it was interesting. Hey, what are your thoughts on this? Saw inklings of this on Twitter over the weekend, but then I guess it's gonna maybe be a thing. Move over 30-year mortgage. The Trump administration is working on a 50-year mortgage option to break up the housing market gridlock. Thanks to President Trump, we are indeed working on a 50-year mortgage, a complete game changer, said Federal Housing Finance Agency Director Bill Pulte, yes, of Pulte Homes. But here's some breakdown of the math. At 3% of $500,000 house, you're going to pay $2,100 a month, and then total interest payments $257,000. But at 50 years, so you, at a current rate of maybe 7%, you're paying $3,000 a month, but then you pay $1 million in interest payments to the bank. What are we doing?
All right, this is kind of a BS thing here too. I mean,
What's a BS thing? This is the numbers.
I have very little to say on the 50-year mortgage other than you don't have to sign up for one. Like you can get a 15-year mortgage or a variable rate mortgage or a 30-year mortgage, which is a traditional one, or you can go out to 50-year.
Yeah.
And looking at 7% versus 3% is.
I mean, it says.
I mean, I
more
know
about-
that's what it is today.
Right,
but you
and that's
can't-
what-
Why don't you go back and look at 1985 and go 17% interest rate?
Yeah, because some people still have, like I have a 3% mortgage from 2021. So that's like,
Okay.
and then so I'm just saying, like that's those numbers exist because
I think it
these
says
people
more
exist.
about like the actual prices themselves. It's
You
being
don't
completely-
have to get a 50-year mortgage. That's what I have to
Sure.
say about it.
But
Yeah.
why should it even be an option?
Well, why not? You should have a 27-year, 29-year. You should have a 14-year,
It's gonna be- and
16-year.
and
You
it's-
should have all of them. I mean,
It's not going to be the same rate. It's going to be a higher rate because there's too much risk that far out on the curve. So unless it's subsidized by like the government, it's not going to be the same rate for a 30-year versus a 50-year.
Sure.
You
I mean,
would
they're-
expect
they're-
there to
but
be
they're
a
small in comparison to each other. Like 15 versus 30 is not even that big of a jump between the two. I mean, I imagine this will be a small incremental jump, half a percentage point or something like. I would imagine. I don't know. But my point is, you don't have to do it. You can get a 30-year. It's not like they're doing away with
Well,
them.
yeah, if you could actually afford the house, that's the problem.
That's on you. I mean, that's on.
Yeah, yeah,
that's, I
that's
mean,
true.
Until it like takes
You know,
down.
not
Build more
everybody, not
houses.
everybody gets $500,000 houses. You didn't. I grew up in
No,
the
but no,
basement
but
of
it's just
somebody
the
else's
average
house.
rate.
My family never owned a house. You go out, listen.
Okay.
Like I told you, I'm gonna tell you again.
Open the door.
What am I
It's
leaving
all
you?
there for
Open
you.
the door. I'm leaving you the whole world. You go out there and you make your bones and you do your thing. I'm leaving you everything. Look at this place. It's amazing.
This is
True story.
This is Tony from 30 years ago. Meanwhile, Vinny is running around with the credit card.
He needs
getting
help. He
Chipotle.
needs help.
Oh yeah.
We need help.
He needs help.
You
yeah.
were better than
See,
him.
You know,
Why
needs
do
help.
I feel like a couple's therapist?
it's amazing. I feel him. I mean, I think the real problem is we need to build houses and we need to make it easier to build houses and build homes in general and get, cut the red tape away from buildings so that you can get cheaper places anywhere.
You can make houses out of used shipping containers for
But
you. It'd
you're
be very cheap.
already starting to kind of see these cracks, like in the car loan market. Like people have the most outrageous, like people are getting conned into,
They're not
crazy-
conned.
That's why I
I'm
bought
just
him a
saying, no,
20-year-old car for his first car when I was teaching
I'm just
him
saying there's
Yeah.
that everything is available if you're willing to do something about it.
Okay. I just worry about predatory practices taking advantage
For
of
sure.
people.
That's what he's saying.
Which
Of
then-
you got to be
which then
smart.
puts more
That's right.
responsibility
And I agree with
Exactly what I'm
that.
saying.
on the
I agree with
hook,
that.
like down the line. Like we're all on the hook for this if this goes, tits up.
You're all college educated. You guys should be able to see the obvious. Okay?
Hey,
It
I'm gonna
wasn't.
keep it moving here. Electric bills are shooting up more than 7% this winter. We're in a period of rapidly rising electric prices, thanks OpenAI. But the costs of home energy is projected to rise 7.6% this winter compared to last year. That's according to the National Energy Assistance Directors Association.
I'm going back to coal.
What is your favorite way to play like energy, utilities, or
My mom had
whatever?
coal. We had a coal man would come, shovel it in there. I'm going back to coal.
You gonna start singing Loretta Lynn? You're a coal miner's daughter. Like, what are we doing? We've lost the plot. Utility, energy. What can we do? What are you gonna do in Oklo? Talk about that.
I have some short delta there.
Okay.
A little calendar spread on the downside.
They
I
don't
think
make any
this is
money.
They don't, but the stock is,
Stock's down $3 right now.
$16 billion company.
Sure.
Yeah, I have like the 80 strike put calendar. I think this is on a fast market trade as like a cheap way to play the downside, and
Okay.
I like it. So
Now, you guys are
Yeah.
ordering Uber Eats and you're worried about a mortgage payment. I don't even want to get started here. Never mind.
Are you having a boomer meltdown?
yes, this is a boomer mouth.
I had a boomer moment yesterday.
I didn't say moment. I said meltdown.
Somebody sent me pictures and it was password protected. It was password protected. I had to put in my own email address and I kept going back and forth. And I go, no, it's password protected. I need somebody's email. And they go, yeah, just use your own. I go, I don't have one yet. Then I finally realized what they were saying. I was like, oh, boomer moment.
Or that was a phishing scam, and now they have your credentials.
Oh, he's done that.
He's like, I had to keep typing in
You
my
don't remember
password
when
and my
he-
social security to see this photo.
No, never give out your password.
You don't remember when he was on the show and you clicked a link.
Oh, and the
froze.
wee.
Yeah, and it froze your entire computer.
Yeah.
Cute.
Adorable. Hey,
I worry about that.
Tyson Foods on Monday forecasted annual revenue above analyst estimates, betting on demand for chicken products, like I said, to offset weakness in its beef business, sending shares up as much as 5.7% in early trading. Consumers, especially in lower income households, are increasingly cooking at home amid persistent inflation, and they are reaching for that chicken. Tastes like chicken. TSN, Tyson.
Something I haven't traded in eons, but Tyson.
I also buy the Amish chicken.
Yeah, he's buying Amish chicken and what kind of butter?
Amish butter.
And Amish butter.
It's actually pretty cheap. Like it's like cheaper than like an organic.
Cheaper than organic, but not cheaper than Land O'Lakes.
Yeah, I mean, if you want to put the
Hey, you want to pay the
stuff
mortgage
that-
or you want the butter?
I have the freaking mortgage.
50,
I'm not here for a 50-year mortgage.
53 and 90.
Oh,
I'd be ranking 20.
You know,
All right. Hey, keeping it moving. Bank of England has softened its stablecoin stance with new proposals. The Bank of England yesterday proposed that issuers of widely used stablecoins be allowed to invest up to 60% of the assets backing them in government debt as part of a new weft of rules that suggest a softening in the Bank of England's approach to the sector. Cheerio.
2 years too late, something like
Yeah.
that. What are they? I don't know. It's everything. Everything over there is a little goofy.
Well, I have more crypto stories. What is the pounds doing? Let's talk currencies before we talk crypto.
We had a simultaneous.
Make them say,
I have been trading, so I'm long the pound. I'm short the euro.
Okay.
They're all pretty much unchanged. A little bit of
Today.
a mixed bag of tricks.
Yeah.
I mean, the euro's up fairly good compared to the pound
Yeah.
and the yen, which the yen's up too, but it's up a skosh.
Dollar has
This is
been
Jim Knight,
strong.
from California.
Okay. Hey, here's my big digital asset news. Ethereum and Solana ETFs have gotten the green light for staking via the U.S. Treasury. The IRS and Treasury said trusts can now generate staking rewards for crypto ETF investors without fear of tax or regulatory reprisals. Huge news and huge shift, giving regulatory clarity to staking assets like Ethereum and Solana, which eases institutional participation.
It's good.
Good news. All good news. But Bitcoin's down around 1700. Ethereum's down 13 cents. Bitcoin's down around 1.5%. Ethereum basically unchanged.
Well, crypto treasury companies are pivoting to fringe tokens, which is stoking volatility fears as companies focus on stockpiling Bitcoin and other cryptocurrencies. They're coming under pressure amid market saturation and souring sentiment. New entrants are pushing into less popular tokens, making things more volatile and a little more wonky. What are your thoughts?
Interesting. I mean, I think the treasury companies we've gotten a little stretched
Sure.
there on some of those, but I mean, I think if there's, if people want it, then why not?
Sure.
Yeah.
I mean,
they want
like-
it.
Like
Why
a
not?
50-year mortgage. If
Yeah.
you
Yeah,
want
it-
fart coin, have fart coin.
Yeah.
Right.
Yeah.
But buyer beware.
Yeah, I think you should
You're
understand.
responsible for what
That's a
you
horrible
do.
thing.
And just in general, listen, people gravitate toward volatility, especially upside volatility.
Sure.
I mean, this is what markets are.
What is
People want this.
Coinbase doing this morning?
Ooh, good question.
Down like $5.
Oh,
pre-market.
no.
Point
I mean, it's
312
back
inch.
above. Yeah, it's like kind of mid-range here.
It's been oscillating around. I mean, I guess you want to go with a wide range, 450 to 300 or so. It's 320 right now, but really over the last month or two, it's been around 375 to 275. It's hanging out at 315 or so, 312.
Earnings from last night. CoreWeave's revenue in the third quarter exceeded analyst estimates, but the company's guidance for the full year came in below consensus. The company said that they brought in revenue of $1.36 billion versus $1.29 expected. Revenue for the quarter soared 134% from year prior period.
CoreWeave, a little disappoint. $97 closed at 106 or so.
It's that guidance that always gets you.
Yeah, down around $9 or $10 on already a move lower from around 140-ish. So CoreWeave sub 100 here. Let's see what happens.
Inside move.
Inside the expected move, but to the downside, which is back near its lows that it saw in like September.
Sold the 80 puts, so I think we should be.
Should be all right.
It probably isn't going to move all that much. Maybe it depends on volatility, really.
Right.
I mean, we'll see what happens with volatility.
Yep.
I don't expect it. I think the upside volatility is where you'd see volatility.
Yeah,
Like this
right. Volatility will probably contract here. Obviously, after earnings, volatility typically contracts. Inside the expected move, it contracts. Your 80 puts are going to be fine.
Yeah.
Taiwan Semiconductor Manufacturing reported slowing growth in monthly revenue as concerns about the longevity of the AI boom continues to weigh on tech stocks. TSM saw revenue for October reach around 360.
Reach around?
What?
You said reached around. Sorry, go ahead.
Nope,
Yes.
nope, okay.
It's the second time we've gotten I haven't. Thank you, Beth, for the Omaha.
You need an Omaha button.
Yeah.
TSM. No, I've lost my train of thought. TSM.
92.5, down around $3, but still up at the high end of its. I missed TSM. I don't trade it that much. TSM markets can be a little bit wide at times, like 50, 60 cents wide even. Mm-hmm. TSM, tough one to trade.
They are the leading chip maker for AMD and Qualcomm, and they also manufacture Apple Silicon for iPhones and other devices.
They do them all. They're in NVIDIA too. I mean,
that's interesting. Yeah. Oxy topped quarterly profit estimates on higher output. Occidental Petroleum beat Wall Street expectations for Q3 profit as higher production helped the U.S. shale producer counter weak oil prices. Realized oil prices fell to $64.78 per barrel in the July-September period, but the company did benefit from their $12 billion acquisition of Crown Rock in August.
I've been around so long. I remember when Oxy was actually relevant to the market. Oxy, $42, up about 50 cents.
Every year you get that. Like Buffett bought more Oxy.
More Oxy. He was deep in that Oxy.
I think he's like 8%, 9% right now.
I don't know now
right?
that
I
he's
think
sold
something
out
like that.
of it.
Well, pays a 2.3 dividend. I mean,
Yeah, but the stock goes nowhere. It hasn't moved, and everybody's like, "All right, this is it."
As a matter of fact, a year ago it was $49. Now,
well, Occidental sold OxyChem to Berkshire Hathaway last month for $9.7 billion. So he just straight up owns it now.
Mm-hmm.
Daddy Buffett.
Yeah.
Amazing.
Yeah. And then because I guess they had to delay their earnings because of financial malfeasance. I don't know if that's not the right word. But Beyond Meat reported their earnings because they were supposed to, I guess, do it earlier. But their losses just continue to widen as demand shrinks. Is the meme stock run over? Shares of Beyond Meat fell around 9% in extended trading after the company warned of weaker sales in the current quarter. I guess no one wants Tofurkey. They don't make Tofurkey. That's a different brand. But BYND.
BYND, ever since that picture of the wilted sausage has been going lower and lower. It's 125 down a dime here. This is not the meme stock it once.
They only brought in $70 million in revenue. So
kind of forgot about that one. I got 200 shares.
Oh yeah, I remember. Somewhere around 3, right, or something.
Yeah,
like
like
that?
296.
Yeah. You actually bought it after it went up to around $8.
Well, no, we bought it and then sold. We scalped it for like $100, or
Right.
something, like $50 low.
nice.
But then got back in and kind of forgot about it because it wasn't moving anymore. And then now it's just kind of grinded.
I brought back some memories for Francis. I'm sorry, going back a story to Oxy, who's on the YouTube channel right now doing the chats in there. His very first trade on the floor was a call spread in Oxy. You always remember your first.
Wow.
Always remember your first. My first was in Superior Oil, SOC.
That's still around? I don't think so.
No, got bought out. if it doesn't get bought out, I never go to the OEX. And if I don't go to the OEX, I might not be here. I might have been languishing in the equities forever and having Beth's father belittle me for the rest of my life.
True story.
That's a true story.
See?
I don't know how to.
He's nice now.
That's the truth.
Intel said yesterday that its CEO, Lip Bhutan, would oversee the chipmaker's AI efforts because the firm's chief technology officer was like, hey, I'm leaving, and he's going to ChatGPT. Ooh, escandalo. So now the CEO has to also be in charge of Intel's AI efforts. We'll see how that goes. What does the stock say?
You know, Intel, I remember it's $25. I don't know, just about 2 months ago, it got all the way up to around almost 40, a little over 40. It's 38.5.
Got added to the government portfolio.
Yeah, that's right.
Oh,
That's the 30%.
We own that?
Yeah, we own that.
Got it.
Yeah, piece
Got
of
it.
Yeah,
Didn't
yeah.
know.
Yeah.
C3 AI, which has the best ticker because their ticker is literally AI, like they were on it before,
They were on it, for
anyway.
sure.
But the enterprise AI software provider, they're exploring a potential sale among other options after their founder, Thomas Siebel, recently stepped down as CEO over health concerns. The sales process is in its early stages, but other options are on the table, including raising funds from private investors. C3 AI.
They need to do something. $16. I mean, it's
Didn't participate in the AI wave here.
no, not at all. Started the year around 37. This is going to be a take under. Ivy rank is of 80. It has earnings December.
I mean, at $2 billion,
Yeah.
ChatGPT might as well just buy it out just to get the ticker.
Or Meta should,
That's right.
yeah.
That's right.
Seriously,
That'd be worth
I
it.
mean,
Well, that's a good idea.
it's got to be worth $2 billion, right?
Fake money anyway.
Yeah.
I mean, they've already committed to $1 trillion. What's $2
Yeah,
billion more?
$2 billion is nothing, and then you
Chump change.
I mean, this. I don't know how these guys got the AI ticker. Nobody thought of that. Come on, what happened?
There you go. All right, we'll see what happens. Apple is delaying its next version of the iPhone Air. According to my Taiwanese sources, Apple will not release the next version of the iPhone Air in the fall of 2026 as previously planned. Amid weak sales, they are shifting their production lines to focus more on the popular iPhone 17.
Apple's one of the few stocks up that we've talked about so far. It's went up around 50 cents, 69, let's say 69.
Nice.
69.70 or so. Been going sideways for the last week or so.
Look at these kids in there, 6'7".
6'7",
6.7. What does it mean, 6'7"?
It doesn't
I don't
mean
know.
anything.
I don't know.
It's brain rot. It doesn't mean
Yeah, it's
anything.
brain
Now
rot.
I'm going to go on a boomer meltdown.
Yeah, there you go.
Oh, I thought it had a meaning to it.
It literally means nothing, like skibbity toilet. It means
Like
nothing.
the rest that you kids do means nothing. Got it.
means
Got it.
nothing.
Got it.
Yeah.
All right.
Yeah.
All right.
What a time to be alive. Boeing received approval from the U.S. Aviation Regulatory Agency, FAA to you and me, to begin the third of 5 major phases of certification flight test for its 777 wide-body jet. So congratulations, 6'7".
6'7", 6'7".
6'7", 6'7".
When we did this, it meant something
Yeah, it meant
else. On the
something
floor,
else.
It meant Drexel Burnham, just to let you know.
Really?
Yeah.
Because their clerks had...
Yes.
Oh, okay.
That's exactly right. Frankie can confirm it.
And they say women don't have anything left to fight for.
That's right. That's right. Look how far you guys came. I mean, that's just the 80s and 90s.
We did it, baby.
You're winning.
Boeing.
On its arse a little bit, 194 and change. Looks like it's unchanged. Ivy rank is low, 8 in there. It doesn't have any. It's had earnings already. This might be some sort of Jan Deese, maybe like diagonal spread or something like that to the
I
upside.
taught
if you're
you
looking
so
for a little bit
well.
long delta.
Ooh, okay.
Yeah, maybe. Also for option trades
trades
today,
today.
every Tuesday and Thursday. That's right.
Hey.
By the way, Todd on the trade desk, his sister worked for Drexel Burnham. Yep.
I hope Todd punches you in the throat.
Oh, Todd. Todd, I'm
Yep.
sure.
Yep. She pioneered the hand signal for sure.
This is weird. I don't want to be here. Hey, today.
It's just the incestual nature of the trading industry has transcended generations because it's still
generational.
the same.
Yep.
Unbelievable.
Today is my day because it is
Why?
1111 because it's Singles Day. I'm gonna die alone, so I may as well spend some cash. It is the largest revenue driving event. It actually dwarfs Black Friday and Cyber Week sales. Last year, total sales for Singles Day were approximately. Do you want to guess?
Oof. Wouldn't know. Honestly,
Like globally, like yeah.
I wouldn't know.
Yeah.
I don't know how to put it.
Let's say Black Friday and Cyber Week sales are $38 billion.
And these
more
are
than
than
that?
that?
Yeah.
Really?
Singles Day. Yeah. You know how many single people there are who
Yep.
soothe themselves with purchases?
We used to call this sticks on the floor when the clock would do
11:11. Oh, sticks.
Yeah.
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 Well,
I don't
you want to
know,
guess?
45 billion?
What do you say?
I mean, that's a lot of billions.
That's a lot of
It's a
billions. A lot
random
of single
day.
people
One
out
day,
there.
and
This
it's
is-
one day. It's not a week.
That's a lot of
This
50-year
is
mortgages.
Walmart and Amazon are together, and they're like, what day should we make next?
It's really more. It did start in Asia. So
Are we gonna get
it's now,
Hallmark
like,
in on this?
global.
Yeah. Hallmark's been hitting us up all week about.
$203 billion.
No way.
dollars.
Sold.
Yeah, $203 billion.
No, they're not all single. There's some married couples in there claiming.
No, I bought some stuff for myself.
Yeah.
already.
Did you? What'd you got?
I got a new sweatsuit set from this brand Comfort. I was
Sweatsuit?
sweat like a
So like
hoodie and
for
pig.
like working out kind of sweatsuit or
no for
swimming?
like lounging
Oh, like a sweatsuit. Sorry,
Yeah,
I wasn't
like
thinking.
Am I not saying the word correct? Like
No, you are. I was thinking, yeah.
a tracksuit
Yeah.
Got it,
for
got it,
you
got it.
Sopranos, but it has a
For you Guidos over there.
Velour?
Velour.
No, not the-
Oh, man, you ain't anybody until you get a velour one.
Yeah.
Black,
Red.
red.
Yeah, you gotta go red,
Maybe
so
red
you
and
really
white stripe
stand
with a
out.
black
Yeah.
one or a black one with white and red stripes.
Yeah.
You got to do that.
No, I got myself a nice
Oh,
little.
you got to get a velour one. You haven't
Okay.
lived until you have a velour
You
one.
guys do not care. I'm gonna keep it moving. But what's something like Amazon doing? Speaking of like Amazon or Walmart or Target, let's look at some retailers because.
I've had a velour one. I had a Michael Jordan velour one. I won't
Ooh, look
lie.
at
Yeah.
you.
Velour was like sort of in my like teen years.
I had a juicy.
Yeah, 'cause-
I had a juicy.
Yeah, you wouldn't
Yeah.
remember because you were an
wasn't
absent
around.
father, so you weren't there.
I
But
was out partying.
Shots fired.
no, but that was
I
like
wasn't even up yet when you were going to school.
this was like Juicy was that was like
Yeah.
right when like Juicy popped
Yeah,
on
I
the
had a
scene.
juicy-
and so,
I had a
like,
juicy
Velour was-
sweatsuit.
Yeah, I was dating people who were wearing juicy.
Yeah,
That's
yeah,
right, I remember.
exactly.
Oh,
I remember
that. Man. Amazon.
247 and change down
Lord.
around $1.
What has
Yeah.
happened today?
Is it still a full moon?
It is not. It is
No, it's the
not.
Beaver Moon.
And Beaver
Not
Moon was
anymore.
beautiful.
Not anymore.
We had the Beaver Moon.
Hey,
You took
finally
advantage.
Last
today-
whole week.
Finally today in sports, it's official. Gronk signed a one-day contract, and he is officially retiring as a Patriot. I don't even know Gronk's first name. I just know him as Gronk.
He should come back and play
What is
one
his
game with
first
Drake.
name?
Rob.
Oh, I didn't know
Gronkowski.
that.
Yeah.
Okay, I didn't know that.
Yeah.
So, but it's nice. It's a nice little piece of history. I don't know
Come
if
on,
he's
that
the
should be an
greatest tight
asterisk
end
next to his
ever.
name now.
But he is retiring. He's actually weirdly super financial savvy. And it's just like really, it's a nice. I don't know.
Why is that so weird to you?
Because he's very funny in other places of his
Why?
life.
Because he's a
very-
football player? He's
Yeah.
not dumb. A football player. Is
you
he
ever
dumb?
heard him?
Is he
Is that
dumb?
what
I
you're
did not
saying?
say. I did not say that.
Sounded
Why are
like you were
putting
saying, alluding
words-
to that. Is that
Why
what
are
you're
you
saying?
putting? I want to leave.
No.
You're putting
We
words-
both played football. Are we dumb?
No.
No,
Answer that.
it is good to see people do something with their money.
Right. Yeah. And
there's
he,
a
like,
lot
be
of
very
examples.
Responsible. Right.
Of people that
He
don't.
probably got, and I hope that's the case. I mean, he probably got good information from
Right. No,
somebody
he only.
early
I
on
think
in
he
his
only
life,
like
which is-
lived off of
yeah, the way
his
you
salary
do it.
and then all the endorsements, bonuses, everything else.
Yeah,
He like
yeah.
invested and was like really smart
Yeah.
about that.
Yeah.
So congratulations to Gronk. Gronk smash.
Good job out of you for a football player. Is that what you meant to say?
Yeah.
That is not. I don't know why you want to be a little shit stirrer today, but I will check you. Finally, for my viral video of today, speaking of football, I saw this and I just immediately laughed. Obviously, when your child plays football at that level, there are variances in sizes, right? Like when you get to college, basically everyone's, the same size. But when your kids are, growing up, kids are different sizes. And this kid...
They come in all shapes and sizes, yes.
Yeah. No, but
I'm just teasing.
Here's my video. I'm leaving. Okay, bye.
But then he helps him up.
Yeah. Like I said, good sport.
That's nice.
At the end of the play. Yeah.
Everybody had that one kid.
Of course.
There was always like one or two of them on each team where they were just enormous. The real question was whether they could actually move.
This is true.
So a lot of times you had the big guy that was just like a wall, and as long as you moved a little bit,
he couldn't go side to
he couldn't
side.
do anything. So but
I am reevaluating my life choices. But what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live with Confirm and Send next. You know you loved it. Second 90 seconds.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Mickey, we are back, son. You know what that means. Time for a little bit more Tasty Live with Confirm and Send on Tuesday, November 11th. But before we do, let's take a quick look at the market. Even the S&Ps down 17. They were pretty much unchanged to up small all night long, down small all night long. Took a little bit of a turn south earlier this morning. They're trading near their lows, about 4 handles off of the lows, down 17.5. NASDAQ down 125. NASDAQ and Russell were your two leaders in the clubhouse yesterday. They're two to the downside right now. With the Russell down 540, also down almost 0.25%, like the E-mini S&Ps. And then you've got the Dow, which is up small, $21. It was the weakest of the group yesterday. Volatility up 14 cents, 18.55, really going nowhere at this time, down near the low end of its range. Yesterday, you saw volatility just get sucked out of the market on that straight up move on the E-mini S&Ps, up over triple digits on the E-mini S&Ps yesterday. Bonds up 15 ticks, 117 and change. They got down to 116.24. They got to that 16 handle. And
missed it again.
Yeah, missed it again. True that. Notes up 8.5 or so. Bitcoin, after having a decent day yesterday, traded almost 108 overnight last night. Back to 104.7, down around 1,600 on the futures. Bitcoin down more than Ethereum. Ethereum down 1%, Bitcoin down 1.5%, Ethereum down $35. Oil up $63. That's 63 cents. That's a 1% move to 60.76. Gold up again. Big day in gold yesterday, right out of the chute. Continues with about a 0.75% move, 5/8 to 0.75% move, with gold up $28.5. Silver up 67, back over 50, almost to 51. That's a 1.33% move on the upside.
It's up like 6-7%.
Yeah, silver's been just on a tear. Corn, wheat, and soybeans all down small, hanging out and oscillating over the area where I said it was over in soybeans. Oakley for earnings, that's all I got right now. Pretty much an unchanged mix to slightly lower market.
Not a shock. We've had the Friday and Monday, I think, has combined about a 250-point range.
Yes.
On the E-minis.
All to the upside. Well, no, I mean
down
100
from the lows to high.
Yeah.
I mean, on Friday, the low in the E-minis.
Well, from Friday afternoon to Monday close, you had basically a straight up move.
200-point move. 66.55 was a low on Friday. Yesterday, the high was 66.65. So that's
without a downside from like around
210.
noon, 1 o'clock Central on Friday, all the way into and through Monday.
Yeah.
Right.
I mean,
you sold into them trying to get a little bit of a dip. You never got one.
Yeah, I mean,
you missed the morning.
Yeah, there's certain people that do that. Like, I don't know, they like the pain, I think, but
you're used to it.
They're used to it. One day they'll be right, but most of us just kind of ride the wave.
Ride the wave.
Tuesday, November 11th. You want to do some?
My buddy Mavis used to say in the pit every day. I'm reminiscing about yesteryear. I must be burning out like a star or something like that. Mavis used to say, "Bat, just ride the wave, Bat.
Beautiful
just
star.
Ride the wave."
Sound like what's that movie with Matthew McConaughey? No, that's Wolf of Wall Street.
Dazed and Confused.
Dazed and Confused.
Oh, I'm not into that stuff.
Best
you know
movie
me.
ever.
It is great.
Yeah, I don't watch that.
Back on. You know, it's another great movie I watched the other day.
What?
Almost Famous.
Almost Famous. What is
good
that?
one?
Classic.
It's a classic. That's
Kate Hudson.
Yes.
Who's in it?
It's like follows the rock band where the kid's the reporter and
I watched it. It's 25 years ago now.
No, I know it's a classic. That's what I'm saying.
Yeah, sure.
Yeah,
Kate
it was
Hudson.
on like HBO or something the other day.
Sure.
It's great.
Now I'm watching it. Yeah.
Yeah.
Very good. Yes, very good movie.
Feel good movie, you know.
Based on a true story? I don't remember.
I don't know.
I don't remember. Let's see.
I don't think so.
I don't know.
Yeah, it's kind of out there, but
yeah. Very nice.
It is. It's about Cameron Crowe.
What was it about?
Cameron Crowe, the director.
Oh, okay. Well, there we go.
He's a journalist for Rolling Stone.
All right.
Look at Beth. Beth knows. Got knowledge.
Authentic, heartwarming, coming-of-age story.
It is.
Powerful soundtrack.
Yes.
It's based on a true story. Here we go. Yes, Almost Famous is based on a true story. I knew it was drawing heavily.
What did you doubt?
Cameron Crowe. Bet. Slow clap for you. Slow clap for you.
No, it's all good. You can doubt me.
Yeah. It's very good.
Yes.
That's all I got. Okay. Confirm and send.
Let's
Tuesday,
do it.
November 11th.
Yes. Would you ever turn an undefined risk trade into a defined risk trade by buying wings? Conversely, would you ever take a defined risk wing off and turn the trade into an undefined position?
I mean, I hate to say never, but it's not something I typically look to do. You have to remember, I'm usually selling premium. So if I sold the wings or I sold a strangle or a straddle and it worked out for me, I'm probably going to take it off. I'm not going to turn it into a short iron condor or a long iron condor, or if I just sold naked calls and we went lower, I'm not going to buy a call and make it a call spread. I mean, can you? Definitely. A defensive move, be a tough thing to do. Offensive move, probably be a lot easier to do, but not something I do.
It's
if you're a
just
premium buyer, it might be something you want to do. Like if you bought a call and the stock went higher, especially if you're trading shorter dated.
And then you sell a call against it.
And you sell a call against it, you make a vertical
But that's
spread.
different than starting with defined risk and going to a naked
100%.
position.
That's why I say I don't want to say I never do it.
Yeah.
It's something I rarely do, if ever.
I would say if these are like calendarized trades where you have in that case where you have or just one directional trades where you have some variability to the position, I say, okay, fine, you can have some flexibility there. But if you're putting on an iron condor, a $5 wide iron condor or a $10 wide iron condor, that's it. There isn't, you can't massage that position.
Yeah, not much, no.
It is what it is. And the same thing with a strangle, like, buying the wings afterwards, you're doing it you're probably doing it in the hole.
Yes.
Like you're not doing this as a positive adjustment. You're doing this because you're scared of the move and you got a loss and this is easier said than done.
It definitely.
A lot of people say, I'll sell the put, and then when the stock goes up, I'll buy the put and define the risk. It's like, okay, well, what happens if
you're that good? I have other things that you can do to make a lot more money.
Yeah, just buy the call.
Yeah, right. Or just buy the future. Really
whatever.
Go for it. Sure.
Yes. Next one, please. Is there an easy way of converting what a one tick change in ZB converts to with respect to the yield? That's a good question.
I've always struggled with this. I mean, if I've had other traders, and maybe if you go in and Google search it, they'll talk about this 3-tick rule where 3 ticks equals 0.01 on an interest rate. For me, it's very hard to quantify how many ticks you need for a rate change. I just like watching it the week before they're about to announce it. I go to the Fed Watch tool. I think it's a lot easier way of looking at a Fed Watch tool. If it's over 65%, it's been 100% accurate on the direction, either a no rate cut or a rate cut or a rate hike. It's been basically 100% play. I don't know. For me, it's a hard thing to do, but that is a back of the envelope 3-tick rule. I don't think it's perfect.
Cool.
Okay.
25 basis points is 1 point.
That's correct. 25 basis points is 1 point. 3 ticks is 0.01. So you need a lot of ticks you need basically a full point to get a quarter of a basis point move. Just as a back of the envelope look at it. Very good.
Very well.
Next one, please. I notice a lot of times when I put a new trade on, it immediately goes against me. This sounds like you're trading, son. You should be good at this. It's not a lot, but it makes me feel like I did something incorrect. Am I doing something wrong?
Oh my God, the shade that is this.
It's all in good fun.
No, I mean...
You called me an absentee father. It's the least I could do. You say that some of the trades you put on might not be profitable the moment you put them on. I mean, I know your football bets are, but I mean, maybe your trading takes a minute or two before you become 100% profitable. Go ahead.
Listen, most trades are going to have a very high probability of touch, which will tell you that there's a very high likelihood that you're going to be losing on the trade at some point. I mean, that's just probabilities. If you're trading, a 30 delta option, it's a 60% probability that you get touched on that option at some point within the expiration. So, yes, it might not be immediately. The immediate change might just be widening of bid-ask spreads or the spread ticking a penny against you, which isn't a shock.
Is against you.
Yeah, if you're selling a put and the stock's going down and you get filled and the stock goes down one more tick, you're marked at a losing trade by a penny.
Sure.
But I think the point is that you should expect the vast majority of trades to be losing trades at some point.
If not all of them.
If not all of them.
Yeah, I mean, majority. For that 1 second, that 1 penny, I mean, think about it. Markets are 1 penny wide, or basically pick 'em. So for you to get filled, you need the stock to go in the opposite direction you needed. Now your bid becomes the offer or the mid price at best. And then the stock moves your way and it's a profitable trade and we all live happily ever after. But usually what happens, the stock goes in the direction you don't want it to go in for another tick, 2 or 3 before it comes back. And that trade's going to be a loser. Listen, market, you were always basically a small loser on every trade you made, whether it was electronic or not. You just didn't know it at the time. Like, the markets are so tight and so efficient and so fast. And
for
so
you to get
big
filled, you have to be losing.
That's correct. That's correct. So I wouldn't.
Because nobody's filling you a winning trade.
That's correct.
At entry.
That's correct. That is 100% correct. You hit it. Bing, 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 bing. Next one, please.
What percentage of my account should be in undefined risk versus defined risk trades?
I don't know. You tell me. No, I'm just kidding. I'm just kidding. Hey, listen, I mean, this is personal preference. This also comes down to your account size. I mean, I don't want to use more than 3%, and that's, listen, on a defined risk trade, 3% is going to be a very large trade no matter what size, or a very large trade compared to your account size on anything. You got to take this with a little bit of a grain of salt. I mean, I do a lot of undefined risk positions. I have over a $25,000 account into portfolio margin size account. So for me, it's a lot easier to do a lot of undefined risk trades. You have an account that's under 25,000, or maybe you're just not comfortable with undefined risk. I would challenge you, as we've always said, to go as wide as possible. Listen, I'm talking about selling premium, because that's what we do. You'll watch Nick do a lot of diagonal spreads to get delta. He's relatively tight, using a relatively small amount of money, $300, $400, $500, $700 on a diagonal spread that might be $10, $15, $20 wide. So it all depends on your account size. I think you should have a good mix of both, but I really want to answer this question as saying that if you're putting on the top of your page and you're putting on all your positions, you're starting out your portfolio, we're in that 45-day time range, you should have around over 65% pop on all of your trades. Then I think you're in the right spot, as opposed to looking what's undefined, what's defined risk. Have a 65% pop on entry. I think you put yourself in a good place.
Fantastic. Well said.
I know, I'm pretty efficient at this. We're going to take a quick 90-second break and come back. We got a good option jive for you next. We're back in 90 seconds. Tasty Live.
The market doesn't.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's option jive. Nicky, it is an option jive. Even the S&P is hanging steady down 15. But all that means nothing when you've got an option jive. And we're talking about the shutdown, fallout, what can happen. And
looking at past shutdowns as well.
Are not indicative of future results, but we will take a look.
Of course not. Yes. Let's do it.
Let's go.
Shutdown fallout. What history tells us? What do you think it tells us? I think the last one was 2019, if I'm looking at these correctly. Yes, 2019.
Usually it's sideways with a little bit of an upward, I think, from my memory, sideways to a little bit of an upward bias. We actually close higher than when the shutdown first is announced. And then there's a little bit of an upward bias from there. That's my inkling.
What do you think about volatility?
What do I think about volatility? Great question. I would say, I think the obvious thing to say is that volatility contracts after this, but I think it's going to be pretty much of a non-event. That's going to be my guess. Contraction to non-event.
But a little bit higher at the start.
A little bit higher at the start. I'm just playing the odds of the uncertainty. And then it gets, a little bit over-exaggerated.
It sounds intuitive that you'd have higher volatility when the
government's shutting down. Which probably means I'm 100% wrong, but we'll find out.
Let's take a look. So a couple slides here. All right, so the longest government shutdown in U.S. history has finally ended, but
has it ended? Not yet.
We're a little bit quick to the trigger here. It hasn't really ended.
Here.
Initial estimates suggest billions in lost output and delayed spending, but history can give us a clear sense of the longer-term impact. Let's check in with the results from past shutdowns to try and anticipate where we may go from here. We must be the only ones looking at government shutdown post coming back online.
Mm-hmm.
So during the initial ACA dispute, so we're looking at just like past government shutdowns. This one is in 2013. The market began to rebound from the shutdown before it even ended. So here we're looking at like the S&P 500 along with a bunch of sectors that are kind of affected mostly by the government shutdown. NVIDIA doesn't really have the shutdown doesn't really affect NVIDIA. It does affect airlines, as we've seen this weekend. Healthcare is obviously in there, defense spending, consumer staples, like all of those are kind of part of the shutdown. So looking at those stocks here, you can see, there was a little bit of a bid going into the end of the shutdown here in 2013, but a little bit of volatility along the way. And the axis here is just a percentage. The nominal price is just percentage. So 1.05 is a 5% upside move. You can see we had a big move afterwards.
And I never would have thought of like airlines, being like one of the larger movers in the market. I didn't. That was a good one there.
Strangle in UAL.
Yeah, I don't know about that, but maybe some sort of directional diagonal in there. Yeah, maybe.
They're pumping some juice into the call side there. In anticipation of the shutdown.
Yep.
Next slide here. So the border funding, which was one of the more recent ones as Trump won, the border funding dispute resulted in only very short-term drop for most equities, airlines being the notable exception here. So you can see, markets as a whole kind of had a little bit of a blip of volatility early on, and then it was off to the races. And I think with anything, looking back, you have to look at the market the whole picture of the market, this was a very bullish market. You remember?
Yeah, I think that's what it comes down to too. I mean, like, if the market was falling out of bed and you have a government shutdown, I would think it would be a continuation move that way, and this would not be like what you're seeing here on the screen, or maybe what you might get this time because we're at highs.
Yeah. But it definitely tells you that through most of them, airlines have kind of been the most volatile.
Yep.
If you're looking for like a volatility play into a shutdown, if there's another shutdown in the future, which I think here we're kind of mentioning in January, there's potential for another one. That's where you tend to see the most volatility is the airline stocks, because they're really, that's the, the big consumer facing aspect of the shutdown is those.
And they all, I just looked at AAL, UAL, and Love. I didn't look at Delta Airlines. I should. They're all at or above their their price from when the shutdown started. So far it's holding into this time too.
Next one, please. So we're looking at this most recent shutdown, which has gotten quite long. Is it the longest? I think it's the longest now.
The longest one, yeah.
So despite the length of the most recent shutdown, the market stayed in the tighter range percentage-wise than previously. So you can see here, we've gone basically nowhere. We've had wide ranges, pretty decent volatility in this time frame from October, but we've gone basically nowhere. So it's been very choppy. Again, you can see airlines are kind of the most volatile of the group here in terms of just like raw range of price action.
Very good.
Next one here. So while prices may have had erratic responses to the government closing, volatility has been more predictable. So you can see we had pop and volatility kind of throughout the start of 2013, and then it kind of came in, and then after the government shut down and we reopen, volatility kind of gets crushed.
Normalizes, stabilizes.
Not a shock. Yeah, volatility when the government shuts down. When the government comes back, it's status quo again.
Now you couple that with the price movement and some of these things, and it might not have been a beneficial play here. But if you're looking at, again, just selling one side, puts get inflated. I mean, this is a pretty interesting and predictable, sometimes so predictable that you wouldn't play. Like I said,
this one's 2 weeks, though.
Exactly.
So it's you're not.
That's a good amount of time when you're only in a lot of premium selling strategies that work 2 to 3 weeks. So you might get an acceleration where they work in under 2 weeks. So definitely an advantage there. It's just hard to take advantage of something that happens, I guess, more frequently now than it has in the past.
Looking at 2019, so this one was spikes just before and at the beginning of the shutdown, the returning back to more normal levels over time. I mean, this one you could see you have kind of the initial spike in volatility. And as you get closer and through the shutdown, volatility mean reverts back to lows. It's not a shock. This happens in other cases outside of government shutdowns as well. This is kind of what you expect to see from short period. This is a look of 3 months here, which includes some before and after the spike. Anytime you have a spike in volatility, this is typically what you see. This is what the chart looks like. You have a spike in volatility. It tends to mean revert back to kind of like a middle range, and then it continues to cluster and grind lower over time as that kind of fear subsides. I mean, this is just a textbook example of spikes in volatility. This is what it looks like.
Very good.
The next one is the most recent period. So obviously we had a spike in volatility, and we had a spike in volatility, comes down. We've had another spike in volatility more recently, and it's it started to come down as well. And this kind of projecting the end of the shutdown. I know that on Polymarket, it's about an 88% probability that it ends at some point from Wednesday to Friday. So we're kind of front running that. We're the first ones to say the government shutdown ends.
That's right.
We're calling it.
We're calling it. We called it.
Because
done.
Just like we wanted to have the election show to call the president first, we're calling the shutdown first today.
Called it first. That's right.
Yeah, we called it first.
Let nobody take that title on terrestrial.
That's right. I want that. Put that in Wikipedia.
That's it. We own it.
We own it. Since 1980, when Congress fails to pass a budget, the federal government stops making payments. This typically exerts bearish short-term effects, though with some industries more sensitive than others. We noted airlines have been kind of the most volatile of the group. Despite the length of the recent shutdown, equities actually remained more constrained throughout their previous examples. So they've been in a relatively tight range, a little bit more volatility in the airlines there. Volatility, on the other hand, has always shown significant action in response to government shutdowns, giving opportunities for option traders. So maybe in the next occurrence of a government shutdown, you think about this a little bit, maybe there's a little bit of volatility into that event.
What about for right now? How do you take some of this information to change anything that you're doing?
No.
Keeps it all the same. Right?
I mean, I think it tells you that, maybe there's some juice to squeeze in a UAL, but volatility has come in a little bit. You're seeing some juice squeeze there, juice put into the upside call volatility. But I think this is just kind of a good to know. I don't know if I can really trade on this. I guess if you get to a point where, we're talking about government shutdowns a little bit more, maybe you take a little bit of long volatility into that as kind of a trade. But, markets are dynamic. It's not a given here that you have a pop in volatility just because we looked at 3 occurrences.
Very good. Even the S&Ps down 1175, NASDAQ down 94. They've all rallied a little bit. You can see here the NASDAQ's about 50 handles off its lows. Even the S&P's about 10 handles off of their lows. Russell down 4. Dow continues to be the strongest of the group today. It was the weakest of the group yesterday, up 51. Volatility up 8 cents at 1849, down near the low end of its range. Bonds are up 14.6, 117 change. Bitcoin has not moved, down 1,500. Ethereum really hasn't moved, down $37. Oil up 67 cents. And by not moved, I mean not moved since the last time I quoted them, say within the hour or so. Gold up 16. That's a little bit off of its highs, kind of mid-range. That's moved a little bit off its highs. Silver up 52 cents. It too has moved a little bit off of its highs, more midish to high range. Nat gas up a little over 6 cents. That's a decent sized move at highs or around recent highs in nat gas. We'll take a quick 90-second break and come back. We got more Tasty Live. The opening bell is imminent. We'll be back in 90 seconds.
Turn the machines on.
Turn the machines on.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son. You know what that means. The opening bell in about 5 minutes. Even the S&Ps are down 12.5 handles. NASDAQ down 98. Russell down about 6. And the Dow up around 35. Volatility up by 9 cents. I won't go through the rest. I haven't really moved too much. So far, it was a good day on volume on the futures yesterday. It was a decent day on option volume. I would expect, and I got a lot of emails about this Veterans Day, bonds closed. Now the bonds open outcry is closed, but electronic trading,
but that doesn't
affect anything. But I mean, the headlines are, bonds are closed today, banks are closed today if you're trying to do something there. But it's not going to make a difference to anybody's trade. Will it be a little bit lighter in volume? You know what? If the market doesn't do much, the volume will be lighter, whether it's Veterans Day or not. Typically, there's a little bit less volume, which makes for wider markets sometimes, and sometimes you can take advantage of that by getting filled at around mid-price because everybody's anxious to trade, willing to take less of an edge. Remember we talked about that, 1 penny earlier of edge that they might, when nothing's going on and they're looking for things to do, sometimes they tighten up the parameters on what you get filled on. So you might look at it as an opportunity to put on trades if you're interested in that 45-ish time frame that we always talk about. Now, you're looking at closer to 40 some odd days, like 38 or so in most of the products that we trade. So you're right in that wheelhouse of looking for trades. Today might be the day where nothing's going on. You get a little bit of time to put things on. What are you thinking about here today? What in your positions, is there something that you're looking at?
Not really. I mean, yesterday was a nice day to take off stuff that worked quickly, so I did a number.
You bought the dip looking for things if you're selling volatility?
I mean, yesterday I took off a ton of long delta. I mean, I took off long delta in NVIDIA and in UNH, Apple, Google. I rolled up puts, Amazon.
Finally caught itself a little bit of a bid, right? I mean,
no, it was down. Volatility just came in so significantly on the downside puts. We sold those puts on Friday. I took $100 out of them.
Oh, very nice. It was really I was looking at. I saw the green bar. I thought it was higher. It really wasn't higher by much.
No. Palantir was another one. Bought the dip there, and it was up $15. I mean, a lot of these positions they move a couple $100 over the weekend, and you take the money and run, and then today if we get a little bit of a pullback, maybe you look at adding them back. I mean, it's probably a lot of those trades are going to move dollars from where they were yesterday if you get a little bit of a downside move today.
And if you're bored in the middle of the day today, don't we have a demo today at like 1 o'clock or something like that?
Do we have an archive? Oh yeah, there we go.
Yeah. There we go.
tastytrade.com/demos. tastytrade.com/demo. If you're a simpleton like me. I've been roasted for that. It was like I've never searched for demos. I'm looking for a demo.
So they added that too.
Well, it's a redirect link.
Sure.
I'm just a guy here.
It's a good thing. It's a good thing to have.
Yes, Tuesday, November 11th.
We want you to be there, whether you can find us or not. We want you to be there.
Yes, I want to make sure
that you can't find us at tastytrade.com//demos. You're probably having a hard time finding something that you need on the platform. And if you go to demo and we direct you, then we have you, and then we can.
Yeah, it's either way. It works either way. It's perfect. I mean, we can make 100 redirects. We should. I mean, you don't want a 404 error.
Mm-hmm.
That's
right. Like my email's bat@tastylive.com. Some people put in Tony at tastylive.com.
It still gets to you.
I don't think Tony does.
Ooh.
I don't know.
We can fix that. Might take us like 6 months on this side.
Fix that. I've tried to fix it.
I'll try. I'll help.
We'll see.
I'll help. But yes, tastytrade.com, not tastylive because we're separate.
That was a test. That was a test.
tastytrade.com/demos or demo, and you can get to the demo page to sign up. And there's multiple demos.
That's a live demo. You can ask questions.
Yes.
It's very, very cool.
You can talk to Q.
I think Q does it, right?
Yeah.
Who you see on the show here.
Anthony. Jason, depends on who we got, but it's always good stuff.
It's a who's who.
It's a who's who of trade desk reps. It's awesome. Good stuff.
Well, we've got less than a minute here before the market opens. Yesterday was a banner day for the bulls. What do you think here? Continuation?
I would like to see an uptick in volatility. I mean, took off positions. Now I want a little bit of volatility. Put on some positions. That's
I wouldn't be surprised if volatility expands today.
I mean, the move was epic.
Yes.
From the 2-day move. There's our bell.
Oh, it was kind of like a load.
Yeah, that was a load.
Low D.
Low D. I'm really
You're too young for low D like that, but you should get a test anyway. In the S&Ps, down.
Funny, at the dinner party, there was I missed my ding again.
Oh, BBAI.
Yes, we bought
BBAI. What'd you do there?
I just bought stock into earnings, up $1 and change.
Oh, very, very nice.
Yeah.
Very, very nice. A $6 and
it was just
it was a $7 stock.
Yes.
And now you bought up $1. Very good.
Yeah.
Very good. Sold it right on the opening. $6.94.
Yeah, that's not a stock that I'm sitting around waiting.
No, it was an earnings play. You were going to
Yeah.
take your money.
It's one of those, but like at a $5 stock price, like you could sell the puts, I guess, if you wanted to do but why not just buy the stock and have the delta exposure? It was a 1-day trade. I'm not like married to this position. If the stock opens at 1, it stinks, but you're out.
Yeah, I think
you don't want the options, wide bid-ask spreads. If you have a huge move, you probably don't get paid as much to the upside. On the downside, you got to deal with this funky option. What do you do? Hold it and take stock. And it's just like, I just want the binary. I'm taking 100 shares. It's going to be gone in the morning, and now it's gone somehow.
And now it's gone. It's dead. It's out.
I'm not going to look at that probably until the next time it has earnings, and I'm bored with a 3-point vol smash that we've had this week.
Absolutely. I would be done and out of there too.
Yes.
Totally agree with you. Even the S&P is down 10 and change. Let's see what's moving this unchanged market. We'll go to the downside. CRWV down almost $8.
That put's only moved about 60 cents, just to put it.
Did?
Because we sold the 80 strike put in December. If you remember, it was just not really an earnings trade.
Oh, CRWV. Oh yeah. You sold the 80 put.
It wasn't really an earnings trade. We just kind of had a short vol position there, and we talked about if the stock was an inside move, you'd probably see volatility contract, which is what you're kind of seeing here. With the stock down to $8, it's an inside move. This put has only moved 60 cents. I mean, it's a small move. On that put. So
yeah, down
something that
$10 now.
Are you going back in to do my my ding? There you go. Yeah.
See if you're
giving me big ding.
See if you're not dingless.
Yeah, I'm getting that big ding now.
Big ding energy.
Yes.
Coin down 666. BE down 5 and change. AppLovin had a big day yesterday to the upside. Is down 10 today. MSTR down 4.5. Tesla down 4. Nvidia down almost 4. Reddit down 2 and change. Haven't mentioned Reddit in a while. Ivy rank is only 16. Meta down 5 and change. Let's see what's bringing us to the upside. Lilly up 7. Carvana up 2 and change. AVGO, which has been a leader in the clubhouse, up almost 2. Apple's been green all day long, up $1. Cent by all day long, I mean pre-market. There's your Oxy, which Vanessa mentioned earlier this morning, up $1 and change. Gold doing well, up $1.19. Starbucks up 94 cents. Kind of a mixed bag of tricks. Looks like more of the stocks that we trade are looking a little bit lower than higher.
That's a good ding.
You got a better ding now.
That's a good ding.
Mm-hmm.
That one's strong.
Much better.
It's a strong ding.
Much better. Much better ding.
That was MBIS. I did the little Johnny trade in there. I guess it wasn't a Johnny trade because I was naked, but it was a shorter duration crab trade that I took like $100 out of.
Nice.
Something.
Nice.
I'm sorry, like $40 out of.
Sold it around 320-ish and change.
It was an upside play, and the stock went nowhere.
Yeah, right.
Made a couple bucks.
That's just premium contraction in there, yes. And markets are a little bit wide-ish in there, too.
Yes.
A little bit more. You did it around $3.24, and Mid-price is closer to 330 and change, but it's $3 bid at 370. You know what I mean? Those are the kind of markets you can't really tell what mid-price is here. Dow still continues to be the strongest. Volatility up by 8 cents. Not too much going on. It almost feels like a holiday, I'll tell you that much.
Yeah. Anything else sticking out to you here?
I'm looking at the airlines just because we just looked at them. UAL is up 20 cents. Love looked like it was down small. It is down 6. AAL, which is American Airlines, basically unchanged. So no real movement there. Tesla, what are you doing in there?
I had a call ratio spread, so I put it on. I put it on Friday at $1.46. So I bought the 440, 455 call spread and sold the 475 against it in the November 21st monthly expiration. So I did $1.46. I just closed it at $1.20 credit. So it's $260 ish.
Very nice, and you can see all those trades in real time. You can see there's NBS, BBAI.
Here comes Tesla.
Buy from yesterday, 572, sold at 694. Here you can see what he's doing in NBIS. Also, all there on the follow page for your viewing enjoyment.
Yeah, I'm putting a couple orders into to close out. Should we do an SPX?
Why not? Let's see what the expected move. If I would go to ES, I just like to go there. You'll see it's around $24. It was around 30-something yesterday. You would expect it to be a lot lower, 24 today. What do you think about doing in there 0 day?
Let's do our typical like 20 delta, but I'm putting in 2 orders to close. So Lulu, we sold the puts at the 140 strike. They're wide bid-ask spreads, but we sold them at $4.35. I'm putting in an order to close at 335. We'll see if we can get $100 out of that. Same thing in Roblox. I think this was fast market from last week while you were gone.
Beautiful.
Sold the 95
I was
put.
in Austin. I mean, it wasn't like I was gone.
95 put, 110, 115 call spread. So I did a Jade Lizard here at 520. I put an order in to close it at 420. I like to get the round low $100 there. That's kind of just my spot.
Very good. If you're doing 0 day, you don't want to do it in ES. You want to go to SPX, right?
Yes. Let's do the 20 delta, $10 wide.
So you're doing the 67.90 on the downside, probably by the 80, and on the upside, if you're just using delta, it's 45.55. Looks like it's trading around $3.10, $3. Probably get filled at $3 if you get a little bit of an uptick somewhere.
Yeah. Let's try.
Put in at 3 and you can sit.
Put in at 315.
Are you doing the 45.55?
45.55 and then the
90.80?
90.80.
315?
I'm working it down. I was just hoping I get filled. I'm gonna put it at $3 and let it
$3
let it
like
come.
A fair fill if you can get filled there.
Yeah.
All right, good job out of you. Not too much going on in the market. Everything is
There it is.
Right there.
Oh no, that was Lulu.
That was Lulu. You got filled at 335. 335.
Yeah. So and stock's gone nowhere. It's just a pure vol play.
Lulu? Yeah.
When we put that position on, the stock was I'm sorry, Apple here.
Let's take a look. You're looking at Lulu here. What date did you put it on?
I can pull it up. Hold on.
I should have looked for you. I'm so sorry.
It's okay. It's okay. Oh, I guess we did. The stock was at 164. I thought it was lower.
Oh,
at 164.
And you're finding that on the.
Yes, I can show
me how you do that, because I went silly.
This
I went to
is
the charts.
Yeah, so this is on the market snapshot, so I can give you this little look. So on the right side, if you right click on the order, go to this view market snapshot, it'll pop up this little window here, and it gives you a little bit of data on kind of your trade, and you can obviously make this a bit bigger. So we put this on Friday. Stock was trading at 164 and change. Closed it today at 170 and change. You can also look at implied volatility. So IV's actually increased slightly here, 58 to 67. You could see like
the price
IV rank. You could see a whole bunch of data on this. So
I can't tell you how many people in Austin said they didn't know about that. I didn't know about it either. That found it useful. Now, I mean, it's a good thing to know, right? So look back. I mean, it's not going to make you any money. It's just going to validate your directional bias or your volatility bias, but I guess you can look at that on a lot of SPY or ETF type trades that you put on if you don't remember where volatility was, or you can't figure out why an earnings trade didn't work or something like that. You could definitely look at it.
You would think a creator would know his creation.
You would, but sometimes, we're so good that we forget all the great things we do. Let's take a quick 90-second break. We go on to the next great thing. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We've got welcome back to Chris.
Woo!
That's
man.
right. That's right. Pew, pew, pew.
Pew, pew, pew.
Chris is back. He's going to explain to us how he had a baby. We'll be back in 90 seconds. We got Let Me Explain with Chris next. What's up?
Take off that AMD strangle too. We were looking at that yesterday.
Oh,
that's
why not?
coming another.
Why not?
That's
Sure,
come off.
Sure.
All right.
You're going to try to take it off. You're going to go in at mid-price. Ready to take a quick 90-second break?
Yes.
90-second break it is. We'll be back in 90 seconds. Let's take it live. 90, 90, 90, 90, 90.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, do I have a treat for you today? Do I have a treat for all of you out there today? I got Mr. Chris Vecchio back from an extended pregnancy time off. How are you, my friend?
I'm doing well. I've lost all the baby weight, so things are going well.
I was gonna say you
look great. You didn't gain anything in your face. You look beautiful, man. Really, honestly.
I definitely gained the sympathy weight on the way up. My mother-in-law did something really evil. She brought this Turkey Hill sherbet into the home after the baby was born. And apparently I'm a sucker for sherbet. So that had
That's
to be
not
cut
too
out.
bad if you're going to indulge. I mean, that's pretty good. I mean, I don't consider
Yeah,
you. You're not rogue there. I mean, like,
That and the fact that last month was Monopoly month at McDonald's, so I ate my fair share of McDonald's.
that's going to kill you.
Did you get a boardwalk?
Yeah, I did get a boardwalk, and I couldn't find a freaking park place anywhere.
I thought it was the boardwalk, which was the hardest one. That was like the one that you need.
No,
Is it the park place?
Yeah, no, I needed the park place, and I just wanted that RV or the cash value, but there's always next year.
You don't want an RV. Yeah. I had an RV. You don't want an RV. You don't want an RV.
More trouble than it's
You made it
worth.
look so fun.
You don't want. This is the best. And I'll let you get on with your story. I shouldn't be telling my stories when you're on. But long story short, I've been talking to my son Vinny, who's going to start driving in January. And
He wants an RV?
No, I want to get him like a SUV type vehicle. He can stick his skis in there. He likes to go skiing and stuff like that. So, something like that. And he's like, yeah, and then I can go camping in my SUV.
Yeah.
And I looked at him. I'm like, we had a 30-some-odd foot RV with heating and air conditioning and a bed. You hated it. But you're going to sleep in the back seat of your car with no heat, no air conditioning in the middle of winter.
I warned you about this.
I know.
I was like, it was too early. It was too early for that.
I know. I don't know. Anyway, I digress. Go ahead, Chris. More about you. I apologize. How's little Luke?
I did tell you. I was like, you do have a son that enjoys fishing, smoking cigars.
Yes, I do.
Whiskey.
I do.
Sits at the water. You do have one. I know you have one at home that hates the RV, doesn't want to hang out with his dad anymore. You got another one that doesn't mind those sort of activities.
He doesn't smoke. He doesn't drink.
Yeah, he doesn't smoke. He doesn't drink. It's his music.
It's a womanize.
It's okay, Chris. It's okay, Chris.
Chris, let's get back to wholesome. How's Luke, little baby Luke?
Everything's great here. Everything's great here in part because when he was born, I bought a bunch of gold for him and piled it into some tech stocks.
Did you get it from Frankie? If you got it from Frankie, you just drill a couple holes in there, make sure it's a full bar.
Real?
Yeah, it's shave some off the
thing?
side. Make sure. I know Frankie's got some. He's got size.
Frankie and I are close. I think I'm like a few months away from him telling me where he buries his gold. So stay tuned.
No, you get buried with it.
That's a
Good
plot
luck to you.
twist.
Yeah, that's a plot twist.
Wow.
Yeah. If he tells you where, it's not a secret unless two people know and one person's dead.
There you go, son. You remembered. You
So you gotta be
remembered.
careful.
That's a guy you want to take on the RV, Tony.
I told him that early on in life.
That's right. That'd be perfect. Here, Dad, sign a couple of these documents here, and then we're gonna take a trip to the water. We're gonna go see the.
Don't you want to see the water's edge?
You want to see the water's edge? Yeah. This got dark.
Such a beautiful view of the sunset here on top of this bridge.
Just look at that sunset, that beautiful sunset.
And this
Stare
is
out
like
to the
Tony said,
sunset, Dad.
Let's make this more wholesome. How's Luke?
Oh, God.
Unbelievable. You guys are evil.
So good.
So let's talk about those tech stocks I bought for him because coming back here, things do feel different in the equity market space. AI has evolved in recent months, perhaps, maybe not just the last few years, from something more than a speculative narrative into what I see as something approaching a belief system for the markets, almost like a religion itself. Everywhere you look, valuations are stretched. Investor enthusiasm in the space is euphoric, and every earnings call you're seeing seems to invoke AI as the ultimate growth driver. Yet when you step back, aggregate AI sector price to sales ratios are now above levels of what we saw during the dot-com bubble. So the question is, are we seeing this birth of productivity come into the market that's going to reshape the economy for decades? Or are we just in another over-leveraged cycle, Tony, where gravity is eventually going to reassert itself? So I guess, Tony, the question for you is, and then to Nick, from a trader's perspective, how are you guys differentiating among AI names that you want to own versus ones that you think look frothy, so you'd prefer to short and hedge them?
So before I give you my answer, can I get your answer? You said you bought these for Luke. So did you buy these stocks for Luke?
Yeah, just a bunch of Mag 7 names.
Got it. Okay, so you then must believe, if you're putting it in this child who's only been here for days, giving him a portfolio of overvalued.
But that's duration. Yeah, I mean, he's not even going to look at that for 15
You make
years.
your money on entry, not on sale. You make your money on entry of a house, stock, or anything on entry.
So you want to enter now. You don't
not on sale.
15 years from now, $200 is going to be $2,000. Okay,
But it'll be worth $2. According to the inflation of everybody else. I'm just kidding.
No, I know. I'm saying.
Yes, I know. I know. I think that they're overvalued, but they've had movement down. So, like, I don't think you've caught the bottom of these, but you're certainly at the lower end of this movement than the higher end of this movement. If your son had been born 3 months earlier than this, even though we would have went higher, I would have said that you were inflated. So I actually kind of like your area of purchase right here. A lot of these stocks are down 15, 20% off of their lofty highs, still up 200% for the year, 100% for the year. So I don't hate your entry. I don't love it either, but I think your hands were tied. So I think it is what it is. From a trading point of view now, I would be looking to sell any rips.
Sell any rips. Nick, that sounds awful. That doesn't comport with our buy the dip blindly mentality in this generation. How are you playing this? Because I feel like the only rational thing to do is to run into the bubble and help inflate it.
Yeah, I mean, I think markets are going up. I mean, that's my prerogative.
I know, but you can't be blind on these. The Mag 7.
Yeah, but on to his question, was last week an opportunity? I
mean, in hindsight, I guess it was. I mean, yeah.
I mean, I traded it, but that's
you traded it. So there were two sides to it.
Yes. So I think that is how I think these stocks. There's a lot of headline risk and news risk to both directions, which makes them very, very tradable. Like this is a way different market than 5-6 years ago when it was a grind fest. This market is built for trading. Like I even got
built for speed. I will give you that.
It's built for speed, and it may be that they're overvalued and that they're frothy, but when something moves, $10 a day, there's an opportunity there. 10%, 5% a day. There's an opportunity there. There's no opportunity to trade when something is up, 25 basis points every single day forever. I mean, like we watched those markets in 2016, 17, 18, where Apple went up 25 cents a day, and there's no way to trade that. Like it's just dead money. You have to buy it and just be long and sit there and do nothing. Yeah. This market has been really awesome for trading in both directions. Whether you think it's overvalued or undervalued, you're getting that entry week to week.
Yes, you are.
Like last week, everything was frothy and it was a bubble. And then this week, everything's cheap. Like everybody's, rushing to get NVIDIA shares at 190 instead of 180 last week when everybody was freaking out that this was a bubble. That's a trader's market. It's awesome.
There's the voice of reason.
I'm looking at the big picture here, which, we have the Mag 7 names now making up nearly 40% of the S&P 500's market cap. That level of concentration is truly unprecedented in modern history. Does this make AI its own asset class with unique beta and correlation and risk, or is this just another sub-story within the tech sector? And I guess, Tony, if AI continues to dominate index weight, is that going to help anchor volatility, or is it building a powder keg that could lead to cascading losses on the index level if, say, a few of these names become destabilized?
We could have said this at any percentage. You just mentioned 40-ish%. We could have said this at 30-ish%, 20-ish%, even down to 10-ish%. I mean, at some point, it's going to come to fruition, and you're going to get your cascade moment in the market.
Where are we at that point? That's the big question.
I don't think there's any way of telling except for looking at volatility, and volatility is at lows, so it looks like the grinder goes brr, as like you like to say with the money grinder.
Printer. You don't grind the money. You print it. You make the you don't want to.
You don't remember a grinder because we had grinders. We had to grind our meat.
I thought you were talking about for the wheat. Oh yeah.
No, not for the weed.
Grinding your meat
Yeah.
in 2025 has a totally different connotation.
Yeah.
I thought it was Smash.
Yeah.
I thought it was Smush or something like that. No, so that's so 1990.
There's an app built around that with maybe that same name.
Yeah.
I think you can look at volatility. Volatility will tell you when markets are moving and changing, and volatility's not moving right now. So I don't think markets are changing going into the end of the year. Now we can have, what was it, 2018 where we closed, 2017, 18 where we closed at highs and then kind of grinded lower for the first quarter of the next year. You could get something like that. I don't, right now, volatility is not pointing, and the volatility curve isn't pointing to anything either. And the all future curves are pretty flat too. I think besides, I don't know about currencies, that'll be the only one I'm not up on. But oil is flat. I mean, the curves are pretty flat, and volatility is usually, a little bit, it's not flat. It's usually going to be, in contango or backwardation. It's not flat like it is right now. And that just tells you that there's complacency abound. Now, I guess you have to, the other side of the coin would say, well, when you're all complacent, you have to worry about what the market's going to do. I don't see that right now at basically all-time highs. Every dip, as you guys have said, has been bought, and they get shorter and shorter in between, which I think is more worrisome. But until it changes, that's the way it is.
Oh, you think it would be better if you had like a week of...
I
agree.
I
agree
mean,
with that.
Twitter was going, or X, whatever you call it these days, was going nuts on that movement down, and you could almost feel the powder keg waiting for the explosion because too many people were on board. I mean, even Kramer came and said, we are finally in a bear market. Everybody makes their bold call instead of saying, you know what, I don't know where we're going right now, but volatility isn't really upticking that much. I thought it would get into the 21 handle. It got into the 21 handle and never got any higher. So
I think ignoring that sort of stuff is the key to markets.
I think fading it is the key to it. But
no, I mean ignoring the noise of.
It's hard to do though.
I know.
Trading is emotional.
For sure.
Trading is emotional.
Yeah. If you size correctly, you take a lot of that out of it.
Your gold has been your best play, probably. I mean, gold's sitting at, 41 and a half. I don't know when hopefully your son wasn't born when it was 43 and a half, was he?
No, it was still 36.
Oh, there you go. Oh, man, you've been gone a long time. I forgot. I only took 2 days off when my most recent.
Back in my day, we just got back in
37.
Have you tried working for a great company like tastytrade and IG?
There you go. No, evidently not. I work for myself.
On top of all this bullishness in AI, there is this seasonal backdrop, which, some folks around here may have said we don't care about seasonality, but let's talk about the window around Vixpiration. That sounds like seasonality to me. But let's talk about seasonality here. November has been a strong month for equities. The S&P 500 up 90% of the time over the past decade. It's the second best month of the year behind July, which has been up 100% of the time. It's the best month of the year for the Russell 2000. Okay. Mm-hmm. We know all these things, though. How do we balance these historical tailwinds against this crowded positioning in the space? Do we blindly just buy it and ignore the noise, which has worked so well in recent months? Do we use this as an opportunity? You say blow off top potentially. December has not been a good month for stocks over the past decade, over the past 20 years. Do we use whatever November rally to reduce our beta deltas?
Oh,
Santa Claus rally. This is very specific. It's the final 3 days of the trading year and the first 2 of the new one. So when people say, oh, Santa Claus came early this year, Santa Claus can't come early because it's not the final 3.
And you wouldn't call him Santa.
Yeah.
Right.
You wouldn't call him Santa. They call him somewhat Pierre Noel. I don't know.
Chris Kringle. Go ahead. I'll let you take this one, Nick. Go ahead.
No, I mean, I question what you feel is the consensus because I feel like this is kind of a retail-driven market, and that there's a lot of people that have this frothy, waiting for this big epic crash, and that this has been kind of a hated rally for most people. Like, I think the little fish that have just said, you know what, shit's going up and I'm riding the wave, have profited significantly relative to the small size of their participation into this rally higher. And it's been kind of the big dogs and the establishment that's kind of been on the sidelines throughout this whole thing. That kind of looks at this market and says, you know what, one day we're going to get this big drop and prices will be lower and they'll be able to say, I told you so. But it hasn't really happened for 6-7 months straight, like at all. And so I don't know if the consensus is really what you think, that this is frothy. I think the consensus is that it's frothy and I'm sitting on the sidelines waiting for that crash. And that's why we continue to grind higher. Like, that's what it feels like to me.
There are a lot of haters here. We covered this on Futures Power Hour yesterday, but sentiment right now, the CNN Fear and Greed Index just got out of extreme fear territory. You're seeing headlines in the New York Times talking about how Trump's setting us up for a 1929 crash, or in The Economist about how traders aren't prepared for the next big volatility spike. So it seems like there's a lot of hate going on in this market right now, which is a wall of worry that everyone loves to climb.
Yes.
Needless to say, long story told short, still leaning long MES, if only to hate trade against Elia.
And listen, it might come at some point. The question is where prices are at that time. If we're 10% higher and we have a 20% dip, we're back to where we are right now. So
I've tried to say this for years with other prior administrations that I've had sit across from me. People go broke waiting for more money's lost, waiting for this huge down move than is made in just trading the market. I'm not saying perma bull, perma bear. I'm just saying trade the market, trade both sides of the market. You can have your 401k, your IRA, or even your core trading strategy lean to the bullish side. I guess if you're playing odds, 52 to 48, or maybe a little bit better than that over the last couple of years, then that's the way you should lean. But take profits, roll into less volatile strategies, roll into defined risk strategies when we're banging up around highs, get a little bit more aggressive when volatility is high. Just trade what's in front of you.
Yeah. And you're never going to catch the entire move.
I always say I'm never going to catch the top. I'm never going to catch the bottom.
And on a crash, you're not making, there's few people that are making money net. I mean, there's a lot of things, job losses, house value, 401ks, all those things you don't think about in your own trading.
Add up.
Yeah.
Mm-hmm.
Gentlemen, before I say goodbye, it is Veterans Day, so I think we should just say a quick thank you to everyone who served. We get to debate because of what the people have done for us to protect our freedoms, and I know we don't take that for granted. So I hope everyone has a nice Veterans Day.
Yes, sir.
Well
yes, sir.
said.
Good call. Talked a little bit about that just on the trading side. Bonds open outcry is closed, which really most of the volume is done electronically, which is open today on Veterans Day. So yes. Thank you, everybody, for your service. We're going to take a quick 90-second break and come back. Pretty complacent market here. Even the S&Ps, I think you probably should close your SPX offer that you have in there. It's moved about 50, 60 cents already. Tried to sell it around $3. I don't think you would have been able to get filled at $2.90. Probably $2.80 you would have gotten filled. But you know what? Sometimes you have to miss them not to be too aggressive in there. We'll take a quick 90-second break. It's been a pretty complacent market right now. Volatility down by 10 or 11 cents. We'll be back in 90 seconds. You're listening to Tasty Live. We got a market measure next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's Money Match event, unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son. You know what
You
that?
okay there?
Yeah, I gave a little slip on the elbow there. I gave a little.
I don't want you to fall down again. Last time you fell, you had a wrist injury. I had to hear about that. Owie, owie.
I did. That was a bad one. It still hurts. And still has a little tenderness to it.
Yeah.
Yeah, my wrist. You don't care.
Tenderness?
It's so whiny. It's so whiny. The guy gets a pimple, starts crying.
Pimples can be painful.
I know, they can be painful.
Oh my God, you too.
Market Measures sponsored by the SIBO. What are we looking at today, son?
Decoding.
Decoding?
Do you do a lot of coding?
You know what? Before I leave this earth, I'm going to learn how to code something.
Sold.
I am going to learn.
Because today I got to give you a walkthrough on the analysis mode, which has been in the platform for how long have we been in business? 8 years, 7 years?
Yeah.
Yeah.
So. Yeah.
I'm going to sell the coding, but I wish you the best. And I think you should follow your dreams.
Thank you.
You should do the things that you are passionate about, Dad.
Thank you. Thank you for that. I appreciate it.
I
appreciate it. I'm going to.
Okay, good. Decoding theta vega trade-offs. And the great thing is that
follow my dreams.
Follow your dreams, Dad. One day. It's good with
Dare to dream.
Chat GPT or Claude, like all those things can help you too. Good. You don't even
Thank you.
You don't even need to learn anything anymore.
I'm going to do it. You'll see.
All right.
You'll see.
Theta vega trade-offs. Let's do it. E-minis down 20.
Down at their lows here, yes. Just a scotia off of them. Volatility up by 4 cents. NASDAQ, weakest of the group, down 160.
Cool. First slide, please.
First slide.
Short premium traders benefit from the time decay of an option's extrinsic value. We are positive theta, so you're long theta, long time decay, but risk potential losses from exposure to changes in IV or short volatility. If you're long time, you're usually short volatility. If you're short time, i.e. you're long premium, you are long volatility. You want these big moves to offset the decay of time. This is just option 101. I mean, this is just how long versus short options work. When you are net short premium, you have positive theta decay and you're short volatility. And when you're net long premium, it's the opposite. A trade with a high initial profit potential has a high theta for the amount of vega risk at the time of the trade is placed. So when volatility is high, your vega exposure is also going to be high, but your theta is also going to be high, right?
Yep, of course.
High volatility.
Of course.
That's what you're looking for.
I'm getting a lot of people selling me on my coding here. A lot. You're not alone. It's a crowded space.
Yeah, that's we should make a prediction market on that. Hopefully that's
I'm going to Code Academy. That's where I'm going.
That actually would be a great idea for our platform.
What's that?
For us to make our own prediction markets and offer them to the public. Like I could put that out there. on a prediction, buying or selling, and we'll put a time limit on it. The problem is that's a lot. You're going to be around a long time, Pops.
God willing. Yes.
I hope so. The study, SPY 2020 to present. So we're looking at this 5-year time frame, so more recent time frame here. We're going to be looking at selling 16 delta, 45-day strangles managed at 21 days till expiration. So we're selling the 16 delta on either side. Compared the strangle, we're looking at the strangle, obviously, and the vega and theta amounts there. And we're looking at the change in vega and theta as a magnitude relative to the change in volatility. So we're looking at that actual number, how much it changes based on different IV rank ranges. So we're comparing it in various IV environments from 10 to 20, 20 to 30, and 10 to 20 is typically kind of the lower end. 20 to 30 is mid-range. That's kind of where we sit most of the time. 30 to 40 is kind of on the higher end, and then 40 and above is kind of the high vol mark, right? IV rank is weighted, so it's skewed toward these like very big prints. So you don't see a ton of like 60, 70, 80% or 60, 70, 80 IV ranks, because that implies that volatility kind of stays elevated for a long period of time. It typically comes down. So these are the buckets for IVR that we're looking at.
Very good.
Next slide here. So the amount of the initial IV directional risk is lower on average in high IVR because the options at a given delta are priced efficiently for the IV environment. Basically what it's saying is that when volatility is high, it's priced where it should be. When volatility is low, it's priced abnormally low. Like it's lower than what it probably should be on those positions. And so you can see your 16 delta SPY strangle, you actually have more vega exposure, short volatility, when volatility is low, because it doesn't get priced into those tail type 16 delta isn't it?
It's another way of looking at why we don't ramp up when volatility is low on trading these type of short vega, short volatility type positions, because you put yourself a little bit behind the 8 ball, as opposed to the advantageous look at volatility when volatility is high to look to sell premium.
And a lot of this has to do with where your risk is. Sure. So when you have high IVR, your strangle relative to where the stock is trading, and we're looking at SPY here, is much further out of the money. And that's why a lot of this vega exposure is lesser, is because even though it's the same delta, and there's probably a lot of fear going on, there's a lot of things moving, headlines, whatever. Where your risk is way further out of the money. When you're dealing with a 10 or 20 IV rank, your strangle is much closer at the money, and so when things change, and they will, you have a lot more risk on that position because that delta goes a lot higher. So it's relative to where you are on the distribution here. That's why your vega kind of contracts when volatility is higher.
Well said.
Next slide here. So on average, as IVR increases, the extrinsic value of strangles also decreases at a faster daily rate. So this is kind of talking about how not only is your vol risk lesser when vol is high because you've realized the volatility, but you're also getting paid a lot more on those options. And this just goes to fear being overstated. Mm-hmm. When there is fear, meaning volatility spikes, the fear of the fear is overstated, right? So
sounds funny, but yes.
You've had the fear, like before the fear event, it's understated because volatility is low. You have the spike in volatility, and it goes to typically a range that is well overstating whatever the event is. And that in turn makes it so that your volatility exposure is lesser because it's kind of gone. If volatility tends to spike past where it's actually should be, right? Mm-hmm. Should be at 25, it spikes to 50. And that's kind of what you see here with your theta as well. You're getting paid more even though there's more uncertainty.
But it's not mispriced, right?
It's not mispriced.
That's what the market can bear. If the market couldn't bear it, it would be lower.
For sure.
If the market warranted, it would be lower.
The mispricing comes with what we look at after the fact, right? In the moment, it is priced what it is. But we've seen this time and time again that when vol spikes, it mean reverts. But it doesn't feel that way in the moment. You have COVID and everybody's locked down and it feels like the world's ending. And it doesn't end. And then volatility comes back. And that's typically what you see here. So the moral of the story here is that it means that high IVR short premium trades benefit both from faster time decay and reduced IV directional risk. You're paid your risk on when IV rank is 40, you're getting paid more and your risk is relatively less in terms of volatility risk on those positions. It's counterintuitive. It seems crazy to put on risk when risk is priced at its height.
It does go against what your normal mind would tell you.
Yes.
That's right.
Yes.
It's like the house is on fire and you're running in kind of thing.
Exactly. Yep. Exactly. Yep. But really the house isn't on fire. Somebody just told you the house is on fire.
It's AI.
It's an AI fire.
It's an AI generated fire. That's right. That's right.
Next slide here. So theta tends to increase with IVR at a much faster rate than the vega magnitude tends to decrease. So particularly in very high IV environments. This means that premium traders tend to benefit much more from faster time decay than from the change in the IV directional risk in high IVR. And so you can see the change in theta in terms of the extrinsic value increases a lot more than the relative risk of that strangle. And that's, again, because of where the risk is. The risk is so far out of the money when volatility expands relative to where it has been when volatility is lower, that when you get that time decay, it's much, much more profitable than just the change in implied volatility. The change in IV is awesome, but it's really the tail options that come down in delta. Those 16 delta options go to 2 delta very, very quickly in that volatility contraction.
Quicker than you want, too.
Yes, if you're long.
That's right. That's right.
So a couple of takeaways here. A trade with a high initial profit potential has a high theta for the amount of vega risk at the time the trade is placed. 60 delta SPY strangles have a higher initial theta and lower initial vega in higher IV, but short premium traders benefit much more from faster time decay than from the reduced IV directional risk in these types of environments, types of volatility environments. Basically what we're saying is when volatility is high, you're getting paid way more to take that risk, and your actual risk relative to where volatility is becomes lesser because of how far out of the money you are on those positions.
Very good. Good job out of you and a good job out of the team over there with talking about theta vega takeaways. And
they've been crushing it.
Again?
The team's been crushing.
Yes, they've been very, very good. And
on point.
Something else that's getting a little bit crushed here are your cryptocurrencies. Down another 2,000 here. Can't hold on to these rallies, 14.4 and change. The market itself is down 23, which is at or around the low end of its most recent move. NASDAQ down 164. That's been the weakest of the group. Both well inside the expected move. As a matter of fact, your SPX trade that you were trying to sell around $3 is trading at 240, just trying to show everybody at home if you stay inside the expected move, even if it's in one direction or the other, meaning all in one direction, that trade can still be profitable. You look across the board here on what's moving the market to the upside. Netflix, unlikely savior here over the last 3 or 4 days to 11.28 and change, up 8.5. It's been a weaker stock as of late. Lilly, always one of the higher moving stocks on a percentage. Apple saving the market. We're not going lower if Apple's going to be up $3.50 today. Qualcomm up 3.5. Carvana up 2 and change. Volatility only up by 8 cents. Let's see what the downside is. I'm sure it's fewer. I'm sure it's a lot more to the downside. AppLovin down $40. That's a big move. 6% move in AppLovin. AppLovin's been one of the big movers as of the last couple of days. On an option point of view, it's an untradeable stock. 51, 57, 46, 36, 39. Untradeable stock. Have to mention it, I guess, because it's to leave the clubhouse. CRWV, I think that's a stock that usually has markets. Might have better markets today because it's in play. You can see here that some of these options are being traded because the markets are a lot tighter on some strikes than others, although market's still quite wide in CRWV. WV. MU, leader of the clubhouse, first time for a downtick here, Nick.
Oh my
down
God,
$12
about
and
time.
change. Are you going to buy the dip?
No, I did it yesterday, and I hate myself for it. We always talk about how it stinks to roll up those puts into those big moves, but that put roll up really didn't hurt me all that much. Just to put it into perspective, so I rolled up from the 175 to the 200 strike. I did that at 305 yesterday into a 13-point down move today, which basically reverses
into an up move yesterday. It was
into an up move. Yeah. So I did this, and I can show this too. But that's roll up is now at 391. So it cost me 91 cents on that roll up. The option itself, the call option. So the 280 call, which was much closer at the money, lost $4.76 today into this down move. So my net change in that position, even though the put is now is now closer at the money, I got back $300 today, $3 and change into that roll up. It tells you that volatility is coming out into this down move. Obviously that roll up, it stinks to roll up and then watch stock go down $13, but it doesn't hurt you as much as the value you gain back from the call that's tested. That's why we make those adjustments.
Very good, sir.
You don't have to go right at the money and flatten out and do this right.
No. You reduce delta by
directional
50%. Sure. Absolutely. Some of the other stocks that are a little bit lower. BE has been one I know that you've been trading back and forth, down 9.5 here. BE.
That thing has a gravitational pull on my mind.
BE also at the higher end of its range. Oracle down 9. Tesla down 7 after having a good day yesterday. NVIDIA also down 6 after having a good day yesterday. Coin down 4.5, TSM down 4 and change. PLTR, which had a big day yesterday. On the IV rank, IVX 5-day change, I like to look at what's rallying in the market to put on new trades. Lulu, volatility up by 10%, even though earnings are coming on 12.4, might be something to look at to trade. Oracle, IVX 5-day change. The volatility over the last 5 days in this declining volatility environment has been going higher in Oracle. Maybe that's something you gravitate towards. AVGO is another one. Even the airlines, if you're looking to put on a directional bias here with the shutdown coming, we just showed the airlines do a little bit better. AAL down 23 cents, relatively low IV rank of 25, but expanding over the last couple of days. Maybe there's something to do there if you have some sort of directional bias in the airlines.
So I closed out of AMD, the strangle that got filled while we had Vecchio on.
Okay.
And I took off my gold position. I had some long delta in gold into this move. What do you think about getting into a gold futures wide iron condor into this move?
/GC?
Yeah. It's now down on the day, which doesn't help. But volatility has...
Volatility is percolated. I think it warrants a trade. I definitely agree.
I'm thinking like a 42-day type position, but doing like a 1 standard deviation type wide strangle or wide iron condor, like maybe 25 points wide, something like that.
I like it.
I'm thinking like maybe you go somewhere like the 38.50 on the downside. I guess you could go. It's all the same on the downside.
They're all the same.
The skew is all on the upside.
That's all on the upside, and that's why with volatility expanding, it looks like it's a decent trade. If you think we're going to stay inside the expected move, or actually go a little bit lower, because if gold goes lower, volatility in there is going to contract.
What was the high? Like 44
in /GC.
Yeah,
41.55 today.
No, the high when we got up.
High is 4,400. Yeah, well, approximately. I mean, it looks like the high is closer to 43.90 and change or something.
Okay, these markets are a little wide, but I'm going to try the 38.50, 38.25 on the put side. This is a wide 4,500, 45.25. I'm going to try around $6.
Try as you may.
I don't think I'm going to get filled anywhere close. I think I'm going to be at like 5.75.
Try as you may. Nothing yet.
5.90. Oh, I just canceled it.
Survey says.
570.
Oh, beautiful.
So this is kind of like a synthetic strangle, kind of one standard deviation on either side, going 25 points wide. You want to go 50 points wide, go for it. Synthetic type strangle.
I like it. Good job out of you.
Something, but you got to sit with it. It's not going to, because of obviously the product and the volatility that you have there, it's not going to move a ton.
No.
It's a set it and forget it. Probably trade GLD if you want to take directional shots.
Yeah, GLD would be much smaller trade, but you made 8 trades already today, so that's good.
Most of them are closing trades. I mean,
You're allowed.
I need something new. You want to put me in something? Come on, put me in, coach. Jesus.
I got something to say. You know what I'm going to do right after this?
What?
Yes, you got basically
bathroom break. You need a bathroom break.
Have I had a bathroom break since you've been on this show?
No, but I haven't either. I have adjusted. Sometimes.
We're gonna take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next? The trade desk. That's right.
Yeah.
We'll be back with them and maybe even some phone calls. We'll find out in about 90 seconds or so. We'll be back in 90 seconds with Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Nicky, we are back, son. You know what that means? Well, enough out of you. First, Fire Marshal Bill is in the clubhouse here. How are you, my man, a.k.a. Glenn?
Fantastic.
G-Money.
You know,
AKA G-Money.
They took away a lot of my Super Bowls with the U.S. Government shutdown. No economic data.
Are you getting paid, by the way, for being the fire marshal for today's fire drill with the shutdown?
Well, this is his Super Bowl. This is his Super Bowl.
This is his Super Bowl.
So this is how I'm taking up
crowning
jobs on the
moment.
side.
You're crowning
making
right
a little extra money. But hopefully coming back soon. So yeah, we've got a fire drill today.
That's why you're wearing that, because the building has a fire drill today, correct? And you are the hall monitor for the...
Assistant elevator monitor.
Yes.
You're assistant. You're not even the
Not
Grand
even the
Poobah?
head. No. Tori's the head. You can't.
Oh, yeah.
Tori's the leader.
We have a very esteemed safety team here.
Yeah.
And I am honored to be just a part of it, however small.
Yes, amazing. The big question is, we are in like kind of a soundproof box in here.
Yeah, no, this...
If there ever was an emergency, I know Beth would get us, but if Beth and the team, if they weren't there, would anybody from that side come save us or tell us that the building is burning?
I can add that.
We would open that door and it would just be smoke filled, It'd be like, where'd everybody go?
I can add that to my remit.
Please add that to your procedure.
The scope of my role?
Yes.
We do have 2 searchers, so that's already accounted for.
Who are they? Those are the ones that we really have to buddy up to, like you.
Ron.
Who?
Ron.
Okay,
Your
big.
gentleman.
Yeah,
He's very
big.
strong.
He's good. Yeah.
He could carry both of you out of here.
Yeah, he is big.
And who else?
Yeah.
I think Remy is the other.
Okay. All right. So we have 2. Okay. We allocated to the right.
Yeah.
They're built for that sort of job. I thought you were going to tell me like that was also like a Tory job, and I'm like, oh shit. Well, I'm burning alive. I love Tory, but
I don't want her pulling me by the hair out of here. No.
Yeah.
That I do not. That I do not want.
Okay, that's good. All right.
Okay. All right. Oof.
Yeah.
Yeah, but we've got a super exciting week shaping up here in FX markets.
Why?
Oh, we do.
I mean, government's coming back.
Yeah.
Back online.
We get long the dollar.
So has FX been a little bit slower with the government? Have you noticed that?
Yeah, volatility's been down a little bit, but picked
Not
up.
for little Johnny here. I've been taking 25, 50 bucks here, no problem. Easy
All right.
peasy, yeah.
Nice.
Tell the desk to recognize, okay, over there.
Or scale up.
They talk. Yep.
He's a voice to reckon with right over there.
Tell me, scale up, you loser. That's all right. Well, I will say about the UK peeps.
Yeah.
They're not so in the option game, and they have lots of questions there. You talk about currencies, and they're fully max leverage every single time they trade. I mean, these guys are risk averse, like, oh, I don't want to buy a share of Apple. And then you talk about like the euro, and they're like, oh yeah, I got $200,000 leveraged on a bureau short here, and they got no problem with that, just all or nothing. I like it. I respect it.
To each their own.
Yeah.
To each their own.
FX volatility had come in a little bit. Recently, we've seen it tick back up with a lot of this December rate cut speculation. That's still driving a lot of U.S. dollar movement. This morning, 7:30, we had the private sector jobs data come out weaker than expected. That spurred even more U.S. dollar weakness after we had some overnight. So we're left at some pretty interesting price levels. Mover of the morning, looking at dollar Swiss franc down 2/3% today on both.
That's a big move in FX pairs.
Yeah. So it's down 53 pips on a pair that's under 1, so 0.99 now under 0.80, so 79. This is back towards
Just the magnitude of the move
range.
itself is a pretty big.
Yeah, so we had not only the weaker than expected jobs data from the U.S., also some trade negotiations with the U.S. and Switzerland, now looking like our 39% tariff will be reduced to 15%, bolstering the franc not only against the U.S. dollar,
Well, it's
but
Tuesday.
also, yeah.
Right, Taco Tuesday. But
Oh, that's a good. That's
That
a
is
good
good.
point. That's
There
why
you
I'm
go.
looking to get long the dollar. I got long a little bit of dollar franc here into this move. It's kind of mid range, but
Yeah, but I mean, it's
Fade that
fallen drastically in the past week or so from
Yeah.
about 81, so down over 100 pips in recent trade. That's the move of the morning. Also looking at British pound US dollar, very interesting. We saw US dollar weakness, as I said, but early in the European session saw some pound weakness, a little stutter with some higher than expected unemployment rate out of the UK, combined with, some budgetary concerns with their upcoming vote at the end of November. So the Bank of England now looking more towards 3 cuts in the short to medium term, as markets previously priced in 2. So if you're thinking, longer term about some pound weakness, you're actually getting a pretty good price for it here, popping back above 131 near recent highs in that pair, just on some more US dollar weakness than that storyline prevailing. Other than that, we've got euro right at 116. That's an interesting price level. That's in the downtrend. It's kind of the high of the downtrend. So we'll see if we break through that. We've really hit a wall since the U.S. Open. So a lot of consolidation here, especially in dollar yen as well, right at 154. U.S. dollar, Canadian dollar, also right above 1.4. So right now, that's the bottom of its recent range for the past week or so. That's interesting, but a lot of consolidation. We'll see what direction markets decide to slide through, but perhaps a nice range for me.
what do you think? So I did the franc. You think dollar CAD is another one if you want to get long the dollar? That might be a nice way to do it, or do you just go straight to like short euro dollar?
Yeah, I mean, dollar CAD, you have at least November to date. This is the low, even though we're only 11 days in it. That perhaps a less volatile pair.
Yeah.
So maybe that gives some gravity towards a more established range, whereas that euro has a propensity, if it breaks through 116, could run all the way back to 118. We've seen that before. So.
Yeah. I've been short the euro pound.
There, yeah. So that's another mover of the day. That's ticked up on that.
Yeah, but it's had a good move lower. I mean, like I have multiple lots in here, but gave up like half the move today.
Yeah.
Over the last week or so, I might add a little bit more there too.
Yeah, that's back at the top of its recent range as well.
And that's like not a very volatile, traditionally not very volatile.
Exactly right.
Very good.
That's what I'm looking at today. We'll see if we get some more volatility on when this government reopens, when some of that economic data starts getting slated back in. A lot shaping up in currency markets this week.
Oh, I see the flashing lights.
Those flashing lights mean that my man, Fire Marshal Glenn, has to leave right now.
Yeah.
Man,
Sir?
Yes, man those elevators well.
Yes.
Well, give me a little dee.
Don't forget about us when the real thing occurs, okay?
There we go. My man Q, Quentin, what's up, brother?
Fellas,
fellow travel partner.
Man, I want to talk about my weekend. I had a phenomenal weekend in Austin with you guys. I mean, the whole Tasty crew was out there. Sadly, Nikki, someone's got to man the fort.
Okay.
Yes, somebody's got to work. You got to work.
Someone's got to, protect the Tasty.
Yeah, the peasants at home got to, shovel the shit. You guys enjoy the barbecue.
Wow.
It was great. Terry Black's was very good.
Nice.
The beef rib, especially.
The big
phenomenal.
ones, the big ones.
It's like
it's like a dinosaur bone.
Yeah. Does it just slide off the bone?
It was beautiful.
One of those.
It was beautiful. Yeah. I mean, they chop it up for you and everything, and then it's great. But you could see when they take out the big slab of meat, I'm like, this is heaven, right? Like, this is great.
We went to Terry Black's. I didn't realize I was around the corner from a satellite of Franklin's, or I would have gone there too. I didn't know it, or I would have done it. But Texas just does barbecue right.
They do it right.
Yeah.
They just do it right.
Yeah.
I mean, and there's no reason to buy it because they make it so much better than you're ever going to do it. I know, don't out me, you guys that love to barbecue. I get it. I get
Lewis,
it. Yeah, I got it.
The other ones.
Good thing. It's a good thing.
You just told them all to GFY.
Okay. I told myself to GFY because I can't do it.
It's a real skill. You know, it's difficult. It's not an easy.
They do it right. They do it right.
Yeah. And then also
how they do it,
event.
but they do it right.
And also the event that we had as well. Banger of an event. I mean, the last one for Tom, it was great. And it's really cool. It's like a live trading show where you you go over the concepts and you implement them right there. You know,
it's very cool at Work by 11 that we did. Yeah, unfortunately we couldn't broadcast them because we don't own the rights to them at the venue. But I got to thank all the people that came. I mean, people came from as far away as Colombia and Cuba.
Yeah, you see my pin.
Oh, you have it on? Oh, you're an overachiever.
Yeah, I want to give
They gave me one too. I don't have it on. Yes.
Shout out to all the customers that were there. I mean, we really have some of the best customers in the industry.
We do.
It's really not even close. Like the Tasty Nation, not only, are they smart and, active with their risk management and everything, but they're also just such kind people as well.
Mm-hmm.
The most successful traders that you meet are also the nicest as well.
Yes.
And they're really just like such great people, our customer base. I don't know anyone not even within the brokerage industry, but just finance overall that has as strong of a customer base.
Well, they appreciate what you're doing. You know what I mean? You're helping them with their finances. You're helping them optimize their money, profit and loss. So sure, they're grateful. I mean, it's unbelievable. People brought me coffee and cookies and all kinds of stuff. Matter of fact, I brought some of them in for the team sitting out there. So go get yourself a Colombian cookie out there. It's awesome.
You don't got to tell me twice.
All right, good.
Well, the other day, Luis brought some Argentinian cookies.
Yes, these are very similar to those.
Those are pretty
I think
good.
these are actually from Cuba. I think I said Colombia. I think they're from Cuba, which are very similar to the ones that we had from Argentina. Yes.
Yeah, those are pretty good. I will say.
Excellent stuff.
And then, let's get to some business.
Let's do it.
Top 20 symbols going through the system in their IVR. At number 1, we've got NVIDIA, 28, Tesla, 14, CoreWeave, 14, Apple, 13, GLD, 51, Palantir, 15, Meta, 19, AMD, 37, Micron, 54, Netflix, 16, SLV, 41, SoFi, 24, IBIT, 47, NBIS, 58, Google, 26, Oracle, 77, RKLB, 28, RGTI, 14, Amazon, 16, and MSTR, 17. And then also, another Tuesday, another demo, fellas.
Woo!
We've got active management from the mobile app.
Sweet.
And then hosting that demo, we've got Christian Molmat and Big Tex.
And
So
we just did an update on the mobile app too.
Yeah, the mobile app works very well
just last
now.
night.
And it's really good. The trade management, being able to do that on the go and being able to, look at your positions while, I remember when I used to work back in New York, I would always look at the futures on my way to work on the bus. Because I would be I'd be all right, what's the market opening at? How am I going to manage my positions today? And then I would do that through the mobile app. And that was on the archaic mobile app a couple of years ago. And now everything's nice and clean. The positions page is phenomenal. Everything's working great. And so, love the active trade management from the mobile app. And that is tastytrade.com/webinars, tastytrade.com/demos, and tastytrade.com/demo without the S.
There's been a big push by the new administration to get the mobile app up to speed and above everything else that's out there.
Yes.
In the market without competition. So,
Yeah, which it should be.
We know
also you want to have the trade desk in your hands.
Sure.
You want to be able to, of course, our downloadable desktop and our web platform, I personally believe those are sort of unmatched with the quick ease of use, making sure all your positions are
Well, it's what we concentrated on, for the
our
vast majority of the time here.
Doesn't really need much work. The web and desktop platform are phenomenal. And then when it comes to the mobile app, you don't have the active trader always trading from the mobile app up until sort of recently, the past few years.
Yeah.
And so we want to, go with the customer with where they're going for their trading. And so we want to make sure everything that you can do on the desktop web app, you can also do on your phone. So if it's not already there, it's coming.
Absolutely. And if you have any suggestions that you'd like to see on the mobile app, you can send me an email.
And feedback at tastytrade.com as well.
Oh, is it? What is it?
Another
feedback?
Thing, we have our product managers looking at emails and stuff like that as well.
I got some people in the YouTube chat there saying that they've sent you emails that ever since Tom left, the show has got too nice. We're too nice. You can send us feedback. We want your opinions. We're
going to tell you GFY.
Yeah.
But we kindler and gentler now. We want you to send it to us so that we can answer you, so you know where you stand.
Yeah.
Because otherwise, if you don't send us stuff, you don't know where you stand.
So I don't know.
Say I didn't answer their emails. I'll be like, well, if I didn't answer your email, I just.
That little bit behind the scenes as well. Like us on support have been working very closely the past few weeks to a couple of months on a lot of the product offerings that are coming out as well, because we speak to the customers every day, and especially our support desk, our trade desk, we really interact with the customers. We're not like a lot of other firms, and so we want to hear from you guys. Feedback at tastytrade.com. That'll get to the product managers, and then also next week, me and Brianna, head of product, we're sitting next to each other all week next week. So if you guys got anything, send me an email, support at tastytrade.com. Attention, Quentin, get it to me. I want to give her all the stuff. I want to give her all the stuff that you guys
anything you've ever wanted.
Anything.
But we're afraid to ask.
Most of it, I will say, we already know, of course, right? I trade too. I use the platform not for customers all day, every day. Of course, I do that. But I also use it for myself all day, every day. So we know a lot of the things that you want already, but please get it to us. We want to hear. I am going to torture Brianna next week. She's getting all the customer interaction.
Beautiful.
And so, cannot wait for that.
Great, man. Good job. Good job.
Alrighty. Thank you, fellas.
All right, we're gonna let you go as the show is winding down here. First, we'll see if you have any.
And my peeps mentioned I didn't post some of my trades. They're coming right now. I forgot the gold trade, so that should be out now. Gold. I just sold a put in Nvidia. I closed out of an Intel strangle. I actually sold it back out the put that I closed yesterday after selling the strangle. I took the strangle off into the up move, and then I sold the put back out at $1 above what I closed at yesterday.
Gold IV rank 49 has actually come in just a little bit with the movement lower in gold, which is what
that spread's not moving.
You would expect. I mean, your trade is basically unchanged. It's going to take some time to work there, but at least you are getting volatility contracting on the way down. If gold catches a bid again, it'll rally back up. Some other stocks. Let's just take a quick look around the board here on the downside. CRWV down 14, Tesla down 11, Oracle down 11. Some of these stocks I'm looking around here. Hood down 4 and change. That was a big one from yesterday to the upside. Microsoft down 2 and change. Costco, which is on its butt, actually rallying a little bit, up 43 cents, but still lower. What do you think of the market here before I say goodbye to everybody? Volatility up 19 cents, 18.55, kind of mid-range.
It's telling you this is just run of the mill.
Yeah,
it's a little rotation, a little,
I tend
in both directions.
Yeah, I tend to agree with you. You do have, which would be, at least I've been saying it every day. Bitcoin seems to be not ready to put its legs underneath it.
Yeah, I'm looking at Coinbase here.
Yeah, tough trade.
I've been trading puts there. I've been scalping them for the last week or so. I mean, I sold them. I sold the 250s at 6 and closed them at 5, and then I closed the 240s at 5 and closed them at 3. They're now back to. They're basically where they were when I closed them yesterday into a 6-point down move, which tells you that volatility's actually come in here.
That's right. I was just showing it up on the screen. It's an IV rank of 24, but it's upticked ever so slightly to, less than 1%.
And they've taken a lot of, so if you look at kind of the change column, this is just and I have this pulled up on mine. Sorry, I should have
please do.
said that. But you can see, the puts haven't really moved at all into this down move. The calls are just getting vaporized here on the upside. So it tells you a lot of the skew is kind of coming out into what is a relatively inside move. I mean, considering yesterday the stock was up like $12, we were basically to the low of yesterday,
right?
Which was a sort of gap up. Tells you that upside volatility is kind of getting taken out, which isn't a shock with the way Bitcoin is acting today.
Very good, sir.
Should we do earnings? We got a couple minutes.
We don't.
What do we got?
All we have is OKLO, really.
Yeah, I think Disney is. We have Circle tomorrow before the open. We also have Cisco is after the close. Disney, I think, is Thursday. So Disney's Thursday.
Yeah, and Disney's kind of a dog. Thursday, the 13th. Yes, you are correct.
Yeah. All right.
You want to look at OKLO or?
I have some short delta there. I'm interested in getting more.
Short delta.
What would you like to do?
Down 448. That's a good position to have.
I have the 80 put calendar spread. Basically hasn't moved. I'm out 30 cents.
Cisco C.
Or no, in OKLO.
Right. No. And I know Cisco's the other one that has earnings, but that's on the 12th after the market closes on Wednesday. Beyond Meat and OKLO are for today. That's all I got.
I think we do.
Can't do anything in Beyond Meat.
No, OKLO is. Did you like what we just did in like Tesla / BE? Are you afraid of the upside?
In OKLO?
Yeah.
You can always define the risk, but you're going to pay a lot for that.
Yeah. Well, I was thinking about doing like a call ratio or something, like a wide one.
Oh, you want to hurt yourself?
Yeah. That's what I'm asking you. Are you afraid of the upside?
You in the 3 days?
I was going to do the November monthlies.
November monthly with 10 days.
Yeah.
Markets, when you look at them, are really not. I mean, they're really horrible.
And it looks like they're taking vol out too. If you look at the
Ivy rank of 69 is definitely coming down, although it does look like it's rallying a little bit today. It definitely come in a little bit.
All right.
I'm ready to take a quick 90-second break. I got option trades today where people find out the real.
What are you going to do?
I'm not sure yet. I got
tease.
I wanted to kind of buy Costco. I was hoping it would be down $2 or $3.
I was actually looking at Costco too.
Yeah, it's up
tough
small.
One.
Ivy rank is
wide put spread is only like a couple.
Yeah, no, I was going to do some sort of diagonal spread in there. I thought.
Look at you.
Yeah. I don't know though.
Watch you so well.
We'll see. You'll just have to watch option trades today every Tuesday and Thursday immediately following this message. We'll be back in 90 seconds. We got Liz and Jenny next. Peace.
Peace.
At tastylive, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The tastylive research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
welcome to the Tuesday edition of the Liz and Jenny Show. My name is Jenny Andrews. This beautiful blonde, back from Florida, is Liz Deerking. You made it.
I made it. Barely, but we made it. Flights were delayed. It was like planes, trains, and automobiles. I was going to say and animals. No, but we're with the animals today. We are back on the floor of the SIBO with the SPX traders. I shouldn't call them animals. They're very distinguished gentlemen behind us, but they're very calm today.
You know what they said? I talked to a few of them. They said they were really busy yesterday. And now it's interesting because we get their perspective. They said a lot of put buyers yesterday. Now we'll often say that, or they'll say that, and then we get Frank's SIBO volume. It says more calls than puts trade.
Yeah. But you know what though? This is a slice. So what they're seeing is the open outcry of it, and not necessarily everything else. And the open outcry. Correct me if I'm wrong, Jenny. I know we were told this, so we're gonna butcher it. How much is open outcry versus traded? Because Vince talks about it this weekend. He said 4 million contracts are traded with how much open outcry?
800,000.
I think you're right.
I think something like that. So again, it's like if the order's over a certain size, it comes to the pit for open outcry. A lot of the orders are just filled electronically, and then that's not coming. You're not hearing that in open outcry. So when the traders told me a lot of put buyers yesterday, they didn't know what's trading electronically.
No, they don't know what's trading electronically. So that's the one thing I want to put it in perspective. We always talk about that here. We really don't know, and they don't know. But if there's a lot of put buyers coming in, that means they were put sellers, so they do know that.
They know
right?
that. They were selling
if you know you're selling a lot of puts, you know who's doing the other side.
And they said, so the guys I talked to said they were selling a lot of cheap puts yesterday.
Oh.
Cheap puts. They were selling a lot of cheap puts. And you know.
Well, zero DTE, it's cheaper now. Can we, would you want to pop in the platform? Because I just want to show, because of these zero DTE SPX options, thank you. Because of the zero DTE SPX options, it is cheap. So before, to buy insurance used to be very, 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 very expensive, right? Now take a look at this. You can go down one standard deviation and your puts are only $2 versus if
that's for a day. That's for a day.
Versus if you go out in time, I'm just going to go to 9 days. They get very expensive again. Look, very, very, you can go, you're pretty far down. It's $10. So because the zero DTEs came about, that is the biggest game changer I've seen is even the bigger clients, it's cheaper for them to hedge for a short amount of time.
Now, you have to look at both sides because the theta per day is greater at the money. So if you're going to buy a 1 day, buy a 1 day, buy a 1 day, buy a 1 day, it's going to cost you much more than going out and buying a 5 day. So the theta decay is greater in the daily. So I know they look cheap for the daily, but if you're going to buy that protection every day, that's going to cost you a lot more money in the long run.
Yeah, I know, but I mean, I did read an article saying that people are buying that very short-term protection because they think something's going to happen. We've got something imminent right now about maybe the government's going to open up, and are we going to go up or are we going to go down? We don't know, but they can do it very short-term instead of saying I want to go do a monthly or a 9 day or a 7 day.
Hey, I like it. I like it in the short term because you can get it.
Yeah.
You can buy it for a day. It's not as expensive as buying it for a week or buying it for a month. If you think there's something going on. There's something going on.
Right. Correct. So these guys, like I said, it's been pretty quiet. We haven't heard much from the VIX pit either.
Well, since we've walked in the door, SPUs are down 20 and they're still down 20. They haven't really moved much.
No.
So we'll see. But we are still waiting for the day that the shutdown is over and waiting to see what the market will do.
I mean, I was out of commission yesterday. What the heck did you do to the market? Why was it up so much? UNTP, while I was watching the show, it wasn't up that much. And then after the fact, it went.
Well, at first it was up, and thoughts that the shutdown might be ending soon. And then there was some announcement, not an official announcement, but word on the street. We might have a bigger rate cut in December than we think, maybe a quarter point or half a point. So I saw that flashing through the news. I don't know. Take a look at bonds. Let's take a look at bonds and see.
Bonds are closed today.
Oh.
Yep.
Oh, happy anniversary, Mom and Dad.
Oh, yes. Happy anniversary. They are like the cutest people ever. It's their anniversary. Jenny was saying about how it's a floating day, so she always knows it's on November 11th.
Well, Veterans Day. They got married on Veterans Day.
Which is November 11th, which is a floating day.
I only said a floating day because Liz said, why don't they just move it to Monday and have everything closed on Monday? And I said, well, Veterans Day is always November 11th, so shout out to all the veterans. Thank you for your service. Happy anniversary to my parents.
I know, I can't believe it. So they got married on a Saturday, but now it's a Tuesday.
All right, November 11th.
I think they should always observe your anniversary on the Monday before it.
Well, it's kind of like Christmas. It's always December 25th. Doesn't matter. They don't move it to a Monday.
But they move everything else.
Well,
Columbus Day moves. Indigenous Peoples Day moves. Everything is either on a Monday. This is the only one that floats that I know of.
Yes, Martin Luther King Day moves.
It's a Monday. It's observed. The one that stays, I think, is Juneteenth.
Juneteenth stays.
Stays. It's a floating day.
That stays. So anyway, November 11th, thank you for your service to all the people out there who served. My mother-in-law sent us a list of everyone in our family who has served, and it is crazy. Now, my grandpa was from a Navy family. His whole family, sisters, brothers, they were all Navy people. My in-laws, my father-in-law, Army family.
We're Air Force family.
You're Air Force family.
Almost all my cousins Air Force. Actually, I shouldn't say that. Air Force and Army, and we have a couple Marines.
Okay.
But I have a lot of cousins.
Oh yeah, you do have a lot.
I have a lot of cousins.
Yeah. So anyway, Veterans Day, a nice day, and the question today was, why are we here? Why is the market open? But it's always been open on Veterans Day.
Yeah, it's always been open on Veterans Day.
Been open.
My question is, why didn't the kids have off school on Monday?
Oh,
why give them off a random Tuesday?
Their kids are off in the middle of the week and a random Tuesday.
I was like, what do you mean you're off? Get to school.
Anyway, take a look at bonds.
Frank was telling me bonds are trading electronically.
Oh, that's right. I keep saying take a look, because yesterday...
They're closed.
Yeah. Yeah. So yesterday, I didn't see, go to yesterday and see, was there a big move intraday? Did something happen? If you go to the, minute by minute and see any kind of move intraday.
November 10th. It doesn't, wait, hold on, from high to low.
You're on a week.
I am on a 1 week, you're right.
Just go to a minute, 5-minute bar. Yeah, go to 5-minute daily.
5
minute, go weekly or whatever, 1 day or 2 day. Yeah, not 2 year.
No, I'm going to go to...
2 day.
I'll go 1 day. There we go.
Well, 1 day's today. I want to see yesterday.
Okay, 2 days.
Or I guess there we...
you can see it because it's not open today. Here we go.
I just wanted to
That's what I'm saying. This was yesterday. You'll see this is... Oh, here's the 11th.
No,
that's
today. All today. So I just want to see yesterday if there was any kind of...
No.
No. Didn't really do much.
Didn't do much of anything.
Well...
I'm going to change my charts back.
Well, but okay, so look at that. You see 8 a.m.
Today or yesterday?
Well, if you look at 8 a.m., we're 116.28, and now we're 117.17, so it moved up quite a bit from.
But we open at 8:30.
a.m.
We open at 8:30. We open right here.
But again, the bonds, I know they're not really. Can we trade them?
I don't know.
If we have short puts in our bonds, we have short put spreads in bonds. What are they doing with the up move?
So I'm going to put a GTC in for this anyway, 50%. And I'm going to send it. It'll go.
So I can see, actually, Liz, I can see right here, and I'm going to tell you, I had a GTC, and this is why it's good to have GTCs in. I have a couple bond positions. I had a GTC in for my position. My bond GTC, my personal, not our account, hit at 721 this morning.
Good job, kid.
So that's why it's good to have GTCs in.
I think so too.
Yeah.
Okay, what did you and TP do yesterday? Talk to me about it.
Anyway, 721 in the morning. They were trading at 721.
So the futures are trading electronically.
Yeah.
So what did you and TP put on yesterday? Did you guys trade anything?
If you go to our filled orders, you'll be surprised. Yesterday filled. Because of the up move in the market, a few GTCs hit early on. So if you see 8:30 in Intel, our Intel Jade Lizard came off for 50%. Then our Netflix put spread came off for 50%.
I don't see the Netflix. Oh, there it is, Netflix. Oh, yes.
Yeah, our DraftKings puts. And okay, so I don't know if you're gonna like this trade, but this was so in the yen.
6J.
If you want to go to our yen position. So.
Okay, hold on. I'm going to our yen position.
Yeah, let's go to our yen position.
6J, got it.
Okay, and it's up very little today. We had a short put spread on. We had a bullish position on in the yen.
Correct.
Short put spread. TP was bearish the yen.
Okay.
So
you added a call spread.
So we added a call spread. And now we have just a very neutral position on.
You know what I'm going to do? I'm going to put them both in separately.
No, I asked him if we should do that. He didn't think so.
How much did you collect on your call spread?
You're going to have to go to the position and look at the total.
Okay, here. I'm just going to do this so I can see it.
I think
you collected about $1.50, which is fine.
Oh, is it right there? Yeah.
Yeah.
That probably makes sense.
I mean, it's not too far off. I'm extrapolating. I'm off by $6.
$6. Yeah. So I think now it's just, I don't know. Do you want to take a percent? If we're making 50% on one, that means the other one's losing because it's very tight. They're very tight. I almost think this needs to be looked at like a butterfly.
I'm going 25% on both sides.
We close the whole thing for a small percent.
That's what I just did.
Yeah.
Changed it to GTC, went 25%, sent the order. And order is sent, ladies and gentlemen. Order is sent. Okay.
I'm still pretty impressed with myself that my GTC and bonds hit at 720.
Yeah. Because it happens with my natural gas all the time. I trade natural gas all the time.
Now,
which is fun. Okay.
What do you have on a natural gas right now?
Nothing, because it's too high. But that's why I know they trade all hours of the day. All futures trade all hours of the day. Four handles too high. We're up 5% again today in natural gas.
That is the nice thing about the futures. We were on the road. We were on the road with people from the SIBO, people from CME, and we were talking about the difference between the various products.
It's fun.
We love them all.
It was fun to be on the road with Craig and Vince.
Yeah,
they were good.
It was fun. It was fun.
Okay, I know you went through all the pictures and everything yesterday. Anybody that did the SPX trade, I wonder if we are out. Are we out of our SPX trade yet?
No, I'm keeping an eye on it. We got in late because we didn't put ours on until we got to the SIBO floor. We put our trade. I did Liz's trade today because we put it on so late. Usually I'm selling the 30 delta put $10 wide. Today,
I'm just going to show. So you'll do a 30 delta put $10 wide, which would be this. You're only getting $155 for it right now.
So that was too cheap. You have
that's
to
way
put
too
that
cheap.
on. That has to go on at 9, like by 9:30, 9:40. I don't know what time we put it on. 9:30.
9:30.
It was too late. I wasn't getting enough.
So, and then the 50 delta. This is usually wrapped around there. It's always going to be. I mean, you'll get between 3 and 4. Sometimes it's 380. Sometimes it's 350. Sometimes it's 370. That's between 3 and 4.
So we put on the 50 delta short put $10 wide. I took in 330 when SPOOs are down 20, SPOOs are down 16. It's up $50.
Okay.
So it's not off for it's a winning trade, yes, but not
a winningest of winning trades.
Maybe it hit up $60, so maybe up about 20%.
Okay.
But we put in a GTC for 50%. Maybe that's too aggressive.
No, I mean honestly, you just need a little time to pass. I mean, it's only up 4 points. If SPOOs were up or unchanged, we'd be out.
We saw they need to be up about like 10, 11 at least.
Yeah. Or time to pass.
Or time to pass.
Or time to pass, whichever comes first. Okay, Jenny, we have live tweets. We've got Kai's study. We've got some other things to do. We've got one earnings trade today that's going to either make or break one Jennifer Andrews, and that's OKLO.
Again, I keep telling myself, it's more of a long-term investment instead of a quick in and out. Let's just make money quickly. So I'm okay with my Oklo position. I'm riding it through earnings. I'm not doing anything crazy. My downside ratio spreads I put on, it's blown through them.
Okay, so we don't have anything in this account. So for somebody who doesn't have something in this account, we're going to go through a couple processes. I'm just going to grab the expected move. I just want to see how much a put is. I think it's very expensive. $3,522.
Yeah.
Way too expensive for us to throw a put in there.
Now on the road, Tom did his building a portfolio, and he put on a Jade Lizard and Oklo.
He did, after you said it's got a lot of call skew.
Yeah, but he got locked at $5 on $5 white call spread, and he went further out in time with that because
so
that
he
was more of a.
He was in the regular December, yeah.
Regular December. Look at that 30-35. What are you getting?
I'm almost positive it was something like this. So he got $4.60 or something and $1.
Yeah, getting your break even to 75.
Yeah.
Mm-hmm. And you can get a lot of premium in Oklo. I have.
It's not bad, but I just want to price out the diagonal.
On the heels of meeting the nuclear engineers in Austin.
Yes. What was their name? What was her name?
She had her name was unique, and I don't remember.
I know.
What do you?
Okay, so this is $12 wide for 6. It's over 50%.
Yeah, that's expensive.
That's expensive.
On earnings, we love to see a third. We love to get them for a third.
Do you know what I thought was fascinating? Okay, bear with me for 1 second. Do you remember when we were sitting on stage and Tom's like, we're going to do a diagonal? I mean, that's my voice of Tom. We're going to do a diagonal in Apple. And then he did some weird diagonal, remember? Where he went,
oh, yeah.
So for his diagonal, and I was like, and that's why you held up the sign, bad trade, bad trade.
I know. We won't pick on him since he's not here to defend himself.
No, but he bought something that was pretty far up, so he went and sold.
It's a common, I don't want to say mistake of a diagonal, but often people will look at a diagonal and end up paying more for the diagonal than the width of the spread, which we say all the time. You don't want to pay more for the diagonal than the width of the spread, because if that stock skyrockets and it blows through, you could end up losing on your diagonal.
We've got a whole crew coming through. Hi guys. Where are you guys from?
LBN.
Nice.
LBN. Oh, from Michigan. They're from. Oh.
Finance club? I like it.
Club from Michigan. They feel like they're right at home. It's snowing and 30 degrees here, so.
Yeah. Good job, guys. Go finance. That was fun.
Yeah, that was cute. That was a big crowd.
I bet they're taking them through to take off their coats, or either that or they're going to make them wear their abominable snowman coats.
They're going to take them over to the bell. Maybe you'll see them in the background by the bell.
Oh, I wish we were, it was great. We're in a different setup today, and I'm not knocking, our crew is amazing, but we used to be able to see them from up top. They'll be up there, right? So they used to be right above us.
I know.
On that catwalk.
Maybe they'll take them back to the bell. Maybe we'll see the whole crew walking around.
I don't think so. I think they're going to be
upstairs.
Mm-hmm.
Yeah. Anyway.
Yeah.
That was fun. It's nice when a big school club comes.
I know, I love it.
I don't know, would you say they were high school or college?
I'd say college.
Yeah, they look
so. And like I said, that's how I became president of Financial Management Association. I walked in and I brought everybody. Well, before I worked there, I put a field trip together for our entire financial organization to come from Charleston, Illinois, to here.
Nice.
Yeah.
Nice. Yeah. And back then, it was very exciting on the floor.
Very. Very exciting. Okay, kind of back to this, Jenny. This is what Tom was doing. To your point, sorry we got distracted by lots of college students coming through. Although, fun fact, I am going to be talking to one of JD's in his fraternity today when he's like, what does your mom do for a living, when they saw his last name. So I'll be talking to another options trader today. Okay, look at this, Jenny. Look at the Oklo. I'm paying more. This is what Tom did. I'm paying $4 for a $3 wide.
Again, but like we're not. I don't want to pick on him. He's not here to defend himself. He's not here to defend himself. He did a diagonal where
we picked on him on stage. We said we would have set it up differently.
You know what? It's tough. And here's what was I think hard for him on stage. He wasn't at the platform, and the monitor behind him was still hard for him to see. So he's trying to set up trades like flying blind. Like he's just standing on stage trying to shout out trades to Tony, Tony's trying to put him in, and he was kind of flying blind. Like he didn't see the pricing when he was picking the strikes.
I still think it's a weird setup for a diagonal.
Oh, if we're going to do a diagonal, we've got to make sure the diagonal is wider than what we pay.
So, and you can do that, but then there's still like the price. So that's what I'm saying. If you're a bullish Oklo, what would you like to do bullish in Oklo? Do you want to just sell a put spread?
I'm not necessarily bullish in Oklo on earnings. I'm not going to.
Although this isn't bad. The 195, which is in the money,
yeah,
for 142.
Just sell that. Wait a second. Oh, you're just selling a put spread?
Yeah.
Can you go further?
Sure.
Or do.
What if I did 95? No, you're 95, 92. 50, I'm not getting 50 cents. I'm closing this up.
It's tough. I mean, here's my personal opinion on Oklo. The naked options have a lot of premium, but if you have to spread it off, you're paying a lot to spread it off.
And I find this odd that it's 6, especially on a Monday. Maybe that's why it's so expensive.
Tuesday.
I'm sorry, it's on a Tuesday. Maybe that's why it's so expensive. You're paying $6.60 for a $12 wide. I like a third. Yeah. I like less than half.
Yeah, a third on earnings. Usually a third on earnings.
Yeah.
So again, whatever. I have a long position there. I have shares of stock in there. All of my downside ratio spreads, it's blown through them all. I am just long stock in there. But if it's down tomorrow, it's down tomorrow. This is not a quick in and out position. This is a long position. You know what is a position that I have which has been down, which I wouldn't mind selling puts in? Southern. Do we still have our Southern puts?
What is that? SO?
SO. Southern Company. So we have had. I thought it dropped down. Oh, wait, no, you're still in the 5-minute, 1-day chart.
Oh, 5 minute?
Yeah, we'll go back to a day. We'll go back to the daily.
Hold on, 1 day, 20 years.
Yeah, and so when you look at this, Southern has dropped a little bit. We got a new cameraman on the scene.
Great, your nephew is now our cameraman.
I don't know if he's losing his job and they're training him to become a backup cameraman.
We saw him this weekend.
Probably.
Okay.
It has dropped a bit. There's still a 22 rank. There is no earnings on the horizon. Dividend is right there.
In December, can we 80 cents on the 87? Ooh.
No.
How about all right, the 90.85. Do the 90.85.
That's a number I can live with. You're using 385. You're making 115. It's down on its luck. I'm just going to ship this.
Down on its luck.
Down on its luck. Filled. Okay.
Filled. Oh, and as that filled, I'm taking a look. Liz, we're still okay. So that SPX put spread, collecting 330. It's up $130, but that's only 36%.
You can take it off. So that, do you remember, okay, if you think back, and we're going to have another one of Jacob's wonderful studies tomorrow, but if you think back, the 35 is okay, 50 is okay. They're all okay. Everything's okay.
They're all right. They're all okay.
What is that SNL skit? And gosh darn it, people like me. What is it?
Smiley.
Guy Smiley.
That is Guy
Yes.
Smiley.
And gosh darn it. So if you want to take it off for 35%, go for it. We don't have it in here. I actually think I would lower my bar a little bit if I were in here.
Usually I take mine off for 35%, but
you're farther away.
Yeah. And so I asked Jacob to study, and you could ask him to study whatever.
Do you want to know why I go with 50? Because the study of double dipping, I figured if I'm taking it off for 35, I'm waiting for 50.
Yeah, right. Instead of taking it off, putting it back on.
Yeah, taking it off, putting it back on.
Okay, got it. So Jacob asked us yesterday, what do we want him to study for tomorrow? You were in Florida, so you didn't respond. I don't know if you saw it.
I didn't see the teams. I did. Why don't you just tell me what you sent to him?
So then I said, well, Jacob, this is what I do. Can you study what I do? And then next week you can say, Jacob, this is what you do.
I'm doing what Jacob tells me. Like, I'm legitimately following Jacob's rules that he's already done before. The $10 wide 50%.
So I'm having him study what I've been doing, and if it's terrible results, I'm going to have to change my method.
Yes, you are.
Because I've been putting put spread and call spread on separately, and GTCs for each separately.
Did you tell him the deltas and smaller call spread?
Told him the deltas, told him the widths, told him the GTCs separately, so we'll see what the results
That'll
are.
look good, yeah.
We'll see.
I'm trying to be consistent. I tried to follow Jacob's study where it's 50%, at 50 delta, $10 wide, 50%.
Yeah.
And I've been mechanical with it. I put it in a separate account.
Oh, that's good.
And it's been doing well. Yeah. I mean, when I say separate account, it was a couple weeks ago, like a couple days ago, so it's not that much.
That makes sense. That makes sense.
Okay, so let's go. Do you want to go to let's go to Kai's study real quick, and then we'll go to Twitter.
Yeah, sure. And I'm pushing our trades out on the follow page.
Okay, so Research Corner. This is something that Kai sets up to us. You guys have seen it week after week after week. It's a really cool thing that he does, and I like looking at it. So this is last week. The U.S. government shutdown reached.
Did our GTC and IBIT hit today?
I can take a look.
Go to IBIT, see if it's there.
That was today at 8:30.
So our GTC and IBIT hit.
Yeah, today at 8:30.
Okay, I just opened up our filled orders and that came up. That's good because we were so worried about our IBIT.
I don't know.
Or this is a new one because crypto's not up. We'll need to put on a new one. This is one of them we want, the weekly.
And that's why we went very, very short term.
Yeah.
So we can do that first if you want.
We'll have to put a new one on.
Let's do that right now. It's our show. We can do whatever we want. IBIT. So I'm going to go to the 3-day, right? Or did we just get out of the 3-day?
We just got out of the 3-day. Go to next week's.
Okay, so we're going to go 10-day. Now, what we have been doing is selling a call spread for, I'm going to bring this down. That's 17 cents. I'm going to bring this down.
Yeah, that's fine. I mean, so we get 20 cents on the call spread. We use that 20 cents to buy a put.
And then we pick a call put.
Another put for about $1.
Here we go. 96 cents.
Yeah, so here we have a Jade Lizard. We kind of.
Well, we walked backward into a Jade Lizard only because, here, I'm going to watch this. Watch your buying power effect down here when I remove this, okay? I'm going to delete this leg. It goes from 400 to 2,000 to 2,200. That's why we're buying this leg.
Otherwise, if we didn't worry about it, I'd probably just sell the put for $1.
And that's right.
Yeah, but since we want to buy something to release capital, we're out of our SPX. We're out of our SPX.
Me too.
Yeah, we 50%. Put it on together. We put it on
50%. That's pretty good.
50%.
Yeah. It's been working.
Good thing I didn't rush it and take it off for 35%.
I'm telling you, you're like, you can ask Jacob to do your studies. I'm following Jacob's mechanics.
All right.
I like that, and I've been pretty consistent with it. Okay, so IBIT were filled.
Okay.
Now I'm going to go back to Kai's study. So the U.S. government shutdown reached 41-day, marking the longest in U.S. history. Over 80% of SPX companies, S&P 500 companies, beat Q3 earnings expectations, one of the strongest quarters in years. I did not know that. AI-related stocks continued to report strong results, though market reactions were mixed. So even though they were strong, you did get a little bit of that back and forth.
Love it.
Yeah.
Great. Thanks, Kai. Kai's wonderful putting this recap together. Now, it's going to be interesting because last week we had a very bearish week, and this week we started the week off quite bullish.
Yeah, yesterday was very bullish.
Yeah.
And so then the CPA data is Thursday. We'll see if it's CPI. We'll see if it's coming out. I thought that was tabled.
Right. I don't know if we're getting it or not.
Yeah, I'm not sure either.
Maybe it'll be over by then. Who knows? Have you looked at the prediction markets?
For the CPI? Or
no, for the shutdown.
No, I haven't looked at them recently. The last I heard was November 16th, which is coming up. That's next week.
Yeah, today's the 11th.
But they move. The last time I looked, it was last week, and so they move all the time.
Right. So okay. You can see week of the 27th. That was.
No, to your point, last week was very bearish.
Last week was the week of November 3rd, and you see that. What took the biggest hit was the NASDAQ. NASDAQ down over 3%.
Yeah, and Kai said that. He said a lot of the tech stocks, even though they beat expectations, the results were mixed in what the market decided to do.
So looking at this and looking at the percentage, S&P is down 1.5%, NASDAQ down 3.1%, Russell down almost 2%, and Dow Jones down 1.2%. If you pop back in your platform,
okay,
and you go to the side on the sidebar, just hit the second dot so we can see the percentages of like ES, NQ, so you can see the percentages. I thought this was a really interesting trade that Tom did in his building a portfolio. It was
he went with this. He went with it instead of against.
Yes,
which was so anti-Tom.
I know. So taking a look at SPOOs, NASDAQ, Russell, I kind of throw the Dow out because
just throw it out.
Just throw it out. Real traders just throw out the Dow. Okay, so we've got SPOOs down 0.19, NASDAQ down 0.6, and Russell down 0.28. So he took the weakest.
So it was funny because he'd be like, Jenny, what is the weakest of these? And you'd be like, it is the NASDAQ right now.
Because it was hard to see the board. Okay, so anyway, he took the weakest and sold it, just for a quick pairs trade. Took the weakest and sold it, and the strongest and bought it. So here we'd be selling the NASDAQ, and which we could use MNQ as a smaller product, and then buying we'd be buying, again, throw out the Dow, we'd be buying ES.
Oh yeah, you'd be buying ES.
Yeah, we'd be buying ES.
So do you know what I thought was insane too? He went in and did it separately instead of the pairs trader.
Yeah, he didn't even. I don't even know if he knew the pairs trader existed.
I don't think he knew who the pairs trader was because I was like, wait, what? Why didn't you just use the pairs trader?
So, so with the NASDAQ being the weaker, selling the NASDAQ and then buying ES. But can we do the micros, MNQ, MES?
Yes, MES.
But again, what's the notional to notional? I think you got to figure that out on.
Hold on.
I think we have to figure out the notional by actually trying to buy one MES.
So here.
And that is buying power 2,300. Okay. And buy one MNQ. You don't have to sell it, just buy it. And see what the notional, what the buying power.
It's pretty 1-to-1. Because you're not going to go 2. That would make it.
It'd be 2. You almost have to go like 3 by 2. 2 MNQ, 3 MES, or something.
And that's going to be a lot for us.
That's going to be too big.
Yeah.
That's going to be
even
too
though it's
big.
Even though it's little, it's too big for us.
That's too big.
For this account.
But it's a pair, so when you're doing a pair, honestly, your risk isn't like a naked
no, but the buying power is. Because watch, here, I have 1-to-1 in right now, which I know would be 2 to 3, but I'm just going to show you what 1-to-1 would be. I'm going to clear this out, then I'm going to go review and send.
Or components must have same product type.
What?
Maybe that's why I didn't use the pairs trader.
Did they change it on us?
Wait. MES. So you're buying one.
What? Buying MES, selling MNQ.
Order. What if you hit send?
I don't want to hit send. Should I hit send?
I want to see.
We can trade out of it quickly.
Error code. Yeah, maybe with these you can. Go. You know what? Hit that. Here, where are you? Go back to pairs trader.
Yeah.
Go back to pairs trader. This is gonna be a lesson on the pairs trader. Hit that little box so we can see presets. Go to presets.
This is basically the same thing.
No, but go to.
But you could do SPY, QQQ. It's the same thing.
But there's no good margin on that. So.
These are your pairs traders.
What?
That's what I'm saying. I'm gonna hit SPY, QQQ.
Now. Don't even bother.
No, I just want to show it's the same thing.
One share by one share, and it's never going to come off. I wouldn't fool with it.
It's allowing me to.
I wouldn't fool with it.
I think that's why he didn't do it. Maybe you just have to have.
Maybe you have to just do future, buy the future, sell the future.
Smarter than us.
You can't do it on the pairs trader. All right. Anyway, I thought that was interesting. He took the weakest and sold it, and took the strongest and bought it.
Which
that pair came off by the end of the show.
Which I thought was anti-Tom.
Yeah.
One fun fact too, and we are in here, you can see the SPOOs are now down 21 again. What I love about having those orders in, we say this all the time, I'm selling just the puts, it is back down to a level where it wouldn't be off.
Now,
you got one
SPOO's down 20, would you put it on again?
No.
Old me would have.
That's why I took 50% instead of 35, because I would rather wait for 50 if I said if it's 35 and I'm going to put it back on again.
Yeah. With SPOOs, old me would have been like, I put this on when SPOOs were down 20, then I took it off, now SPOOs are down 20 again, I'm going to put it on again. But then you never stop until you
get a loss.
Until you have a loss. And
That's how I am at the casino.
Yeah, I blew all my profits.
That sounds like me at the casino. Because if I win something, I'm staying there until I give it all back.
Yeah.
That's not me in trading.
That's my mother at the casino.
That's me at a casino too. I never walk out with anything. Because I would rather be like, I want the big win or nothing at all.
Yeah. I don't. That's how Liz will go in and just like throw all her money and hit max bet. She's either going to go home with $1 million or nothing.
That's right. I don't. It's 100% correct. Okay, so let's go back into this and we'll get this done. The index weekly performance options drive. Okay, so here we go. This is what I love to get to. The expected move. This is the expected move for this week. It is $117.
Oh, there goes the vinegar.
What the heck?
If you get to the bottom of why it smells like cleaning. Yeah, but why
Who
now?
is it?
It's always right in the middle of our show.
It's all day, every day.
Who's cleaning something right now?
All day, every day. Someone just sprinkles around a bottle of vinegar.
I know.
It's crazy.
It is pretty crazy. All right, so the expected move is one, and this is SPX. So I'm going to go to.
And I'm going to tell you, the expected move for the week right now is 68. For the rest from now till the end of the week is 68. Yeah,
and it was,
from now till Friday.
117.
Yeah. Every day, it's ticking lower.
That took out a lot. That took out 50% of it?
Here's what I don't know. And I hate to go back to this, but every day we're here around this time, suddenly we're overwhelmed with the smell of vinegar, but we have never seen anybody. We have never seen anybody cleaning.
I've never seen anybody cleaning, and I know how you clean the floor. And they didn't use vinegar.
I don't think they don't use leaf blowers anymore because they don't have paper tickets. It used to be, it was like, think of, what has multiple copies, like an old checkbook where you'd have multiple copies, and you'd write, buy the call tickets were red, put tickets were green. You would write your order. I bought these calls, this many traded with this acronym, and then you take one ticket, give it to a runner.
One ticket, put it in the belt.
Yeah, in the belt that goes to the.
One ticket and throw it up in the air. We're not kidding. One ticket would go in the air.
Yeah, so then at the end of the day, they would come with a leaf blower and blow all the tickets away.
Yep.
But they aren't tickets anymore, so they don't need a leaf blower.
That's why there's the vinegar. That's why there's the vinegar.
But
which would have been helpful when my water broke on the
It's
trading
coming
floor.
through the vents.
Yes.
We're right below the vents. It's coming through the vents.
I think you're right. I think you busted the case wide open. I think you busted it wide open. All right, now I wanted to show what Jenny was showing right here. This is the weekly. Here's 67 for the rest of the week. How much were we up yesterday?
105. It was 104, 105. I don't know.
105, and then now we're down 21. So remember, the expected move for the week is 115.
She always wants to add and subtract every day and see if we can get there.
The odds makers are pretty good.
We'll see. I am still waiting for the 3% move when the shutdown is over.
Up or down?
I think up. That's I still am holding on to my, what did I think we were going to hit?
7,000. I'll tell you what you thought we were going to hit. 7,000.
60, was it? How high did we get? How high was SPY? What was the high? It was 68, so 69. It's 68, 60, 683, 685.
Yes.
So that we're going to get to 69.
You thought we were going to get to 700. Your calls are 700.
I don't know. But we didn't get there.
No, we didn't get there yet. And I think we might before the end of the year. But let's take a look at this now. So these are the major assets and their IVRs that have moved quite a bit. These are big moves. Look at the natural gas IVR. Not only is natural gas up so high, but its IVR is down 45%.
Yeah, IVR is down.
Yeah, Bitcoin's IVR is up 50% in a week.
So with TP, when I had TP on, we put a new trade on. I think it was in Ethereum. Because we were back and forth. We had a question, and I'll ask you this question. I'd like to see your answer.
This ETH? I thought we had ETH in before. You put another ETH trade in.
We've put in that December Jade Lizard, right? If you go to ETH yesterday. yesterday. Okay. So kind of like a Jade Lizard, 30.31, 23.19.
I'm going to put a GTC in for that, okay?
Now, I want to ask you this question and see what you think. Somebody had a put spread in ETHA and expiring in 11 days.
Is it yours?
No. Mine are just, I've gone like straight out naked options in ETHA. So I now when naked options, just keep rolling them. Or turn them into like a zebra or long, whatever.
Okay.
Now, someone had a losing put spread in ETHA. It was far, far, far from where ETHA is trading. It was like 33, 30. It was far. It was like, I don't want to say no chance of coming back. But
in the 11 day, which was 10 days.
In the 11 day. And so they said, I've got this losing put spread. What should I do? And I kind of said, if I've got something that's so far away,
I would change it almost to a zebra or an individual option. But TP doesn't trade that way.
That's what I said.
TP doesn't trade like us.
TP wanted him to sell $2 wide put spread for 35 cents.
Did you? Yeah, I'm glad you went with the Jade Lizard. Yeah.
I know.
No, I mean, we have a tendency, like I will, if I have something, it's because this, you're buying that 20. If I'm looking at this, I know I'm only buying that 20 just release capital because ETHA and IBIT, we know they're a capital trap.
Yeah,
capital trap.
Capital trap.
So that's, you're buying that. So you're in it for that short put. And if my short put goes deep in the money, just like I do with anything else, I'm either buying an individual option because I want that upside potential, or I'm doing a zebra.
Or I'm turning them into a zebra.
Correct.
Something where, one quick bounce and you're out, you made your money back.
Yes.
Like,
Although, I will tell you, to TP's defense, and I'm willing to say this, ETH's IV is a 71 right now.
That's what he said. He said that, because I mentioned doing a zebra or just short-term debit call spread. You get a quick bounce, you get in and get out, bada bing, bada boom, you got your money back. He said the IV is so high, that's why I went with the Jade Lizard.
I could see that.
Yeah.
I mean, I'm glad I'm glad you talked him out of a 30.
Everyone has their own trading style, right? TP will sell narrow put spreads that have a high probability. He'll take 50 cents out of it, but it's hard if you're like trying to chip away at a loss to make. If you're collecting 50 cents and 50% of 50 cents is 25 cents, it's going to take a long time to chip away at your loss.
Yeah, but to TP's defense, I mean, he's a junkie too. Like he's loading up on 50-cent puts.
Right. Yeah. I mean. Mr. Selling SPX puts for 50 cents.
Yes.
And now he's $2 wide put spreads.
Yeah.
But again, everyone's got to find their own trading style, see what works for you. There's not this is the exact rule book.
No, there isn't. I think, even you and I, as similar as we are, our accounts aren't identical.
Right. Yeah, they're not. No, they're not. You've got your favorites. I've got my favorites.
Yeah, and even then, I might do something different. Yeah. It depends on your risk tolerance. Like you say, Oklo is a long hold for you, so you're going to treat it differently than maybe I would.
Like you're always going to be in Palantir.
Yes.
Yeah. Or JD. You're always going to be in JD. Like certain.
Yeah. Certain stocks are a little bit different. All right. I want to make sure. Oh, this was Twitter. I'm going to go back to the other side. I want to make sure we get through these. We'll go pretty quickly.
Frank is reminding us that we're on last call, so we're going to probably save our earnings trades for last call.
Yeah, we will.
So thanks, Frank.
Okay. So crypto market lost over $1 trillion since October. Okay.
Yeah.
That's insane. Natural gas
came right out of Liz's account.
It did. Came right out of my account. And then natural gas prices hit highest target since 2023. Dun, dun, dun. That's why I'm not in it.
I know. It's hard. We talk about this. It's really easy to trade natural gas when we're selling the 2-handle. It's not easy to trade natural gas when
the 4-handle.
When it's trading 4. It's tough.
Not a fan. Okay.
But crude oil, where's crude oil now?
I will go to that for you.
Crude, it's bouncing. It's having a bounce. Do we still have ours or are we out?
We still have our MCO. We are up $8.
You know what? This is a trade. No, this was, we had been in and out of puts. This was a downside ratio spread that we butterflied off, just protection against some other puts we had. So we just can
that just stays. Yes, I was like, that's a butterfly.
Yeah.
Okay, so that's crude oil. Now take a look at this. These are the biggest movers. This was last week.
Okay.
These are earnings. All of them are earnings.
DoorDash down 30%.
Yeah, SMCI, PLTR, Hood, and AMD were all earnings trades, and they've all recovered most of it.
Have they?
Well, here, the only reason I really look at is PLTR. Watch this. PLTR was up so much yesterday. It is down today, but watch this.
Let's take a look at the chart.
That's what I'm saying. That was its earnings, and it's trying to climb right back.
Take a look at AMD.
AMD looks similar. It's climbing back.
Climbing back, but not.
And then what was Hood? Hood was the other one.
But that's a crazy figure, 39%.
Mm-hmm.
Now take a look at CoreWeave, because CoreWeave.
Oh, that's today.
That was out, and that it was a big mover this morning. How much is it down? CRW. CoreWeave is down. What do we? $15. Let's sell poison CoreWeave.
That is a 15% down move.
It does not use as much buying power as a lot of these big dogs, and I throw this into the big dog.
Ooh, that's pretty good.
Yeah.
What about now? This is where, and I'm not advocating this, but this is where Jade Lizard would come into contact. Do you know what I loved? Is all the people. It was so cute. All the people in Texas that said thank you so much for inventing the Jade Lizard.
Oh.
Which was really nice.
Yeah, that was
I love that. Okay.
That was nice. All the viewers that we met in Texas were great. It was amazing to see everyone come out. I mean, people came from all over, far and wide.
Oh, Bangkok?
I know. I posted Jack Chad's picture. I'm like, he came all the way from Bangkok.
Okay, but this is the reason I brought that up is this is where Jade Lizard was kind of invented for. Is if you can get premium on the other side, you might want to, because I don't want to lose the upside if it gaps back up.
No.
So I think you have to decide if you want just a put or if you want to do.
Or we could even go down to the 70, or you could even do a downside ratio spread here if you want to.
Hold on.
The problem here with the $5 wide for us being conservative with buying power is that it's going to use another $500 in buying power.
I just kind of like the 75 for $3.
I like the 75 for $3. And how
I
much,
don't even
I'm
mind
curious,
this. I don't even mind the
70. 77-75 put ratio spread. Normally, I'm not a big ratio spread fan, long duration. The 75-77.
Oh, 75-77?
Yeah. 244.
You're better off just selling 75.
Yeah, let's
for
just sell the
$3.20.
75 for $3. I think this is, I think for me, CoreWeave's back in play.
Let's split the difference. Let's just go pretty conservative with this. Although, look at that. If you bring it up to 75, you're getting $3.
Okay, let's do the TP test. What's theta per day?
Theta per day is $9 on the 75.
$9 using $700, or
$7
using $700. This is a no-brainer.
9.
We're gonna
75 it is. CoreWeave could take us down, but that's fine.
Usually we'll do the 3-day rule and wait for it to shake out, but 13% down move.
That's why I think you're right. I know we're going to collect less, but I'm doing this. We're getting 235. We're splitting the difference. It'll bring our break even down to 70. Then if it goes down, you've got 250 wide in there. Gives me a little bit of peace of mind for no reason. Yeah.
It doesn't matter. If it pops up, either way, you're going to make some money.
If it pops up, we can butterfly it off. Because people were asking that. And I love having TP on. I do. I think TP is a wealth of knowledge, and he's been doing this game for a long time.
Yeah.
But when you were doing the show, somebody was asking a question. They never put the hashtag on there, but they kept putting it on Twitter. Can you please ask TP? Because he's the only one that knows how to butterfly things off.
Huh?
Uh-huh. Uh-huh.
Okay.
And so, if you were going to butterfly this off, what would happen is if it pops up, you would then go and buy this 70 put for less than what you. No, you'd have to buy.
Okay, but my only other question is, if we were to do a ratio spread, would we bring it into the 10-day?
Oh.
You could do the 82.80 for $90 in 10 days. And then that ratio spread could really matter. If we keep going down, we could be in the middle of it next Friday.
I like it. So we're just going to collect 90 cents for the 82.80. I'm shipping it.
And you mentioned, and I don't want to throw a wrench in this, but you mentioned when you're in the weeklies and you're shorter term, those other puts are cheap. If we really wanted to define our risk, you can for 15, 20 cents. You can see.
But we don't need to in this product.
We don't need to. It's not.
But if it were using a lot of money, I would go and buy that 65 or that.
65 is only 20 cents. I mean, it doesn't change the buying power.
No.
You'd have to bring it up to the 70.
I already shipped it.
I'm doing it, the 82.80.
Yeah.
CoreWeave back on the table.
CoreWeave's back. Okay, so CoreWeave's back. I'm gonna actually, I just went to Twitter. I'm gonna go top down.
I feel like I almost feel like I'm in a holding period until I see what kind of hit my account takes when Oclo earnings come out.
Oh my goodness.
I'm in a holding period. I'm not putting on too much risk.
Why don't you let me call you and tell you the news, either good or bad? Don't look at it. Well, actually, we're gonna be on last call.
Oh, we're gonna be on last call.
What time do they come out?
At it. They'll be out, I don't know, after.
Yeah, but are they Apple where it's 4:15? Are they
I don't know.
Amazon where it's.
I don't know.
And Ash Finn? Why I oughta.
What happened? It's that day. Sorry, JD and Liz. What's he doing?
He thinks Louisville is going to beat UK.
Oh.
UK's been on fire.
For basketball
and football. They beat Florida. They've been beaten. Well, this was football this weekend. Like out of left field, they're just beating people left and right. Yeah.
Nice.
Sorry, Ash.
It's that day. Sorry. And so this is for basketball.
Yes. Okay. So now this is. Can you explain the IVX percentage in the options chain? I know the number in the bracket, but I don't understand what the percentage means mathematically.
Okay. Yeah. Sure. Here, let's go to the trading platform, and then go pick and go to SPY or whatever you want to go to.
SPY.
Or we're on CoreWeave. That's fine too. So the IVX, which is the IV percentage.
So this is what we're looking at right here.
Yeah, we're looking at.
I'm just going to open up the December 19th. Okay.
Yeah. So
I'm going to do something else because I want less. I'm going to go to.
So
there.
It's just now that you can see what that IV is telling you, the implied volatility of this underlying, the rate of movement of this underlying, that percent is telling you, okay, the expected move for this period of time is, so what highlight one of them. So
it was this
focus
one.
On one. So if you guys 16% implied volatility.
16.6. This is what he's saying right here for that cycle.
The expected move for this product is 12.4, give or take, in that period of time. As the implied volatility of this underlying goes up, that expected move is greater. That goes up.
So I'm just going to go versus. IV rank right here is 18 in SPY. The IV rank is for 30-day options. That's why I picked a different one than that.
Okay.
So it's usually for 30-day options. So watch, very similar to this. If I'm going to go to December 12th down here, you can see it's 17.7, which is 31 days, which is giving you that 18. That's for 30-day options.
But usually, so this IVX, or implied volatility, that is usually consistent, very consistent for, all of time. You'll see it inflates for individual products prior to earnings, but usually it's pretty consistent.
You can see it ticks up a little bit as we go. There's got to be a little bit more implied volatility as we go farther out in time.
And we used to say, that would tell you, give or take, in a year's time, that's how much this product could be up or down. So if SPY has an 18% implied volatility, that could tell you, hey, that means in a year's time, that could be,
up or down
18% at the end of the year. So when you see something, when you're trading something that has 100% implied volatility, that's telling you that product is so volatile that could be 0 or double in a year's time.
And so the other thing I want to show about this too, I just want to go to something with earnings, and we'll get to all these because these are great. So wait, here we go. So see circle and on and OKLO. Okay, so here I'm going to go to on because I don't think it's actively traded. Here's what I want to show. If you go to the IVX right here, you'll see that the 3-day is very, very, very inflated versus the 10-day, which is 95, and then it kind of filters down. And that's our dead giveaway because the options in that cycle are the ones that are containing that earnings move.
Right, the earnings move. And so, but if you close that up and look at most of them, they're all in that 57, 58, 60 range. And what that implied volatility of on tells you is that on underlying price could be plus or minus 60%. In about a year's time.
In a year's time, not in that cycle time.
Yeah.
So here, if it's 60%, we're not saying it's going to be up or down 30%, 60% in 31 days. That's a year's.
Right. When you're looking at SPY and you see 18% implied volatility, that doesn't mean it's going to move 18% in a month or in 2 months or in 3 months. It's in a 12-month period. It could be up or down 18%.
Yep, that's correct.
So then that's very different than the IVR, which we see IV rank, which is where the implied volatility, where the IVX right now falls compared to where it usually is.
Yes.
Is it higher than what it usually is, or is it lower than what it usually is?
Correct.
So here, at 55 rank, you're right in the middle.
Correct.
So most of the time, half the time, it's in the 60 handle.
But the IV rank is based off of, this is where it gets confusing. This IV rank that you see up in this corner of on is based off the 30-day options.
The 30-day options.
Yes.
So
that's where it gets a little bit.
I know.
There's a good question though.
Trickly.
Trickly.
Trickly. Little trickly.
I don't think so. Okay, so there we go. The Great Gatsby. When picking legs for a multiple leg strategy, how do you choose legs? I know you use delta, but what's the thought process behind your leg selection?
If it's to define your risk, it's just kind of like, okay, where am I not paying too much, and where am I okay with my risk? It's not like, oh, we're going to buy risk definition, buy the 16 delta.
No.
It's not delta. It's what am I willing to give up, and how much is my risk? Am I willing to take that risk?
I always think it's common. That's where the common sense slide comes in. Yeah. Are you trying to say I want to make this cheaper, or are you trying to say I'm afraid of the downside past here?
Right. Am I willing to sell the naked option, but the naked option is going to hold up $10,000, so I'm going to buy a leg so it only uses $5,000? Or do I really want to define my risk? Then I'm going to make it much tighter.
Much tighter.
Then you're looking at a spread, and you're looking at the spread width. Then it's like, okay, I'll sell a $10 wide for a third of the width, or I'll sell a $5 wide for a third of the width. Then you follow that third of the width rule.
Yeah, and talk about trickly. I think that one's tricklier than the IVR one. Okay.
It's only down 12 now.
I know, Stuart. Stuart Smalley, not Guy Smiley. Oh!
Mikey, it's funny you put the Muppets, because when we were at the roadshow, they put Liz and I on the side. We were like hecklers on the side.
What were those guys' names?
So I thought we were like those Muppets that just sit up in the balcony and just make comments to all the Muppets.
Well, they wanted us to heckle, but then they turned all the lights off, and we had signs that no one could read.
Oh, they had us work it. They made Tony run out to 2 different Targets to get poster board and markers. They had us making signs in our hotel room. And when we made all these signs to bring that said like boo, bad trade, good trade, it was so dark in there, no one could read them.
No one could read, and they put us in the dark.
Yeah.
With our signs. So we're just holding up our own signs for our own amusement.
Okay. We are running out of time. Have we got to all the tweets?
No, we haven't. That's why I was going in here. So this is, Liz and Jenny, do you ever adjust your long zebras or synthetic zebras like your Archer position from a few weeks ago, or do you just roll out to a future expiration to give it more time?
Okay, well, I was too busy looking at Arun. So Arun is right below. Arun and his son, it was so nice to see them.
Awesome.
We have met Arun on the road before.
Multiple times.
Arun is, he's been with us a long time. It's so great to see him. And he brought his son. It was so nice.
I know, it was awesome to see him.
All right, do you ever adjust your long zebra or synthetic zebra like your Archer position from a few weeks ago? Do you just roll okay, what did we do with Archer?
Archer.
I don't know what we've done with Archer. Oh, okay, great. Here we had the synthetic zebra, which was the 100 shares with the, there should be a long put.
No.
We probably closed it. Yeah, there would, like, with the synthetic zebra, there's a long put and then a long call spread. And then usually if the long put's worth something, I'll sell at the long put. And then I'll close out the short of that call spread. But that 12-14 call spread is worth nothing, so we don't do anything there. And we have
a strangle around it.
8 short put, 13. Yeah, buy that. We want to buy that 13 call back for 50%.
Sure, we only sold it for 30 cents.
I know, but why leave it on for 15 cents? Like, I don't ever.
That's wishful thinking in Archer if it goes above 13.
Hey, I mean, crazier things have happened. I don't know what has been. Is Joby experiencing the same downfall? Or is like Joby beating Archer, and that's why Archer's losing steam?
No, Archer keeps getting I mean, they're
Joby
both falling.
doesn't look bad. No, Joby does. Archer's like back to the depths of.
It's not that bad. Archer rose from up here. I mean, we've made our bed. Okay, I'm going to get back to Twitter only because I want to make sure we get to everybody. Arun, it was great to see you. Jack Tucker, he's back, baby. He was focusing on trading versus posting, and then that's what I saw last night when I sent you that text.
Okay.
And he's back.
Now, it was very interesting, and I don't know, Jack Tucker wasn't there, but Blue Wackadoo was. When Tom was doing his presentation and he sold the 0 DTEs, he was pretty aggressively rolling throughout the morning.
Blue Wackadoo was?
No, Tom was pretty aggressively rolling.
Oh, yeah.
He was pretty aggressively rolling. Like he sold the strangle, and then he was rolling in
within minutes.
Yes, like as the market was falling, he kept rolling down the calls. It ended up working out, but I don't know if I would be that aggressive rolling.
But I don't trade that way. I don't usually aggressively roll. I know they want to keep their deltas as flat as possible for premium selling.
He was very proud of his.
He's very proud of his 0 deltas, and that's fine. I mean, but that's okay. I don't have a tendency to do that. Don't get me wrong. I'm an overtrader. 100% I'm an overtrader.
But as if Jack Tucker's selling his, and he did a spread like that. Short strikes, $25 wide, and then he would roll down the call spread as the market was going down.
He was rolling down the call spread. So he's now setting his GTCs for 50%, so awesome. And then Fabio says, hello, ladies. If you have a few minutes, could you... There's a lot of tweets in here.
Delta Buster.
Could you explain the Delta Buster?
Yeah, I don't pull up SPY and we can do, basically you could either risk 500 to make 500, risk 1,000 to make 1,000 with the Delta Buster. That's usually how they work. So if you go to Dees, you gotta go to Dees, buy a $5 wide put spread.
I'm gonna go right at the money, right?
Yeah, $5 wide right at the money, and then you could sell a $5 wide call spread at about a short 30 Delta.
So I'm gonna go...
Maybe 30 or 35 Delta. Try that. Yeah, there's $5 wide.
Yeah, there you got a credit.
They all set up that way if you're going out to close to 45 days. You buy a $5 wide put spread at the money, you sell a $5 wide call spread with your short. Where are you, 35 Delta?
35 Delta. I brought it down just a tiny bit instead of the 30.
Yeah.
But so here, let me show you this on the analysis page. But to Jenny's point, if you want it $10 wide, you can make it $10 wide. If you want to make it wider than that, you can. The only thing that's happening here is you've got risk definition, but you don't lose money until it gets up a little bit farther. It's giving you, I would almost argue, it's a little bit of a buffer.
Kind of like a buffer.
It's a little bit of a buffer, but with a bearish trade.
No, if you put on a buffer and then buy a put to define your risk,
this is it.
It's the Delta Buster.
Yes.
It's the Delta Buster. Because I remember doing a buffer and then buying a put, looking at an analysis and saying, this is the Delta Buster.
Yes.
Yeah. It's the Delta Buster.
Yeah, but it's almost like almost reverse because the buffer makes money if it goes up.
Right.
It's almost a reverse.
Reverse buffer.
Yes. Right? It's a reverse buffer because that's exactly what you're doing. It's reverse because the buffer will make money if you go up.
Yeah.
This is money if you go down.
So,
but they're all versions of the same trade. That's why I love options. Somebody I was talking to, it was. I'll tell you afterwards. But he's like, I love what you said. He's like, Johnny likes to just sell puts. He's like, I like your complex option strategies and about how you want to go and do that. He's like, would you be willing to? I was like, 100%.
Doing what?
I don't know. Come talk to people about just complex stuff. People come in with like a good base of knowledge already. I was like, that's my wheelhouse.
Okay, so you can just widen it from here. Let's say you go on your put spread from the 7.
Oh, I'm bad at this.
The 80-75. You move that 75 put to the. And
no,
you can see
I'd have to move it here.
You can make it $10 wide and make your call spread $10 wide, and it should just. Everything should just mostly line up. Yeah.
Yeah. And it does.
And there you go. Then you're risking 1,000 to make 1,000, and you have room if you go to the analysis page. Now you have. It's interesting. Like, I don't know what your market sentiment is, but I don't have.
But so it didn't give us a bigger buffer. It gave us more profit potential with more loss.
More right. Our short call is still at the same place.
Correct.
Around the 30-35 delta.
Correct. So it gives you more profit potential with more loss. I want to make sure we got to everybody.
We're done. No, we have to finish. We are done. We're over time. We're in trouble. We're in big trouble.
All right. Well, if you didn't get enough of us, this is where we're going to land on Bob's list. We are going to be on. I was going to say overtime. Last call. We're not on last call.
Later today. So everybody, tune into last call. We'll be on. It might be the last day you see me because if Oakville really takes a dive, I might not show up tomorrow.
Everybody remember trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you on last call.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Feel like your wardrobe is missing something?
Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home. Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, Tasty Nation. Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. Ow. And of course, the one and only Thomas Westwater. How you boys doing on this semi-red day in the markets?
Yeah, fine, I guess. I feel like the markets feel, you know what I mean? Like you can just tell they're a little sluggish. A little sluggish.
A little bit. But we'll get there.
Yeah,
We always do.
And by when you say we'll get there, do you mean 7,000 in the E-minis?
Yeah.
Yeah.
Gotta go up.
Yeah, it's been a wild ride, that's for sure.
It's a wild ride without a couple of bumps here and there.
I know. You have to have some bumps on the way to the moon.
Yeah.
There's no turbulent free rocket ship to the moon.
No. No.
But yeah, we're seeing a little bit of a red day today. E-minis down 10, NASDAQ down 180. Big disconnect there. NASDAQ leading the way to the downside. You actually have the Dow up on the day, up almost 1%. That's the only one of the big four indices that's green on the day. Bitcoin down 2,700. Ethereum down almost 100, 2.5%. You're seeing some other products down a little bit. You've got XRP futures down 5%. They were leading the charts to the upside yesterday, so pretty volatile there. But we do have some energy products ripping higher. Natty gas up 4.5%.
Yeah.
We've got gasoline up 2%, crude up 1.5%. So big move to the upside in some of those energy products. Maybe because it's, I don't know, negative million outside here.
Yeah.
It was like 2 days, just immediate 2 days of frozen tundra.
Yeah, this is the first day where I went outside. You know, I'm waiting for the shuttle to get here, and I'm a little chilly.
Yeah, I wore a beanie and a scarf today. Didn't think I was gonna have to break that out.
Scarf is a good move.
Huh?
It's a good move.
Really? Wow.
Yeah.
Interesting. I'm still holding. I did wear a beanie today, but no real thick jacket yet. I'm still holding out.
It's supposed to be like 60 degrees on Saturday,
Is
so
it?
I don't know how that's gonna happen.
Oh, it's gonna be weird.
But then again, that's Chicago for you.
Yeah, it's true.
Chicago for you. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. I've got the referral program pinned to the top of the chat. New updated refreshed program where if your friend joins Tasty Trade, you both get $100. $2,000 minimum funding requirement. But yeah, check out that page at the top of the YouTube chat and throw in your trade ideas and questions. We still have a bunch of earnings trades. We'll take a look at a bunch of futures markets. One in particular today that I think is interesting. But yeah, I haven't done anything too crazy in this portfolio. I did close a Starbucks position this morning. So I had a long call that was left over, the 85 strike long call. That was from an earnings trade where Starbucks sold off after earnings. I let the short call expire worthless, and then we got the stock price rally reversal that we needed. So started with an 85.90 call diagonal spread about 2-3 weeks ago, and we got the reversal. So close that for 42-cent winner. That's the nice thing about diagonal spreads, calendar spreads, if you get that reversal.
Did you see how they're making people like kind of go uniform now? You see this or no?
Yeah, I've seen that.
You got to wear like black shirt underneath to accentuate the green apron, and then you got to wear like khakis now too.
I feel like if I worked at Starbucks, that'd probably be my uniform anyways. You know?
Yeah, probably.
Black shirt, probably.
Yeah.
But how do the people feel about this?
That's the thing, man.
Yeah.
People don't like that word, uniform.
I think it's nice. You know, when I was in the Army, you didn't have to worry about what to wear. You put the same.
I knew the Army guy was going to say that. I knew he was going to say it.
Yeah, you don't got to worry about it. Just the same thing every day.
That reminds me of Kirk Cousins in the quarterback show on Netflix. He did the same thing. He's like, I have to focus on football. I can't be bothered to worry about my wardrobe, so my wife dresses me.
Yeah.
It's like, I'm buying him stuff from Kohl's, like the whole 9 yards. But yes, I see the appeal for sure. But yeah, we'll see how the employees react to that. Okay, seeing some questions in the YouTube chat already, but why don't we pop over to the slides and we'll talk about copper. Is this a nice time to buy in for a bullish run in 2026? I'm intrigued.
Me too. Yeah.
Please let us know. What are we working with here?
Well, I'm already long copper. You know, I've been long for like a week. I'm doing it via put spread. I'm only 13 days out, so I'm probably going to roll this position. It's in the green, doing well since I put it on. A little pullback today, so, you know, if we're getting long, it provides us a little buying opportunity from yesterday. But yeah, let's just go to the slides. We'll talk through it. And we're mainly focusing on this copper-gold ratio today. So this is an indicator that's looked at, you know, the numerator is copper, the denominator is gold. So during times of recession or very risk-off market regimes, you get this ratio going down because copper is a, you know, economic indicator. They call it Dr. Copper, and then gold is an indicator for like a safe haven asset. What we're kind of seeing today, you know, it isn't similar to how the copper-gold ratio has performed in the past. The last time the copper-gold ratio was this low was the 2020 U.S. recession, so COVID. The next time it was the 2008-2009 financial crisis. Before that, you know, in recessions, it's always dropped, dot-com bubble, things like that. The 1997-98 emerging market crisis, it dropped hard. But we're seeing it drop, yet gold has gone up just faster than copper has. So kind of an interesting dynamic. And do we have the slides up for this? The first one?
Yeah, let's pop over to the first slide if we can. And
here we go.
There you go.
All right, yeah, so the top bullet points here is from the International Copper Study Group. It's this industry group that puts out forecasts for copper. If you go to the bottom bullet point there, the surplus is expected for this year was 178,000 tons. So surplus meaning you have more supply than demand. That's slightly lower than what they predicted earlier this year in April. Now in 2026, a deficit of 150,000 tons is now anticipated, which compares to the surplus of 209,000 tons forecasted just earlier this year. So from April to now, you know, the copper forecasting has gotten a lot more bullish for looking at price. Concentrates, which is the stuff mined from the ground, is looking at a lot of trouble. At the same time, demand is expected to increase from electrification, you know, electric cars, updating the grid, and this ties into the AI supernova thing. You know, all these data centers require a lot of, you know, these cables that are powering them, and things like that. Those are made of copper, and you need a lot of it because you're carrying a lot of current to and from these data centers. You look at some of these headlines, which are just from the past month. Anglo-American, huge miner, they say their copper output in 2026 is likely to be lower than expected. And then you go to the next one, Freeport, U.S. miner, warns it will not meet contracts with customers, meaning they cannot supply as much copper as they previously told you that they could supply. So the demand side, it's looking good, even though the economy, there's some overhangs of worries. And the supply side is looking like it's hurt from all these disruptions across these mines. So that's pretty bullish alone going into next year. Let's go to the second slide. Now this is the copper gold ratio translated into a z-score. So how far in standard deviations you get away from the mean or average. And right now you see it is at the lowest that's on the chart going back to 1989. 2020, it was at that low point back there. That was the U.S. COVID recession. You go back right before 2010 on that chart, it took a big dive. That was the 2008 to 2009 financial crisis. So copper was plummeting, gold was rising. Again, that's not what is happening today. Copper is still going up. Gold is just going much faster. We got expanding fiscal deficits, monetary policy, all that's feeding into this big gold run. So, the numerator and the denominator, they're not interacting as they usually have been. But if we look at this C-score and we go to the next slide.
Well, hold on. This is a good one. This is a good slide.
Okay.
Tommy Tuesday. This is a good slide because, clearly the ratio tells you, right, when this thing is low, I would say a lot of times it's due to fear, right, in the market, whatever, right? And I think this kind of gives way to what's really interesting right now, in that gold, usually if I would have told you a year ago gold's going to be at 4,000, you'd be like, oh, there's a lot of fear in the market, right? And that's clearly not the case, but gold is still high. So I just think this accentuates how different this environment is right now. The fact that this ratio is here, and compared to other times, we would have massive fear, and we don't. And I can't figure out exactly what gold is really telling us.
Right.
You know what I mean? So I just thought that's interesting.
Yeah, definitely. I mean, this is an extreme situation because, on the chart, it's the lowest going back to 1989. So this isn't usual. It doesn't happen a lot. We've seen these Z-scores, plummet a lot more. If you go back, the financial crisis, you saw it go all the way from +4, which is very extreme, to, -1.75, right around there. We're currently at like 1.9, somewhere around there. So definitely extreme. And the two standard deviations, contains 98% of all occurrences. So we are getting to a level, where it's just extremely unusual.
And I'm not saying I want to short gold. I'm not saying I want to short stocks, but one of them, this probably is telling you one of them might be wrong.
Right.
And which one we're going to find out in the next year, I don't know.
Yeah. And actually, when this ratio gets this low, gold also actually performs well, just not as well as copper. So it rebounds some, but the buying is usually more in copper. So if we go to the next slide, we'll actually see that displayed. This is the mean forward returns for gold and copper, or copper and gold, copper in the dark brown, gold in the gold color, of course. So the 85 events of where the Z-score goes below 1.7. Now, when you look at the forward returns, 7 days, you get a little positive action. But, you get out more towards 45 and 60 days, then copper starts to even outperform gold. And 60 days, actually, almost at 20%. Average forward return after one of these occurrences, that's pretty significant. I mean, you usually don't see things, I guess you call it a retracement or whatever you want. You usually don't see things like that, even after extreme events. So, it's pretty telling here. I'm staying long copper into 2026. As of right now, I'm planning on being long through 2026, not one position, but taking in and out shots, like 45, 60 days out, buying on the dips, selling those rips. That's how I'm going to be playing it. And if the supply and the demand situation continues to look like, what the ICGS says, then, we're very likely going into a bull market for copper. Now, what could derail this? The AI supernova bubble bursting, because that would mean, less data centers, less electrification, and ultimately less demand for copper. But I don't see that happening yet. If it does happen, you revisit the thesis. At the same time, these miners, if they're forecasting trouble next year, mining is a very complicated, delicate operations. If they're saying that already they can't meet demand in 2026, it's likely not going to change in just 6, 12 months. Those are structural problems that they're having, not just with labor, but environmental regulations, things like that. So there's a pretty, in my opinion, high confidence in this trade here. And, for this Z-score ratio to go back up. Now, that doesn't mean I think gold isn't going to perform well. I'm still bullish on gold as well. I'm long gold right now. I've been long silver that I just got out of yesterday. So, my play is both precious and industrial metals I'm going to stay long on into at least the first quarter, second quarter of 2026.
I mean, you make a good point. Copper, people forget. People just think it's like a metal like gold or whatever, silver. But copper, I mean, it's still one of the largest metals we use for conductivity and things like that. They're building I don't know if it's an AI data center, but they're building an AI center across the street from where we do the SIBO show. Obviously, the SIBO floor is in the Board of Trade, but the old SIBO building right downtown is being converted into a data center. Oh. They're popping up. I mean, they are.
They're going to continue. I mean, the only throttle really that is, happening in these data centers is really chip demand and how fast you can build them. There's, environmental regulation concerns, but right now it looks like we're in an environment where those regulations are not going to interfere too much.
I like it.
That's how it goes. When they want things for the people, things happen. You ever know how it's magically okay? You ever notice how it's magically okay to go in New Orleans and walk down the street with a drink and nobody says anything?
Right.
Because they want people to spend money and have fun. They relax
Boy,
regulations.
do they have fun.
Yeah.
unless you're a picketer.
You know that in Vegas, right?
Order.
You try going outside and do that right now. Walk around with a drink in your hand, see what happens.
Honestly, that's one of my favorite parts of going to New Orleans is not obviously you're having fun, but the picketers. It's always entertaining.
Yeah.
When they march by.
Yeah.
With all their signs.
Yeah.
Wild signs.
Yeah, I know, right?
But yeah, I totally hear you. So yes, I think this sets up for, I think, not only a bullish position in copper, but also a bullish position in gold. If you look at the forward returns over time, I think that's the best example. If you look at 60 days out, I mean, that's where your biggest outperformance is in copper relative to gold. And gold has come down a little bit from the recent highs. So I got filled on 2 positions here. I did the HG 6-strike calendar spread, long February, short January. So the February option is $1,800 and change. The January option is $1,100 and change. So the total package I got filled at for $750. So a long-term upside out of the money call calendar, getting back to that level that we dropped from. And then I parlayed that with a gold call diagonal spread, the same expirations and the same price ultimately. So went to the 390 February call, bought that, and then I sold the 405 in January, 66 days out. So a 15-point wide call diagonal spread out of the money for $775. So both of those positions are $700 and change, both upside trades. And if we get the result of what you saw earlier, both of these can work out pretty well here.
Definitely. I'm excited to see how this
calendar trade. I'm going to try and get that calendar trade off in copper. I'm already long gold, short GLD put spread.
Yeah, I mean, I was messing around with it, but it looks like if you're trying to keep the trade relatively small, going long Feb, short Jan is an easier way to do that. If you start to get closer, like long Jan, short Dece, it's a little more expensive. So just wanted to keep the risk under $1,000, keep that long-term trajectory in play, and see what happens. Love it, love it. Well, thank you for that. We are now aggressively bullish gold and copper, which we probably want to be anyways.
And
at these
Stanley Druckenmiller, he's still long copper from what I've seen. So he's had some really good commodity plays over the years.
Love it. If he's long, I'm long.
He's got deeper pockets than us.
Yes. Does he have the calendar spread?
No, he does not. He does not have a calendar spread. He does not know how to do it like we do.
Beautiful stuff. All right, we will post those to the follow page shortly. But yeah, long both copper and gold for me. I think we're all long gold at this point in time, but long copper, interesting play, interesting, unique level from the Z-score analysis. So
yeah, and I mean, if for people out there that you don't want to get into a HG contract because it is pretty big if you're not doing defined risk. There is the miners, FCX, and while they're not benefiting yet, if copper prices do, continue to run up, they will start, that stock price should at least start to, mirror that move.
Very good call out. I was actually going to say that too, because like case in point, Newmont, I mean, it was boring to trade for the most part if you're trying to get gold exposure, right? But when gold actually went, you saw Newmont actually go. FCX, same deal. I remember FCX used to trade heavy, I mean, real heavy. It's calmed down in recent years, but I would expect that one, if we really get the move, it'll go. And just look at the chart. It mirrored the move to the downside on July 30th, right? That big move. When the big moves happen, that's when these stocks really, that are proxies for these things, they actually move then.
yeah, and plenty of room to the upside if you're to get back to where this was trading before, almost at 50, sitting at 41 now. Much more digestible for sure. But yeah, HG, tougher to get smaller, but just note that the December, January, February contracts all settle to the H contract. So if you do a calendar spread or a diagonal spread in one of those three, they will all settle to the same contract. So just keep that in mind when you're calendarizing these with different expirations. Make sure you're not going long one contract, short another, because now you have two different products that you're long and short. Lovely.
Mm-hmm.
All right. I'm going to pop over to the YouTube chat now. See what we got going on here.
Lots of questions early on. Love it.
Let's see. We need to know whether we should fade this natty gas move or not. What do you think, Thomas?
I'm still long natty gas. I'm about to take it off because the position's almost at max profit. I am in the 13 days out put spread at 3.9, so I'm 60 cents above that. I'm probably going to roll this put spread up to like 4.2, somewhere around there, maybe 4.3, and just give myself more time. But we are going into winter. Europe, I was talking with Vecchio about this yesterday. Europe needs a lot of nat gas right now. So the external demand, all these exports coming out of the U.S., it's going to stay pretty high. Even though the weather forecasting right now, it looks like pretty mild in the U.S., we're still going into this demand season. Mm-hmm. And in November is when it really starts to ramp up. So it's looking good. I mean, if I was trying to get long right now, I would wait for the next pullback. And the pullbacks always do happen in nat gas. I mean, they can rip higher for a bit, but I think you're at a point where wait for a pullback, get some long exposure, give yourself some time, 45 to 60 days, let those cold weather trends in the U.S., get a polar vortex, whatever it is, and then, you ride it back to the upside. But this thing, all the way since, late October, it's been performing very well.
Yeah, and you're still getting a handful of two-sided action days. So like to your point, Thomas, you have the last 2 days, you had pretty sizable sell-offs, even though the trend is higher. A week and a half ago, you had 6 days in a row where we were making lower lows. So you have opportunities to get in at lower prices if you are willing to wait. One thing to note here, if you are in the 13-day like Thomas is and you're going to the 45-day, there is a price difference between those contracts. So you're going from the Z5 contract to the F6 contract, and the F6 is currently priced at 4721, where the current active month is 4522. So even if you're rolling up the put spread a little bit, you are moving into a higher price product. But you said you wanted to go to maybe like 4.2.
Yeah, I forgot, the backwardation in there. Contango. Probably going to go up to much higher than 4.2.
So closer to at the money.
Yeah, probably 4.5, somewhere around there.
Yeah, I mean, look at the demand right now, man. 4.5, 470, right? Then it starts to fade a little bit. 430 for the January options, the G contract, 390. These sizable pullbacks aren't sizable enough because I'm short strangling here. And I've been short it since the end of October, hoping for a little bit of pullback here. I did roll one of my puts up. Well, I only have one. But I rolled my put up from 330 to 360 today, kind of reluctantly. I am a little nervous with this thing touching the 100-day moving average right now. I'm a little nervous.
Always giving us something.
It's always giving us something.
It's usually giving me pain. So I'll let you guys have fun with this one. But if we do get a sizable pullback, I will throw on a short put spread in the 45-day cycle and just make it super small.
Super small.
Let's see. GLD calendar spread, 380 strike, short Nove, long Dece. It was rolled from my diagonal spread, so the net debit is 770. Should I re-diagonalize or manage a different way? Well, if you're short Nove, long Dece, you can't diagonalize it unless you go into a weekly. You are right at the money. So what is this even trading for? 380. Short, no.
The original was $7 debit. Is that what I saw?
Yeah. 770 rolled from a diagonal. So you rolled it down, it appears, into the sell-off. So it's a tough one because you have $500 of extrinsic value that's going to zero in 10 days.
Yep.
However, if you bought this back for $500, the 380 strike, since you're long Dece, I wouldn't go further than at the end of the month November contract.
Yeah, exactly.
You don't want to. I don't like going into a vertical spread because you might as well just take the trade off. It's just going to kill the speed of that trade. So I would try and go from the 10-day to the 17-day. Now the question is, can you turn this into a diagonal spread that will actually pay you if you get a continuation?
It's a little hard.
It's tough. You could go to the 385. So the 385, you'll pay a 60-cent debit to do that, which will bring your cost basis up to $8 and change on a $5 wide diagonal spread. I think if you got into something like this and you got the move up to 385, you'd probably be looking at a break even. And we can look at the analysis here on just this trade. Push it to, let's say, next week. 10 days from now, what is your theoretical value here if you had an $8.30 debit? Yeah, so you'd be at like a break even if you get the move to 385, where right now you're sitting at 380 with a $200 loss. So if that's your goal, you could totally do it. Otherwise, you'd have to really move this thing up. Like you'd have to go from a 380 to a 390 diagonal, but this is where you run into an issue because now you're paying $200 in a debit, which brings your basis up to 970, and you'd be rolling into a 10-point wide diagonal spread. So now you can be profitable to the upside, but you need another 10-point move to the upside in GLD. So it's a hard one to answer. I think you'd have an easier time making this adjustment into a sell-off in gold because this $4 is going to be really sensitive. You can see here the difference between 10 points is $500 and $1 and change. So if you got a sell-off and then you looked at making this adjustment, it's not going to cost you as much of a debit because you'll get a lot of value out of this 10 strike option. It's tough. It's like a coin flip for me on what to do. I might just stay with the 380.
Yeah, it's tough because Gold is seeming to want to challenge that 4,200 level. It's pulling back here. Who knows? I mean, obviously, if it, like you said, if it pulls back here, then it makes a little easier decision on what to do. I mean, if you're not constrained by anything, I'd say maybe wait a little bit or just, close it and start all over. Sometimes that's just easier,
Yeah.
It's tough, though.
Yeah, that's a good point. I mean, you could close it and then reestablish a new diagonal spread if you are long-term bullish, and just give yourself enough max profit potential to where you can offset your $200 loss on this trade. So we are all long copper, but is there a micro copper future? What is that, MHG?
I think it's MHG.
So MHG, $1,800 in buying power. If we look at HG's at the money short put, that is a 124K max loss. So we'll call the micro contract a 12K product.
Yeah, still big.
Yeah.
I mean, it's kind of funny to me that MHG is actually lower priced than MES is now. Just saying, it's a little funny.
Yeah.
I don't know if that was always the case, but it's the case now.
I mean, it is wild because I'm thinking about doing a year-long trade, and I wanted to do it in SPY and just have a strangle on with like we were talking about yesterday, but it's 12K in buying power.
Yeah.
It's nuts.
Yeah, it's a lot.
But even the micro, just doing one contract in here is still pretty sizable.
Yeah, we were looking at it yesterday.
Sizable risk.
Yeah.
The buying power is fine, but the risk is, 30K on one contract to the downside. But yeah, the MHG contract is the micro. If you want to play it static, you could go there. But just be mindful of the size. It's about a 12K product, and it uses $1,800 in buying power. Is Fiserv the right time to buy?
I've been short puts in this thing for a minute. You know what's funny? They just changed their name back to the old name.
Just trying to get out of the limelight?
I guess they're trying to get the stink off from the change. Is it time to buy? I don't know. I've been short puts for a while, and I rolled them out to Dece, and now I'm short that. I haven't seen any lift, but feel free to join me in this trade if you want to. I don't know what to say. I don't really know. I'm surprised it's had no lift. None.
Yeah.
It's annoying.
Yeah, this is an interesting one too because you still have FISV as the options vehicle. FI looks like stock only.
Somebody just put me to stock. Put me out of my misery. Seriously. In those calls, I can use it.
But yeah, if you want to jump in here, it's pretty low IV for what this stock has done. I'm surprised it's not higher, but either way, up to you. Can we get a live cattle update? That's true. We haven't talked about live cattle in quite some time.
Yeah, we have not. Let's see where it's at. I have not been trading this the past couple weeks.
Looks like it was a big bounce yesterday.
Yeah, big bounce, but it has sold off pretty aggressively from the late October levels. This comes with the U.S. administration just doing various things on it. I know they were talking about importing some beef, then they were talking about reallowing some Mexican cattle in, but the screw worm, I think that's still a threat. And I'm not sure if that changes as we get into cooler weather down there. But, this is weird. I mean, it's made lower lows. And, I'm not sure I'd be confident getting long or short. They were limit higher yesterday.
Yeah, we were on the show that one day when I'm pretty sure it went limit down, too, because it just stopped trading. So yeah, I didn't really. I mean, everything has limits. I don't know the last time I've seen anything go limit up or down. It's kind of fascinating. That tells you about something about volatility in this name right now.
Yeah, I think when it comes down to getting long or being neutral, I mean, the 24-day cycle is still the active month, and you can get pretty small in here. If you just do like a 1 point wide iron condor or something like that, $150 max profit, 250 max risk. If you wanted to create a neutral range, so like the 238, 239, 218, 217, if we look at that on a chart, that brings you below the recent lows, or right to the least recent lows, and then above the recent highs. So if you think we'll chop in this range over the next couple weeks, that could be the trade. But yeah, getting long here, I think just got to stay defined risk.
Yeah, it looks like Trump ordered a Justice Department investigation into the big meatpacking companies, accusing them of collusion of higher prices. So, you know, there's still really low U.S. cattle head count, so supply is still, you know, after years and years of drought, things like that. Supply is still going to keep prices, you know, elevated somewhat, but there's a lot of headline risk, you know. When the government's getting involved with something, I think, you know, there's less certainty on how supply and demand itself is going to influence things. So it looks like they still are considering, you know, more Argentina beef, but we'll have to see what happens here. For now, I'm not going to touch this one.
Fair. Going back to copper, do you think there's any tariff risk in copper? And if there is, what do you think would be the most probable situation?
I wouldn't discount any tariff risk on anything right now, you know. We've seen headlines come out without warning of products being tariffed or anything. You know, so I don't think, you know, you're going to see another big tariff on copper. Right now, I think the main risk lies with how the miners are going to operate and demand. But if you're playing for a tariff move, you know, you have to try to assume you're inside the thinking of people that are, you know, in a office in D.C. they could do anything they want. You know, it's hard to get inside their head and, you know, try to get ahead of what they're going to do.
Yeah, that's a good point. But yeah, I think it all just comes back to trading small, keeping your risk in check, and that way, if something unforeseen happens, you're okay. Let's see here. Strangle and MU. December 195, 290, 1360 credit.
Don't do it. You rarely hear me say it. Don't do it. I had a strangle in here and no for like a while. You know this. I talked about it. Somebody asked me today somebody emailed me and asked me today about, and it's not fair for me to say don't do it. Make your own decision. I'm just going to tell you what I think. Micron, SanDisk, whatever, it's SanDisk, but SNDK, WDC, these names in these charts, I mean, they are something else. And I know the vol is there. It is hard to monetize some of these, particularly if you got earnings coming out. Try to go wide, but look, these things are moving around, man, and they are not messing around. So these are rarely will I say something is high risk trade. I think these are high risk trades right now, given everything that's going on. They're at the center of it, and they're not even the major ones. They're not even the Nvidias and the Metas of the world. So just be careful. But I mean, look at that chart. That's a little scary right there to be doing strangles. Just a bit.
Intraday moves are massive. You're seeing big gap ups and downs after market hours, which is also tough. And yeah, right now you're up $100 on this thing. I have a hard time believing that this is going to decay much more because you have earnings a month out from now. Like, yes, you'll still get some decay, but these options where you have two-sided risk, they hold on to extrinsic value because they're staying bid because of the earnings report. So the fact that you're profitable on this makes me lean towards just maybe closing it and then getting in later if you want to trade it for earnings, or being directional. Being directional and not having risk on both sides will help you get profitability if you like get rid of the call and just keep the short put, something like that. But either way, you're up $100. This thing is moving around like crazy. I might just ditch it.
Micron used to be a lot more liquid than this. I mean, look at some of these options. They're like 50, 40 cents wide. That's the other part of the problem. When I was trying to get out, it was hard to get out too. So, I mean, to your point, I think these are going to remain bid for a while. You give yourself a better chance if you just honestly wait until after earnings.
Yeah.
And then try and sell vol.
Like
or sell in front of earnings.
I have an iron condor in here that I've had on, and it's just like the most volatile thing ever. Like it's completely out of the money right now, 10 points out of the money, and it's still an extrinsic value marked loss because of how much volatility is kicked up in here. So yeah, I think if you're profitable on this thing, given the move today, that's certainly helping you. I might just get rid of it and revisit.
By the time you have to cross markets, you might not be profitable though.
Yeah. Certainly risk there, that's for sure. Anyone thinking SPY or Q's downside hedge? Did you got filled on your butterfly or
SPX?
Butterfly?
Yep, I did. I did one for the end of the week. I did the 68, 25, 67, 75, 67 quarter. So way ahead of you there. I did it into yesterday, thinking maybe we reverse some of yesterday's move by the end of the week. We'll see.
Yeah, I think this is the way to do it. If you're trading near term, these butterflies are relatively cheap for small moves that we're seeing. But other than that, I think calendar spread, diagonal spread, if you're thinking more long term in SPY, still very cheap to get downside exposure on these products. But yeah, we'll see if it comes to fruition here. CoreWeave, trade from Fazia on the follow page. CoreWeave, 2 short puts at 80, 3 short calls at 125, 1 long call at 115. Can you talk it through?
Something else. She is slapping it on.
Yeah, we've got ourselves a ratioed Super Bowl, it seems like. So 2 short puts at 80. 3 short calls at 125 and 1 long call at 115.
I mean, the number one thing you should realize from that is that she's expecting a little bounce back with vol coming in on the upside. Like when you hear that trade, that's the number one thing she's looking for.
We can look at the expiration risk here. So this is basically it. You have a strangle on where you have 2 short puts, 1 extra short call after you discount the 115, 125 long call debit spread. So here's your debit spread, which kills the risk in one of these short calls. So you'd have 2 short puts, 2 short calls at 125. So that's all it is. It's a strangle at 80, 125 with a kicker that's completely financed by the net credit received. So yeah, I think it's fine if you want to be in here, undefined risk. But just know it's 2 contracts here versus 1.
What's funny is I did a very similar trade. Our risk looks very similar. So what I did today is I sold the 80 put in January. I sold the 80 put in January. And I wasn't even thinking about this trade, so I got to give props to Agent on Twitter, who kind of sent this out, tag us and stuff every now and again, the idea of doing a ratio call spread. And so I ended up doing that, but I did it in January. He was talking about Dece. I did Jan, and I did the 115, 125 call ratio spread in Jan, and collected like 245 maybe on that. So as you can see, very similar.
Yeah. Just a little upside kicker. As you can see, we are down in the dumps in CoreWeave, so I like that upside trade, and it offsets your upside risk pretty substantially too.
Mm-hmm.
If you're going to short the Qs, would you do a put diagonal spread or a put debit spread? I would do a diagonal spread for sure.
Same.
30-day put debit spread can move fast. So what's the advantage of a diagonal? It will move faster. Debit spreads aren't going to move that fast. And it's just because you have options in the same expiration that almost completely offset each other. So you really need the spread to move in the money and get closer to expiration. So a 30-day, if you just go to December 19th, we can just throw this up from a theoretical standpoint. if I did a 620, 610 vertical spread in December, if we look at the analysis and just do a theoretical analysis for today, if we get a downside move, yes, you can make a couple $100. This is reflecting a 10-point continuation to the downside, which would be a pretty big move. That's the NASDAQ futures being down 500 or more. So yeah, $150, $160. If you kicked this out, or if you use the same long option, let's say you buy December and you sell November, you're going to have a costlier trade, but you can make a lot more on that same downside move. You can make twice as much on that same downside move. And that's because your short option isn't going to be gaining as much value against you compared to if you have a vertical spread. But this is a more expensive trade. So if you're trying to keep it small and just have a vertical debit spread on, like the nice thing is you can get an at-the-money debit spread on for less than 50% of the cost. So I like that aspect of it. But you're always going to have a faster moving trade in your favor if you have a diagonal spread versus a vertical spread.
The funny part about the idea of the NASDAQ being down 500 points, that's 14 trading days ago.
Not too long.
And it's only temporary, people. It's been wild how all of these big gap downs just immediately gobbled up.
Yeah.
Immediately.
Strong
3 days there, 2 days there, 3 days there, 1 day.
2 day.
2 day.
Literally just happens.
It's nuts.
I think a lot of the sell-off today is core weave, because it ties into the AI narrative.
For sure.
They're not able to get projects done as fast as they can. So you have a bottleneck there. If projects can't get done fast enough, you can't invest fast enough. So.
For sure, yeah. I mean, you see a lot of the whole names in the AI space. Oracle's down today. Micron, we just mentioned. NVIDIA, which I guess also is maybe on the back of this whole SoftBank selling out of their stake too. Like, it's definitely that right now.
Rivian chart looks great for a pop. I mean, it already has popped. But if you're playing for a continuation, sure. But I think if you're doing a continuation when it's at highs, I think you got to go super small, defined risk. I would rather wait for a pullback and see if you get it. But yeah, this was the one where I sold a put, forgot about it, had my positions tab stock unchecked.
Oh yeah.
Know I had it. And I looked at my P&L. I'm like, why is my P&L up like $200 and everything's flat? And then I clicked the stock and I just had 300 shares. Rivian, Ford, like all these random stocks.
That's funny.
Snapchat. Yeah. That's what happens when you have a short put and then it just expires in the money. But this one actually worked out. Had the short put at 15, got this pop, sold the shares for 60-cent winner, $200 overall. Forgot about it completely.
I thought about doing that too because I am tired of seeing this RSX in my portfolio. Why do you continually remind me of what a bad trade that was? Like, my God.
Yeah, just uncheck it.
I know, I should just uncheck it. I've done that before, you're right, and I missed one of those one time.
It is a big move to the upside though. So if you were getting long or you were long, perfect move for you.
It started on earnings, right? Dang.
Yeah.
Wow.
In honor of Singles Day, how about a trade in JD?
Wait, when is that again?
JD. Do they own like Bumble or something? I don't know.
No. Singles Day is like a shopping day in China or something like that. You heard of it before? You never heard of it? Yeah, it's like a shopping day in China or something like that.
I thought you were talking about like dating.
No.
Yeah, it's where if you're single, you treat yourself.
Is that what it is? Or something like, but it's like a shopping thing for sure.
Short
Forget
put,
when it is.
Short put paired to the call ratio spread.
Oh, it started today. It's today. Yeah, it is today.
Look at that. Yeah, earnings on Thursday before the market opens. Short put paired to the call ratio. So if you're doing it in the weekly,
treat yourself.
There's not much premium here, but I mean, you could do something like this, like a short put call ratio, 30 short put, 32, 33 call ratio for 50 cents. And if you look at your expiration graph, you're up at 34.5, 29.5 to the downside. Or could do BABA, call vertical.
Singles Day. We need to make Singles Day bigger in the U.S.
Yeah.
I'm shocked it isn't. 11s all around. Every time, that was the other thing, like trading floors, anytime you saw 11-11, you say, on the time, you say sticks. I'm surprised. If Frankie was in the chat, Frankie would be like losing his shit right now, me saying that. It's true. You say sticks. And then when it was 222, you say, anybody?
Twos?
Yeah, what does the two look like? Whack. Ducks. So you say ducks. When it's 222, you say ducks.
Like everybody just yells it?
Yes. The dudes would just yell it. Ducks. You know what I mean? Like as soon as it's 222 or if it's 11, singles. It's funniest.
I like it. I like it. But yeah, Baba, November 28th.
Sticks.
11-11. You could just say sticks all day.
Say
11-11.
Yeah, that's right. 11-11, 2011. That was one of those, what's that called? Palindromes? Right? I forget. One of those days was. The day where you can reverse it and it's still the same.
Yeah. Yes, that is palindrome. Yeah, the Baba trade, $400 for a 10-point wide diagonal spread, or vertical spread, I should say. Not too crazy. But yeah, I haven't traded the Chinese names in quite some time. But they're both at lows or near lows. Recent lows in Baba and annual lows in JD.
JD looks like it's doing something that the others are not. I'll tell you that.
JD. Yeah, I haven't traded this in I don't.
Yeah, me neither.
Not in a year. Over a year. Rico, time to short Rivian.
Okay.
I mean, if you're ever going to short it, I think into this kind of move is where you'd want to do it.
Can't disagree.
But yeah, the IV is pretty high in here. It's just like, how are you going to short it? That's the question.
Just sell it to the other person in the chat. Just
yeah, like a zebra. This is how I would do it if I were to do it. Like an 1817 put zebra for $180. That's all you can really do.
Yeah.
You can't. I wouldn't short stock. I wouldn't sell a call. It's just not enough premium to take the risk.
Yeah. I agree.
But when you get static delta to the downside like this, now you have defined risk, high implied volatility. So even if you get this move to the upside, you can see your theoretical P&L doesn't drop off all that much until you get closer to 20. That's where you start to feel max loss. I did a year-long trade in MES in 2023. What would you do differently in 2026? Great question, Jackie. So what I would do differently is I would approach it exactly how I've approached the IBIT position. The IBIT strangle has been pretty range bound and a great trade. But one thing that has really made me sleep better at night is never having upside risk in IBIT. So in MES, it would be something like starting with a 6,600, 7,100 strangle. If I get tested to the upside at 7,100, I buy it back and I shift it to a 7,100 put, 7,350 call, like something like that. To where I'm never taking short delta in the S&P 500. And we've seen this time and time again. Like, yes, you do have volatile periods of time, but I want to be in a scenario where my risk is to the downside and I can have that recovery potential to the upside versus having short delta here and then just defending it all the way up here to be a scratch. Like, I think in this current environment, I would want to be bullish versus bearish. And that's just me. So I think you got to do it small enough to where you can withstand any variance to the downside in MES. But that's what I would do, is just have a strangle on, collect this premium up here, but if we start to get tested, shift the whole thing up. Instead of rolling the untested side, the put side up and maintaining short delta, shifting my short delta into bullish delta. And then if you have a downside move, you have a covered call in MES. That's where I lost all my premium in 2023. I was trying to underhedge into a bullish rip, and it didn't work. So I think in these products, I would much rather just get rid of the bearish delta and keep that upside profit potential while still collecting premium. Chipotle, is the stock dead? Yes.
The end.
The end. I mean, I tried to buy the dip. Look how far I have to scroll. I got the 40 strike call in January that's literally worthless. 66 days left. I had the 37.5 short puts prior to earnings. I guess I'll get assigned or take the loss. Yeah. If you get assigned, your short put, depending on your premium, I mean, you're probably at like 35, break even, somewhere around there. So you're not totally dead. But yeah, I mean, these charts don't look good when you have these gap downs and then chop lower and then a gap down and then a chop lower. But over time, do I think Chipotle is going to close its doors and be bankrupt? I don't think so. I think you just have to wait out the storm here. One thing you could do is if you do take the shares, is you could consider a call ratio, something like that, like a 30-35. If you get the 100 shares, you could pay $100 to get this call ratio on top of it, and you double your share potential from 30 to 35 if you're willing to take that debit risk. But if not, you could do like a 32.5, 35, pay 14 cents. So that's what I would do if you're trying to just get out for break even, is wrap a call ratio around your break even price.
Yeah, it's tough because, you make a good point. It's not like you hear about them closing a lot of stores. Matter of fact, I see something about them opening stores. But when you base a lot of what you're doing on a certain demographic, especially a younger demographic, it's going to go through some waves, and this is going through a wave right now.
Yeah. Yeah, this January one looks actually a little bit better. If you did a 30-33 call ratio for 15 cents, or you could do a 35 for $100, like this is where I would be at if I was trying to get out of shares. Pfizer being investigated for fraud.
I hadn't heard anything like that. I hadn't seen it. I think they just had terrible earnings. Didn't go well.
Yeah.
Rumors.
UNH bottoming out. They have a hearing November 19th, I believe.
A lot of these names got whacked yesterday. UNH, Humana. I actually did a diagonal on Humana towards the end of the day yesterday on last call with Nikki. I did the 250, long 250 in Jan and short 265 in Dees. So taking a shot.
Look at this thing.
I know, right?
Chopping.
I know. And I will be willing to, if they get hit lower, I'd be willing to maybe get one in UNH. So just doing the one for now. We'll see what happens.
Last question for Thomas. What about HE puts for Feb?
HE puts for February. I'm in lean hogs. I'm short a call spread at 86.88. So
similar.
Yeah, I see it kind of staying under 86. I mean, it's bouncing back right now, but the trend since September is lower. That might come back into play. So you just gotta select your point.
Yeah, I mean these last 2 days, you've definitely got a juicier short call spread, or you have a higher price where you can short it with a long put.
Oh yeah,
if that's what you're doing. All right, that's it for us. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Thomas is at FX Westwater. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Click the link at the top of the chat. Go get your referral code. Pass it along to your friends and family. get that $100 bonus for each of you. But yeah, we'll see what the rest of the market brings. E-mini's up 8 now, catching a bid. We'll see if we stay bid the rest of the day. But see you same time, same place, 11 a.m. Central tomorrow. Peace.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
What is going on, everybody, and welcome back to Risk and Reward. Today is Tuesday. We got a little Taco Tuesday going on, but the market's been a little bit more quiet today. You know, we got a bank holiday going on, so we'll talk a little bit more about these positions, give an update on some of these futures products as well, like the metals and NASDAQ, the whole 9 yards. We hope everybody's doing well. My brother Gus, how we doing today?
Doing good. Yeah, it is kind of a weird day. It's actually a fairly good day in my portfolio. Things, the specific underlyings that I need to move in certain directions are largely doing their job. So pleased with that. Can't complain. And yeah, we're largely unched today.
Yeah, we are largely unched. It's a little bit more quiet. I know I took off a couple positions here today. One of those was in QQQ, sold an out of the money call spread. I thought I shorted that too soon, so whenever we got the rebound today, I took it off near break even because I'm thinking if we continue to rally to the upside, can kind of reposition that short position a little bit better on QQQ. So that's what I've been up to on my end. Been keeping an eye on gold here in a little bit, and we'll dive into the portfolio. But it was snowing again this morning. I don't know if that's affecting the market or affecting my brain going into the market, but outside of that, what else is new?
Yeah, you know what? There's a parking lot next to my building. My window looks right out at it, and there's very seldom anybody in this parking lot. I don't really know why it exists, but there's a car parked in there, a Jeep, and there's no tracks leading up to the Jeep that indicate that it drove through the snow to park where it's at, which makes you think, oh, must have been there before it snowed.
Right.
But also, notably, there is no snow on the vehicle at all. Not on the roof, not on the windshield, not on the hood.
Okay.
No snow on the vehicle. So I've really been grappling with this Jeep mystery in my brain of how the Jeep could be there clean. The only thing I can gather is that somebody must have gone out there and cleaned it off and not driven it, bless you.
Thank you.
But there's no footprints.
Right.
So
it's not making sense. This is like one of those unsolved riddles.
yeah, it does not compute. So I don't know. That's what's on my mind. I don't know if that's what's new, but it's been troubling.
Maybe something was above the vehicle. It wasn't underneath any light post on accident.
No. It's just it's white. I'll send you a picture when I get home today. We could pull it up on air tomorrow or something. But there's the mystery Jeep. I'm very confused. I hope it's still there. What's going on, everybody in chat? Luis, good to see you
guys.
Big deal. Wolf, Jared, we love all of you. Oh, Dream Team on now. You're too kind, Jared. Thank you.
Oh, you're too good to us. You're too kind. No, we can go ahead and jump into the Tasty Trade platform. We'll take a look at some of these positions, and then we'll get into the Trading View platform. We were able to take a couple trades today, finally. So we'll break down some of the entries and exits, some of the thought process behind there, what we were risking, and all of that. But let us know what type of trades you guys are taking and what you're looking at for the day. Getting into some things, we got the gold position on over here. We're up just a little bit on the day, up a little bit more on the overall position. We're going to need to be a little bit more patient in there, let time work in our favor, but we do have 10 days left to expiration, so we will be making some decisions on these positions in gold here soon. After that, we got Nokia. This one's another slow mover. Cheaper underlying, I know we both had put that one on, looking for some type of rebound, a little bit more volatility in there. Most of it has seemed to die out. QQQ was the position we were talking about earlier. We sold an out-of-the-money call spread earlier this week, but if the market continues to rally, we took this one off for break-even, but if the market continues to rally, we're going to try and reposition ourselves again to the downside without taking on too much drawdown. So that's really what the trade there was today that we ended up closing. And then Baidu, we're down a little bit more on these Chinese names, but they've been coming back. Kind of on the dance floor for some of these names, if you will. We sold a 130 call on Baidu, bought the 135. We collected about 227. So our risk on that position is just a little bit over $250. So we'll continue to manage that one as time winds down. And then Beyond Meat. Beyond Meat's been extremely unsatisfying, disappointing, whatever you want to call Beyond Meat. Throw whatever hurtful words to Beyond, but it's been slow. It's been slow.
Pick your derogatory
terms and place that right here. But Beyond Meat's been really slow. We got 38 days left to expiration on that one, so we'll give it a little bit more time. It was a smaller position. It is a zebra, so we can cut this, relocate the app, allocate the app. Reallocate that capital. Good Lord. Almost had an aneurysm there. Elsewhere.
Happens. It's live TV, baby.
And then with UNH recovering a little bit more on the day, down on the overall position. That one's been pretty disappointing. But with that being said, we got a couple futures positions that we took earlier today. And we'll break those down here in a moment. But that's what's been standing out on my end, Gus.
Yeah, Baidu. Maybe is it just jumping on you a little bit? I mean, how are we feeling? How are we feeling about the Baidu position?
The Baidu position.
That's a downside position, right?
This one is.
Or you're bullish.
Yeah, I think Baidu. We sold an out-of-the-money call spread, so we're a little bearish.
Yes,
we got
bearish.
-10 delta,
And
-12
under
delta.
130. Yeah, so we were there for a sec. hopefully things can continue to run off for you there. But yeah, this baby bounce is a little bit alarming.
This baby bounce.
In response to these wonderful comments on the car discussion, let's see. E-media, what color is the car? Any evidence of melting? Very sharp. I made this observation last night, and so the car did have all day to melt, and it is a black vehicle, so perhaps that could be it. I didn't really look to see if there were like other cars parked that still had snow on them or not, but good thought. Also, big deal. The Camping with Steve reference is elite. Elite reference. Love Camping with Steve. And it crossed my mind that maybe someone was camping in it. Because
knows ball.
Yeah, it crossed my mind somebody might be camping in it because what if like somebody would have had to be like in there before the snow and then have it on all day or something, but the color sounds like a more sharp pick there. My whole watch list is pretty red. What's holding up the indices? I think that it is I don't know. It could be just some, reservations with the big government shutdown vote going down today. I also think that it's plausible that we just made too big of a move like to start the week yesterday, and so things are just kind of chilling out a little bit because it's not like we're going nowhere. I mean, we are very slightly green. The market is showing no indication that we want to move back to the downside. I just think that with the big gap and then the big green data followed up yesterday, perhaps we're just a little bit. It all happened a little too fast. Yeah, like if you averaged out where we're at now to yesterday and just made it two equally sized green candles, it would look much more reasonable than the way that it does.
Yeah, I mean, even just the volatility. I mean, even if we just zoom back a little bit here, you can see we had that insane rally to the highs. We consolidated for maybe a day or two and then sold back off to the lows. So, I mean, the volatility really picked up on both sides of the spectrum there. Now it's looking like we're trying to slow down a little bit here. One thing that's kind of funny is we haven't really gotten much consolidation. Like the market has either been ripping up 100, 200 to 300 points, or the market's been ripping to the downside 200, 300 points. It feels like we've been getting no in between last week at least.
Yes, absolutely. I mean, I would say even much more broadly than over the last week. I mean, that's just kind of how it feels. It's like I don't know the last time we had a day where it was like, truly unchanged. I mean, maybe you got to go back to October 28th. That's like 2 weeks ago. But yeah, it is just the market has been moving, whatever direction it's going. We've had very few days like today. I mean, at least the way that it's panned out so far with, just baby movement.
Yeah. 100%, a little bit of baby movement. And anybody else that's looking to maybe intertwine their tastytrade account into the TradingView platform, I'm going to have to do mine right now. And to do that, just drag this bottom layer up down here by the trading panel and then just go ahead and find your broker, which is most likely going to be tastytrade, the beautiful white application right here. Look at that. We got tastyfx down there too. We got everything. So we're going to go ahead and click tastytrade. You'll be able to hit connect. And then from there, it's going to ask you for some extra information. So give me a quick moment. Let me get this in there.
Yeah, go for it. Is there anything to do with a broken earnings trade? Sold a 39 put in CMG, stock now much lower. Sold a 39 put. Oh, I see. Oh, man. Yeah, that's an interesting situation. That's run far from 39. Let me look at this.
What is that, Chipotle?
Yeah, Chipotle.
We had seen more headlines lately of Chipotle and Kava kind of going head to head, which was funny. Was afterwards.
Yes,
that segment. Right?
Errol and I had a grand debate about whether Chipotle or Kava was better, and then we figured out that it was neither of them. At least in a market context.
Right.
But yeah, how much time do you have left on it? I mean, if that's expiring like end of week or something similar, like in the next two expirations, you might just be SOL. There could be some management to be done if you have like, I don't know.
You talking for Chipotle?
24, 30 days or longer, yeah.
Chipotle, yeah.
But yeah, might not be super redeemable. If you got time though, I mean, I'm still. Am I still holding my Chipotle longs? Actually, might not be. No, I cut my Chipotle.
What's going on in Chipotle? What did I miss?
They had batterings. I don't know, a week ago now, 2 weeks ago.
I'm telling you, I have a theory with the higher inflation, lower disposable income, Chipotle, the bowl slop, kind of being one of those go-to food items. Especially for lower disposable income individuals, I would say, and the economy's taking a little bit of a hit.
But is Chipotle like affordable anymore? I mean, that's really where it starts to come into me. I mean, it feels to me just like every fast food place, like $12 to $14 is kind of the standard price these days.
That's funny because it does kind of feel like Chipotle, right, is starting to feel affordable. Like relative to your McDonald's, relative to your Wendy's, relative to your Burger King, whatever the case might be. Because on average, you think a bowl is going to be around $10, $11. I mean, you could easily spend $10, $15, $20 at a McDonald's or Wendy's. At any fast food, it's easy to drop $15, $20.
Yeah, especially right? if you get a drink in there or whatever. And, I mean, like you go to McDonald's and I don't know. I mean, I think a Big Mac meal is like $12 out the door right now.
Yeah.
And then, you throw a 4-count chicken nuggets on there and suddenly you're at $15.
Yeah.
You don't know what hit you.
No, 100%. Other than that McChicken and them calories.
Oh, Luis saying it's 68 degrees there and he's going to the beach this weekend. Oh.
He's flexing on us
Oh,
right now.
Guadalajara. It must be so nice this time of year.
68 is cold for the beach. Somebody called this man Luis out for that. He was going to say 68 degrees as if that was paradise. Come on,
Paradise
Luis.
compared to what we got going.
We could do better. You're right. Actually, yeah, let me not talk
I have the stock now. Oh, interesting. As in you got exercised? Like you're short the stock? If so, or assigned, I should say. If so, that makes things a lot more nuanced. There are ways that you could attack that.
Oh yeah.
If you're short shares. Honestly, if you're short shares, honestly, I think the best advice would be just to wait. I think that's what I would do in this position. Is I'm not super confident in Chipotle in the immediate to short term. I do think that things will eventually recover in the long term. I guess, yeah, if you were short a put, that means you got to sign long stock, yes. So, yeah, if you're long stock, you could set up a poor man's covered call if you think it's going higher. You could also just bag hold the stock and, see what happens. Like I said, next 3 to 6 months, I think, could be continued turbulence for Chipotle, but I think that they're too big to fail. I don't think that they're going anywhere. I think that sometimes some bullish news will come through and push this thing back up. We're talking about 2 upside gaps that need to get filled now all the way back up to like the 50 level. So theoretically, that should happen sometime. If you're holding long shares, best option might just be to do nothing, depending on how much of your portfolio you got allocated there.
Yeah. Managing these positions. And with that being said, we're going to take a look at NASDAQ here. We took a couple of trades today, guys. We took a couple longs at our value area low from today, and then we were looking to sell near our value area high. So what that looked like was these ranges over here, value area high being 25,567. But really what we had our eye on was 25,494, and we just wanted to see if we'd get some type of mean reversion type opportunity at these levels. So understanding that the market was trading within balance, and that's the first question we always ask ourselves, is the market trading within balance or imbalance right now? Because when we answer that, it gives us the confidence to know what type of trading behavior we can look for. And because we knew we were trading within balance, we knew we were going to be trading for that reversal, the rejection, or the mean reversion strategies at our edges of level, or at our edges of value like we were talking about. So let's mark this off at balance. Let's go ahead and change this to, let's go black. Again, I know the background's a little brighter, guys. Bear with me now. It's a little bit more of a cream white, though, like an ivory white. It's not just like a straight up white. It's an off white.
It is not just an aggressive white, yes.
Thank you. All right. But with that being said, we are trading within our level of balance here. So that's why we were looking for the mean reversion strategy near our value area low. So we ended up entering a couple contracts here and looking to scale out into these highs. One of my favorite places to figure out where to take profit is at swing highs and swing lows. So you can incorporate whatever you want to incorporate into your strategy, but what that looked like was this being the first swing high, and once this got taken out, this made me a little bit more, I would say a little bit more aware on my toes to start looking to potentially scaling out my last contract. Really, the best possible last target to reach is the exact opposing end of the level of value. So being able to short the value area high, it's dope if you can catch the run all the way to the value area low. Most of the time, it's not going to work out that way. That's why it's kind of nice to scale out of most of your position. Until we get there, maybe you got one contract on and it finally goes all the way to the other end, and great. You can scale out of that position right there. But after we took out these swing highs, we decided to cover most of our position right here. And that was just the only trade for the day. It really, there's really not much more to it than that, especially today being a bank holiday. That's kind of what gave us the confidence to not take any more trades at the same time, because you might ask, well, why not take the potential short opportunity at the value area high, or why not look to get long again at the value area low where you just got long at? Because, both of those moves would have worked out in hindsight, but at the end of the day, it's a bank holiday, got a little bit more uncertainty, not very confident in the price action right now in the market, so I was just making one of those decisions as an individual trader to pump the brakes and wait for the next opportunity. So that's kind of where we're at for today, at least. Sometimes it's like you'll sit, do that analysis, and not do anything for 30 minutes. You might do something an hour in the market open, maybe 2 hours in, and then it lasts maybe 10 minutes, and then you're kind of done. But it was a little bit more of a quiet day, at least.
Well, hey, at least you got some action. There's been quieter days.
Just a little bit. There has been quieter days. I did feel like we were watching paint dry for a little bit, but I'm not going to do too much complaining. I see some Wendy's baked potatoes in the corner of my eye right here.
Yeah, there's broad fast food discussion going on here.
Yeah.
To hit on a few of these, McDonald's is the only play if you think food is too expensive. It's crap. It's the cheapest of the fast food. I think I'd be inclined to agree with that, although McDonald's has gotten up on their prices as of late.
I agree.
Yeah, I don't know. I mean, the dollar McChickens were just 5 years ago, and I think a McChicken is over $3 now. It's like the inflation.
Something.
Yeah, the inflation is there at McDonald's too. Certainly, and it's we've got the $5 value meal is like what they have now.
I mean, it makes sense, right? Like if inflation goes up 9%, those are insane records. We gotta double prices, 200%. It only makes sense because we gotta. Inflation is going to keep coming. So we got to jack up prices 200% to take into account for the future inflation that we're going to
Yes, we all know that coronavirus made chickens 3 times more expensive.
Yeah, no, and I get it. If I was a CEO of McDonald's, I would need a couple more billions under my
Chickens are so cheap, by the way, guys, especially like egg hens. I mean, like $4 a pop for the whole chicken. So there's no way.
We got my man Gus looking up actual chickens. Well, my man's better buy the farm.
It's true. Chickens are incredibly cheap.
If you better buy the farm.
If you have the resources and the dedication, you can have infinity eggs
taking an investor,
pretty cheap.
Right? We buying a farm together, right?
I think I'm just going to take a stake in Westwater Farms. Actually,
that's actually completely valid.
Yeah. Why am I going to set up the farm? I'll just take some equity there, give them a little bit of free cash flow.
We got an operator right there. We got a farm operator right out there.
Yeah, how much free cash flow they got going at Westwater Farms?
Yeah.
He sells those eggs for super cheap. I can't imagine it's much.
Chicken feed isn't that cheap now.
Everything Thomas Westwater grows or brings in here is phenomenal. Thank you so much for the jalapenos, Mr. Westwater. They were excellent.
I'm out the stone fire.
They were hot. Our Totino's frozen pizza is still 75 cents each. No.
There's no way they're not. There's no way they are.
They're like $2.20 to $2.50. So still a pretty cheap little snack. Pizza rolls still pretty affordable as well. Nothing is too big to fail. GM filed for bankruptcy in 2009. Is GM still around?
GM.
General Motors is what I assume he means.
Yeah.
In which case I would say, they filed for bankruptcy, yes, but they're still around. They didn't. I don't know. Did they fail? Is bankruptcy failure if you survive? Psychologists everywhere want to know. Great scholars everywhere are asking. Wendy's baked potato and chili isn't terrible with chocolate milk. That is an interesting pairing. I'm a chocolate milk enthusiast myself. I don't know if I could get that far, though. I feel like I would eat that meal and then do the chocolate milk after as sort of a dessert thing. Back and forth on that sounds like quite something. Cheap food play is Wendy's. Yes, $5 biggie bag. Also legit. All right, that's enough fast food. What else we got here? Any trade? QLYS? QLYS. I do have a trade in Rivian that I will discuss here shortly. Holy cow. What is this company and what is happening with them?
QLYS.
Qualys Incorporated.
Go over here on the Tasty platform, check that one out.
American technology firm specializing in cloud security.
Got the gap up.
They're in 130 countries. Interesting.
Take this off. Take that view up off, rally to the upside. Decent IV rank. IV rank our vol's been contracting a little bit. A little bit of volume being traded there, a little over 100,000.
I don't know if I want to touch this right now. I'm trying to figure out what's going on.
Jared says IWM running seems sus. It seems like the whole market is running right now. I know we were just looking at ES at the same time, and it's looking like NASDAQ, the S&P 500, and maybe the Russell's running right now.
Yeah, the small caps running ahead of the large caps is interesting.
Yeah.
Right now. I don't think I have a trade on this Qualys to answer your question. Big deal. This is. I just don't want to touch this. I have no idea whether this is gonna, go try 170 for all-time highs or if it might fall off. I mean, this situation, this setup, if you made me trade it, I would be obliged to get short. I would be obligated to get short. But I don't think that I want to get involved with this against this momentum. Because, this isn't like gap and then we're looking like we want to sell off. This is gap, big downside wicks, and then the buying pressure just comes right back through. The bulls are all over this thing.
No, they are. Yeah,
Totino's yesterday, 2 for $4 sale. Heck yeah.
2 for $4. 2 for $4, so $2 each at Tostino's Pizza.
That's pretty good.
Is that
pretty good savings?
Tostino's pizzas were what, $1 each?
They're like $2.25 each. It's a little savings.
It's been a while. It's been a while for the Tostino's pizza.
Two Totino's pizzas is kind of just like one meal as well. Those are
completely
they're little things.
Yeah. That was a college favorite.
Oh yeah. Yeah.
Once those in the oven, you're good.
Pizza rolls too. Yeah.
Oh. Don't even get me started on the Hot Pockets.
So I've done something funny with Rivian here. You guys you've heard my soapbox about Rivian a million times, so I won't give it. But yesterday,
I heard it again. If anybody else, I heard it twice today.
Yep.
So
I'm gonna keep giving it. But yesterday, I mentioned, I like jokingly said, Rivian, every time this thing goes up, I actually am just filled with dread. I don't even get excited anymore because I know it's going to sell off. So Rivian took another gap up today, and it did finally break the 17 level that I've been complaining about forever. Not a confirmed break yet, though, as we retrace. So I decided to finally put my money where my mouth is and buy into the thesis that this thing sells off every single time it goes up and comes back down into this same channel, and I have no doubt in my mind that it'll test this $12 to $12.50 level again. So, against my long leaps, I have gotten a mini short-term Rivian short here in the middle. It's 31 DTE, which is December 12th, and I am short the 16, long the 17 call. So I would need this to come back down below 16 by December 12th. To really perfectly hit this middle, and I think that I will. This is what Rivian does, and I'm hedged also. Should it not do that, should it for some reason this time is the time that it goes ballistic and goes to the moon and gets to 25, whatever it may be, I have 2 naked leaps that will gamma like crazy if that happens. So I feel like I'm in a pretty good spot. I would love the mini dip to grab some max profit here in the middle. But yeah, I'm feeling pretty good about this. My spot was 758 or 1758. That is 1738.
See.
But yeah, so we're looking real good. I mean, that's very close to the top to the cent. Top to the cent was 1781. So got in right before that. We're back down to 1725 now. It looks like Rivian is going to do the Rivian thing, especially with this big old wick forming on the top. So, like I said, should it go higher and my leaps are printing, that's totally fine. I'm happy to exit this short call vertical tomorrow. But I think this will dip back below that 16 level within the next 30 days.
I love it. You know what we're going to do? We're going to go ahead and put on the short zebra on Rivian. And exactly what we're going to do is we're going to take the profits from today, which is $217 on the micros. We're going to risk that into this. So we can pretty much risk $2 to upside. That's what we're going to do, right?
Yeah, there we go.
I like that call out. See if you get filled there.
SoftBank sold its stake in NVIDIA in October. Yeah, I saw that. People are understandably a little bit alarmed by that SoftBank sale, but honestly, I think they're just taking profits. I don't know that I think that this is some. I don't know. I think SoftBank has some thesis that NVIDIA is about to dip and like this is the time to sell or anything like that. It feels more to me like they were just like, wow, this has been a crazy profitable investment. Let's get out and reallocate that capital somewhere else.
I like it. What was the ticker for SoftBank?
I don't think SoftBank is public unless I'm mistaken. I was pulling up NVIDIA.
Oh no, maybe not. See if they would pop up. Other than that, let's go ahead and check to see the
ADR.
ADR?
Yeah.
ADR.
Good ticker.
We'll do a quick look. Gotcha. Let's go over here to our watch list and just see what some of the biggest movers to the upside on the day were and some of the biggest movers to the downside on the day was.
Oh, I gave you the wrong ticker. It's actually OTC.
OTC?
It's SFTBY.
SFTBY. Oh, they got the 5 letters.
Yeah.
5-finger discount. Gotcha. On the day, down a little bit. SMR down on the day. Meme down on the day. Don't know what's going on in the meme world, brother. But Oracle also down on the day. I'm glad I cut my losses over here on Oracle. That one's been dead to me. I don't know what else you guys are doing and how you're managing your Oracle positions, but this has been taking a hit. I mean, new lows over the last couple weeks every single day. So IV rank is still there, trading at about 80 on the IV rank, 13.5 million shares on the day. So maybe selling some out of the money puts, maybe getting some long delta on at this point in time might be a little bit more attractive. Something to keep in mind is the earnings that we have December 8th. So that's only less than 4 weeks away. But Oracle seems to still be in play for the trader at least, right? Some of us might be on the wrong side of the trade, but that volatility is still an opportunity for another trader. So
I can't seem to figure out why the meme stock ETF would be down today.
Yeah, it's getting crushed.
It's
today a little bit, 3.5%.
I have the allocations here. If anybody's curious, the meme ETF is 10% Open Door, 8.7% Bloom, 8% SanDisk, 7.5% Applied Digital Corp. I've never heard of them before. APLD is the ticker. 7.4% Oklo, and then rounding out the batch, Rigetti Computing, Beyond Meat, AST Space Mobile, NewScale Power, which is ticker SMR, QuantumScape Corp, ticker QS.
There we go.
So Yeah, interesting. Some memes. There's like that's an interesting blend too, because there's some things that are like meme-ish, like in the way that they've ran, but also like are legit companies like Oklo and ASTS and
Nokia,
those spots.
BBBY, Hertz.
What else they got in here?
Go on.
IONQ is in here. IREN is in here. QBTS is in here. Rocket Lab is in here. Their lowest allocation is TerraWulf, WULF, which is a company I've never heard of before.
No, QS is kind of attractive here. I'm looking at the December 19th cycle. I'm looking at a strangle right now at the expected move. That's about $1.62 in credit, 67% pop. That's kind of attractive. It is a cheaper underlying too, so may do something in here. At least keep an eye on it. I know QuantumScape. I think it was another one. I think maybe Julia had brought up a couple times, but we'll still go back around to it.
Yeah, we will. It's pretty much going to be all the time that we got for today.
Cool. Anything else top of mind?
No, nothing else going for me. Hope Rivian comes down and then goes to the moon.
Hope Rivian comes down and then goes to the moon. And no, we'll see what we get for the rest of the market. We adjusted some of our QQQ positions. We may get on a QS position. Rivian's going to be talk of the town. The market's still volatile. See what other opportunities we get later this week. Nothing too crazy on the futures and those opportunities. But we'll come back and recap.
Yeah, that we will. Chris Vecchio up next.
Yeah, Chris up next. Thanks for taking the time to hang out with us. Tell Chris we said what's up. Take advantage of the man. Get those macro insights. But that's going to do it for today's segment. Be sure to stay tuned for more coming on next, and we'll catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
gotta look right. I gotta keep it smooth. You gonna want it right. They gonna bring it down. I gotta feel good. You wanna see my moves? Let's party all night. We gonna build it up and then we tear it down. They gonna know our name all over this town. We gonna stir it up and do things our way. So if you wanna move, get out of our way. I'm feeling fly tonight.
We're back. It's still Tuesday, November 11th, 2025. Happy Veterans Day. I'm your host, Chris Vecchio. He's Jamal Chandler. This is Futures Power Hour. Jamal, it's been a long time.
Come on, that's mild. You haven't been on air with me in how long? And you go in that mild? Are you serious right now? What is that? The new kid
years.
clearly hasn't done anything for you. I mean, well, I am shocked. You need to try that again. Start over. Do it again. It's been too long. Come on. You can do better than that.
I'm Richie Cunningham. This is my wife, Oprah. It's an Austin Powers reference. I don't know where that came from.
What's up, man? How you doing?
You know, a little bit of this, a little bit
First
of
of
that.
all, I got to say, good to have you back, man. It's great to have you back. Love you. Miss you. Happy about the new kid. Hope everything is going well there. It's awesome time. Enjoy it. I know it's tough, but it's awesome time. The Jets suck, and so do the Knicks. That's the other thing I'm going to say to you, okay? Like, just so you know, just so we're clear where things still stand,
Those
all
two
right?
things are true.
I'm just letting you know. Those things are true in my mind, okay? I think one of them's true in everybody's mind, but the other one might be a little subjective.
You know, about that first thing, I've known that for way longer than most other people.
It's not your fault. The whole, most of the whole in country, and maybe that entire metro area was brainwashed by something that happened as a miracle with Broadway Joe. I mean, it's not your fault. You just, you came along at a time when they were good, right? I mean, it happened to me too. I grew up in South Florida in the late 70s. The Dolphins were it. I mean, seriously, they're not that anymore.
No, they're definitely not that this year. So,
you have no room to talk in the same division, okay? Zero. Anyway.
No. Anyway. Yeah, this is becoming a therapy session, which we don't need, at least for my sports. I got NBA League Pass this year. $15 a month. You can do multi-view. It is awesome. I'm loving it. It's great.
You got? What do you got? You like YouTube TV, or you got like Comcast or something?
Just right through Amazon Prime.
Oh, okay. But do you have YouTube TV? Do you use that?
No, I'm not one of those people.
Interesting.
I still
what does
do
that
linear.
mean? What does that mean? I use YouTube TV.
I never cut the cord. I didn't cut the cord.
It sounded like something else you were trying to imply. Those people. Is that what you're trying to?
What do you mean, you people?
I'm like I'm a POS. I'm a POS because I'm on YouTube. Is that what you're trying to say?
You know, YouTube has it's a really smart business model, right? Advertisers pay them, and then we as consumers pay them to block the ads.
I know, right?
And so,
I know.
like, they get it up. Brilliant, just brilliant.
It really
All right,
is.
Jamal. We're vamping a lot here at the top of the show because, quite frankly, it's a relatively quiet Tuesday. Stocks are mixed. Dow's leading. NASDAQ is sagging, but it's not a crazy type of performance. The bond market, of course, is partially closed because it is Veterans Day here. You're seeing gold and silver meander around a little bit. The only standout, Jamal, that I'm taking a look at would be energy today. Natural gas up nearly 5% right now. Crude up nearly 1.5% itself. Yeah,
I've
I
been
had a
doing
short
things in
put spread on
natural
there.
gas since you've been out, man, and honestly, it's crazy. I know. I didn't have you here to talk me off the ledge, bro. Like, one of them worked really well. I did a strangle in natural gas, and I mean, for the better part of a month, it worked really well. One of my best trades of the year, so I figured, why not do it again? And yeah, that hasn't been a good idea over the last 2 weeks.
Yeah, I can imagine, you're jumping off the edge without me. Usually when I'm there with you, you go, this guy's nuts. Is this a good idea? I don't think I should do this.
I know. Now everybody's pointing at me like I'm that guy.
Yeah, right. John, we can go to the slides here. Let's get into it. Jamal, it's been fairly typical in the history of Futures Power Hour that we like to take a look at what's going on in the CME FedWatch tool when you and I get on the air together on our Tuesday show. So let's do that here for the sake of old times. Lots kind of. We're still looking at a December rate cut, 67.64% chance. That's for Josh at home. Got to round out to the 100th for him. But this is a downshift from where we were a few weeks ago when the market was pricing in north of a 90% chance of a rate cut. So two things there. Yes, the cut odds have come in alongside the government shutdown because there's just, quite frankly, no data clarity. But two, it's still above that key threshold of 55%, which if you go back over the past effectively 30 years at this point in time, anytime the market has seen at least a 55% chance of a cut or a hike, either direction, the day of a Fed meeting, the Fed has delivered in that direction 100% of the time. So for me, a 67%, a 90% chance, you're getting a cut. That's what the market's telling you. But why are we seeing this sag off, I guess is my question here. Is it something we should be worried about? Is this a market that you feel, in my absence, was only rallying on the back of these rate cut odds, which of course the Fed did cut in September and again here in October, well, last month in October?
Mm-hmm. I mean, honestly, it seems as though like if we, clearly if they really do work towards this resolution here and we get some type of situation that occurs positively for the ending of the government shutdown in the next 24 to 48 hours here, I mean, well, what does that mean? That means we're going to start getting data again. What's data going to show us? Probably stuff that's not so great. And so I think that's one of the reasons why we're starting to see a little bit of movement there. Because again, before that, it was like, well, I mean, we're going to cut. We don't have any data to show us otherwise, right? And that's kind of been the sentiment. I feel like that's changed a little bit. So it seems to me that might be some part of the reason why some of that data has changed overall.
Well, one of the pieces of data that we do have our hands on during this government shutdown, of course, is the ADP report, which they provide a now weekly update for their data. And the data this morning wasn't great because ADP is showing us that the private sector lost jobs in late October, shedding 11,250 jobs. That's the week through 4 weeks through October 25th. So the economy could be slowing down, Jamal. And you and I see this all the time, and we've been talking about it for a year plus now. The only thing that matters for a stock market is whether or not the economy is in recession when those rate cuts arrive.
Yeah.
So let's just head over to what's going on in the stock market here today. It's an S&P 500 for our sake is doing the right thing because last week when I briefly came back on the air on Thursday, we put on the long MES position. So that's working out well. The tech stocks, though, are taking it a little bit on the chin, and I suppose NVIDIA is the first place we should look if we're going to talk about the broader tech pullback. It's off by 2.5%, but it's off the lows. What's your broader take on the market here? Let's say I just came out of a 2-month-long coma and someone needs a refresher on getting oriented. What's the deal with AI, as Jerry Seinfeld might say?
It's actually a good question. And the reason why is because I remember when I was I was maybe 3 years into trading, and I was working in this one group, and I was I remember one of our senior traders left the desk and he came back and I started filling in this dude on everything that had happened while he was gone. He was like, I don't need to know. I was like, really? You don't want to know? I don't need to know. Just take things for face value where they are right now. So truth be told, your opinion is probably way more valuable than mine right now. I've seen all this trauma, right? And so, like I always say, like people who traded in 1987, when I first came in and I was the idea of selling a put, like a naked put in the name, was absolutely crazy. Those dudes were like, never sell a put in the name. When truth be told, there's nothing more simple than understanding your risk in that situation. If it goes lower, you're going to get a sign on your stock. You're actually going to get it cheaper than you would have ever thought. And if you do it right and you're doing it at a strike, right, that you care about, you're going to get stock at a level that you care about. And it's not like it's catastrophic failure. If you do it too big, that's a whole different story. But just that, right? Like that recency bias for some of those guys who traded in 87 was like, it was the scariest thing. So honestly, Chris, I think your vantage point is the best because, man, over the last couple of months, the idea of all the money that, and I know you haven't been completely in a vacuum. I know you. There's no way you could stay away. But all the stuff that has happened, I think that has made the market nervous somewhat on AI is all the money that's circulating back and forth, right? I'm sure you've seen some of that. OpenAI gives this person money, somebody gives this person money to OpenAI, et cetera. And it's happened in the Oracles, the Microns, the AMDs, the NVIDIAs, all over the place, right? And so, of course, that leads to this idea of bubble talk. And I think that really, no pun intended, bubbled up last week. That was one of the main reasons why we were weak, because everybody's all of a sudden questioning what's going on with AI. And it's hard not to get a little nervous when that comes up because the names that I just named, those are the ones that are controlling the market, right? They have been for a while. Before, we used to talk about the concentration of the Mag 7. Now it's about a lot of the names you mentioned today. And when you look, at least earlier, those were some of the biggest names that were down, the Oracles, the Microns of the world. You're seeing, things like SanDisk, names that we hadn't talked about in years, SanDisk and WDC, which were making computer PC hardware. Now they're going nuts because of this whole, as I'm sure you've heard the term, AI supernova at this point. I'm sure you definitely heard it. You talked to Dylan
Radigan.
Yeah,
Yep.
and so that's it. I mean, but I don't know. Is that scary for us, or is this just what ingenuity looks like, and we're staring it right in the face right now, right? Like the difference once again between this and the other scary time for techs in early 2000s was companies were coming to the market that had zero revenue. There's at least money here. NVIDIA makes hardware. There's things like that. So it's not like this is
margins.
a complete fad. At 50% margins, yeah, true. But it's not a complete fad. And I think at some point or another, we just have to really analyze how much money is at stake and how many things are being made and what they're actually doing. Are we getting the return on investment?
Yeah, I saw some private sector tracking recently for what's going on with NVIDIA's chip costs. The old generation, if you're looking at H800s, if you're looking at the new Blackwells, they're hiking chip prices next year in the neighborhood of 8, 10, 11%. They're not doing that from a position of weakness.
Right.
They're doing that from a position of strength because they can charge people that money and people will pay them the money for that. What I find interesting, Jamal, is I threw out a theory here with Ilya, with Dylan. I talked about it with Nick a little bit. I'm curious as to your thoughts. If we are really in a cycle right now where AI is eating jobs, then you're rooting for bad jobs data if you're long tech stocks. Because the more the job losses pile up, the faster the penetration AI is going, which substantiates all of the CapEx spending. Because you can get the earnings, you can get the growth without the people. And so today's ADP report comes along and the market jitters around a little bit this morning. But sure enough, what's been going on here over the course of the day? We digest the data, stocks are up. Economy's losing jobs. Rate cut odds are slightly higher. So what's good for rate cut odds, good for the stock market for an absolutely sickening reason. Do you think that's a line of logic we should follow here? We see these bad figures come out over the next few weeks. It cements that December cut. And sure enough, it's because the AI revolution is real. So why not keep buying the dip in the Metas, the Microsofts, the NVIDIAs of the world?
Oh, that's an interesting thesis. I mean, I think we'd have to see it happen. I mean, look, we all know that the market can show us one thing and completely pull the rug out and show us another. The market completely did not care about what was going on at the government level, right, with the shutdown. We saw that until last week, late last week, when it started to seep into a couple of stocks, specifically airline stocks, and I'm sure a few other things. And then all of a sudden the market started to care. And I think what you saw yesterday and what you're seeing again today with the buying the dip situation here is there's still a little bit of euphoria behind this idea of, oh, yay, they're going to end the government shutdown. But when the market wakes up next week or 2 weeks and they start coming out with this data that looks terrible, assuming it looks terrible, I don't know, I think we could see the market seeing a different tone. So
it's going to look pretty bad when it does start coming out.
I mean, yeah.
That may give us a little bit of a little bit of a honeymoon period where the market says, okay, the government's open. We avoided a big recession, because if after 40 days, you get into a window where government agencies can start to be permanently shuttered. And if you start to see these airports shut down, your commerce will grind to a halt. Period. So, okay, that's been avoided. We're not going to see a fall off in earnings. With earnings growth has been fantastic the last few weeks. And I think that's actually something to hang your hat on. If we're getting around the corner of this, sort of Damocles hanging over the market thanks to this fiscal risk.
Yeah, but didn't you notice how
the world earnings are up?
Didn't you notice how a lot of these names pulled back, even though they had good earnings? A lot of these big names that we look at. That was kind of interesting.
To me, is both a good thing and a bad thing. It's a bad thing because it shows that the market's in a mindset of punishing losers and not rewarding winners, even though margin growth is expanding right now. It also means that people in the short term are probably a little bit too long and don't have any new capital to deploy. And they see these good earnings as liquidity events to like allocate across their portfolio, change allocations. But then the other side of it is, it just also means to me that people, the underlying strength of the market persists, and it just reinforces buying the dip. So here today, we're seeing a cycle up to a new relative high, not just for today, but for the week, 68.73 in the S&P 500. This brings us back to the highest levels that we've seen since last Monday, Jamal. And that's a break of the downtrend that defined this correction, if you will, this 3 to 5% move, depending upon the index that you're looking at. The downtrend is now over. So putting that downtrend on this lower term time frame, 1 hour, 2 hour, 4 hour, into context with what we just saw here now over the past few sessions, this is a beautiful Morningstar candlestick cluster, 3 candlestick bottoming pattern that has appeared exactly where the market has bought dips previously, in that band between the 1 month and the 50-day moving average. This has been the defining buy the dip opportunity throughout the past 6 months. And here it is holding up once more as we peer into weekly highs. I can't help but think that we're going to have a shot now at yearly highs again, if not new all-time highs near 7,000 before the bells rung.
It does appear that way. I mean, look, I still have longs on. It's not like I vacated all my longs, but to play devil's advocate, you are starting to hear a little bit of more chorus of negative news, right? And a lot of it is surrounding whether or not AI is a bubble, et cetera. And so,
Jamal, I'm on overtime with Ilya. I hear negative news every day.
Yeah, I know. I mean, it's kind of fascinating. I mean, to continue to just hear that, but the market shrugs it off, honestly, and the market continues to shrug it off.
Proven guilty.
I don't think there's any reason to get short unless you're looking for a short-term pullback. Like, that's one thing, like a quick pullback. But other than that, I mean, the trend is still higher, I think, and it's going to be on the backs of these names.
Well, right now you have this new weekly high here in the S&P. So in terms of sticking along with this, I myself am. The question is whether or not it's worth using this opportunity in the NASDAQ, which really hasn't made the turn like the S&P 500 has. And given the overhang of this AI narrative, Jamal, I don't think that's a bit of a surprise that it's struggling. But what you do see here today, though, right, talking about rotation, taking some cream off the top, reallocating elsewhere. SoftBank just did this. They apparently completely jettisoned their NVIDIA position. They have no NVIDIA holdings anymore because they're looking for the next 10x opportunity, and they don't think it's going to come from NVIDIA.
Right.
But that means, as a mindset, you're just sold down your winners. You're reallocating capital. What's the leader today? As the NASDAQ lags, your Dow Jones is here surging to what would be a new high, not just for today or for the week, but hold on a second. Are we peering up into what would be a new all-time closing high here in the Dow Jones? It seems like it. So it's not like the capital's fleeing equities. It's sloshing around in the container. It's moving from one side to the other. And to that point, do we really think the NASDAQ is going to leave, stay behind, and not rally? We just had the correction, Jamal. I see that candlestick pattern here. I see our resistance near 2580, 800 or so. So thinking about crossing that threshold, going out towards the end of the month, we'll call it 50 days. Could we see a push into new all-time highs here in the NASDAQ? Why not? Everyone wants to have a nice Christmas. I do too.
Now, to that point about SoftBank, it's a good call out, because I know that's been huge news, right, in the market. But if you look at a lot, and you can easily look at their positions, a lot of their positions, it's not the NVIDIAs of the world. I mean, honestly, it's a lot of smaller names. And to your point, like, they're looking for the next 10x thing. You ain't going to get that from NVIDIA. You already got that from NVIDIA, honestly. You're not going to get that from them again, I don't think, or that's their bet. And you know what? That's what they do. So let's keep it in perspective. Them getting out of NVIDIA doesn't mean like, oh my God, NVIDIA's over. Doesn't mean that. Matter of fact, they're still connected in AI in a major way through a lot of these other names. So trust me, they're effectively still long NVIDIA. They're just not long NVIDIA.
Yeah, they're the second or third largest fund. So it's OpenAI Foundation, then Microsoft. And I think SoftBank owns 21% of OpenAI. So they're exposed to it. They have plenty of exposure to the space, in fact. Whether or not that's the right allocation for them, different story. Jamal, we're looking out 50 days, so that means we do need to move over to the NQH6 contract. The high there is 26,670, excuse me. So going out to 50 days, if we wanted to bracket a trade around there, 26,500, 27,100. Okay, why do we care about these? That's going to give us you a 500-point wide call spread. It's just under a 2-to-1, risking 1 to make 2. It's a big position, though, in the NASDAQ futures. Maybe pinching it in to 250 points wide is a little more palatable. In that case, it's more of a 1.5-to-1 risk to reward. It's a moonshot. It's a roll of the dice. Triple Qs may be the better vehicle for this, for the average retail trader, of course. And I don't think that's untoward. Maybe S&P 500 or MES would be better suited for some folks. But I'm squaring up this trade now, right? I'm not going to get the same type of risk to reward once we cross the thresholds that I'm thinking we'll cross. So I have that confirmation. But I'm willing to take that role given how this market's been behaving with the impulse of lower rates, with the wild fiscal spending. Deficits are going up. And deficits are going up because we're spending more money and sending more money, relatively speaking, to higher income earners than we were over the past 3 or 4 years. Where do these people put their money? This has been the thesis for months, Jamal. Putting it into the stock market. So I just, year end, November is a good month. It's one of the best months of the year for equities. And this is a month where the contrarians, you can't say that this is a market with too much sentiment baked in right now. Everything is still AAII, CFTC cop positioning still shows traders are short in both the NASDAQ and the S&P in the futures market. This is not crowded right now. People are scared. And when people are scared, the market still goes up.
Yeah. And again, who knows? I mean, they may be short that. I would be shocked if they weren't short the NASDAQ against other things that they may have, maybe individual names. I mean, being long, trying to get long Microsoft and Meta right now and maybe a couple of others and being short the NASDAQ sounds like a pretty decent idea to me because, I mean, you can argue that Meta and Microsoft, for example, are a little oversold.
They are a little oversold. In the NQH5 contract, if we take a trend line off the highs, the 29th of October, the 3rd of November, that means we clear that trend line tomorrow night, perhaps, on a breach of 26,000, we'll call it 150. Why do I care about that? On this 4-hour time frame, swing lows on October 30th, become resistance here on November 5th. So a world in which we find ourselves trading on the chart over here, Jamal, that's when I would want to be looking long into new all-time highs from the NASDAQ. And that's when it makes sense to pull the trigger on this. Otherwise, maybe it's a false breakout for the S&P. Maybe it's a false breakout for the Russell and the Dow, and the NASDAQ is the one we should be paying the most attention to. And its failure to clear this key level near 26,150 and NQH6, that would be the tell. So quite frankly, we should treat it as the tell anyway. If we're breaking through there, bulls on parade. If not, maybe it's a trap. But that will be the line in the sand for me moving forward.
I like it.
Let's roll with that. So we have S&P, we have the NASDAQ here. The Russell to me is the most confounding one because when I popped back on air on Thursday, Jamal, I couldn't help but notice it was only 0.2% higher from whence I left, which then on Friday, it meant that it had been negative over the prior 2 months. We're reestablishing ourselves here a little bit, but what's with the private credit issues going on in the market? What's with the Russell not performing as well as anything else? Is this just people not wanting to miss the tech trade? Do we have a bigger fish to fry here that we're missing out on? And should we be looking at downside exposure in the laggard?
Well, one of the things that I learned more recently, and I don't know if you knew this, I looked at some of the the holdings within at least IWM, which I'm assuming, obviously Russell's similar holdings. You got to look at it. I was a little surprised. I think Oklo was one of the larger holdings in there. Bloom Energy, some of these power names that we have been seeing more recently. And they've had great runs, of course, and I think those are some of the things that have pushed it to these levels. But I think some of the weakness that happened more recently too also is one of the reasons why it's seemingly like it's been running in place since you've been gone.
Running in place, lots of sideways chop. No vol though.
No.
16.8 IVR. Would you do something like a short iron condor here, playing against the recent swing lows and up against the swing highs? You got not quite 200 points. We'll call it 180 point range or so.
I mean, it's just been so sensitive at times though because of those names I've mentioned. And then, of course, the changing interest rate environment, which, the change, even though the change is coming, it seems to be almost pretty steady knowing what's going to come. But it's been those names, and I think is one of the things that makes me a little bit nervous about an Iron Condor because there's just not quite as much vol as you would expect. Those names certainly have it on their own. This doesn't, and it's been, it's totally different from what we were dealing with most of the year, right? When we would see Russell 2000, a little bit of vol to it, we could easily put that trade on, know it's going to stay within this range. It's a little different now.
It is a little different now. With respect to the seasonality for this month, I think the Russell is the place that you'd want to look if you were expecting a big move to the upside.
Yeah.
Average gain over the past decade has been 5.44%. That leads the S&P, the NASDAQ, the Dow Jones. Curiously, December has not been great in recent years for any of the stock markets or any of the stock indexes. Last year, down 1.91% for the S&P, off a bit for the Russell. S&P averages 0.01% loss over the past decade in December, even though December has produced gains 60% of the time, which I suppose tells you that it's either going to be a decent month or it's going to be a really bad month, right? Just given the distribution for that to have a negative return despite higher, greater frequency of positive returns. Jamal, I want to look at the technicals here for the Russell real quick. I see swing lows on this 4-hour time frame over the past several weeks, really going back to early September. That's going to be around 2380. I see swing highs here in RTY Z5 up near 2566. So if we want to just get a little bit below those technical levels and a little bit above, we could do a short iron condor just to ride it out over the next few days. Not quite the 45 and 21 out, but at 31, we could put on a trade for the next 10 days and play ping pong between those levels and try to pick up some coin. It's almost a 1-to-1 risk to reward because the probability of profit's only 47%. Given the fact that bullish on the S&P, bullish on the NASDAQ, looking to get longer there, I'd be willing to take something a little bit more directionally neutral here, see if we can get filled on this just for the sake of diversifying strategy and timeframes.
Well, let me ask you this. As far as returning to new highs, whether it's NASDAQ or Russell before the end of the year, both December 31 trades, which one do you like most, the idea of returning to new highs? Or just returning to old highs, if you will? You do.
Yeah, there's so much. I think one of the motivating factors, and you and I have talked about this a lot, is that when you are a buy-side participant in the market, your job is to make money for other people, right? Maybe you have your own money and you're trading it, but like your job is to invest and make other people money. And you're tracking the stock market. So if you underperform the stock market, people look at you and say, what are you doing? I could have just invested in SPY. I need to waste these administrative fees, these management fees, right? On you. I could have just put it into an index fund. Give me my money back. So in April, the market got really not just abandoning ship, which is all the selling. A lot of people got short. And for much of this year, this has been a hated rally, as you said. And you look at the sentiment indicators now, and you look at the AII positioning, it's not like people are, long out the gills. So I think that there are many folks who have been underinvested, who have been trying to play this too cute, who have been ignoring the simple fact that while there's a lot of noise out of DC, interest rates are down and deficit spending's up. And that tends to be asset inflationary. So the incentive still could be to chase. And so I could see people saying, going into the fourth quarter, we didn't have any tech allocation. But when they look at their year-end statements, people will feel better knowing that they've been exposed to NVIDIA, to Microsoft, to Meta. They'll see those names in their portfolio and go, okay, at least I had some AI names by the end of the year. If those positions had been jettisoned. So there's a weird set of dynamics right now psychologically that I still think incentivizes people to chase this market to the upside.
No doubt about that, for sure. Do you still think the strong dependence is still exists for Russell 2000 and the rate cuts, right? I mean, is that still somewhat of a thing, or does that not really even matter much anymore?
It still does. Those companies, those constituents of the Russell still retain a higher amount of floating debt than the companies that are that make up the NASDAQ or the S&P 500. So any relief on the rates front will reduce cost of capital for your Russell companies. That's coming around the corner, but then you go back to the deciding line. Are we getting rate cuts for good reasons, maintenance reasons?
Mm-hmm.
Are we getting them because recession's here? And there's a fine line, right? If we're shedding 12,000 jobs over the course of 4 weeks because of AI, it's not really recession. It's just kind of stagnation, but the earnings keep going up. So where are you going to be, Russell or tech? And then for the tech companies, if they want to do this AI build out, a lower cost of capital means the risk of them going bust is lower. And this all not panning out because they don't have the runway they need. I don't know. So I still think the NASDAQ here's got the juice.
No, that's a good point. I mean, again, you could say in some respects, based on some of the names that are in the Russell, the Russell names are sort of the picks and shovels to the NASDAQ, right? I mean, as far as when you think about gold and gold mining, right? The people who made the most off of gold mining are the ones who sold the picks and shovels to the people who went to mine gold. The gold is essentially the NASDAQ names, but the picks and shovels, again, with the energy and all these other things, are coming from the Russell.
You would think that those companies would be doing a bit better because, quite frankly, where are the applications right now? What are the my Alexa here got an upgraded voice. That's really the impact thus far I've seen in my day-to-day life. Let's talk about treasuries here, up slightly. And it's less robotic. It's actually, it's better. I don't know if it was worth all that, those billions of dollars.
Don't worry, Alexa, it heard you, and it's going to use that against you really soon in your house.
That's fine. I've already got in trouble talking to it, apparently. It's a flirty tone. Let's go over to ZB here. ZB 7.9 IVR. Little bounce, Jamal. I made the case yesterday that if there was a place to try to think about swinging something long, it would be against this 116 area, 116 and a half. Highs in July and August, support in September and going into October, and here thus far at the start of the month. You can make the same thing going on in ZN, which, given the volatility profile yesterday, I went a little bit more towards the double bull. I'm short a put spread and long an out of the money call spread right now in notes, but similar type of deal where former resistance has become support. So why not buy and hold again a position against 112? How have you found notes to be and bonds to be, treasuries generally, over the past 2 weeks? It looks like nothing's been going on, but has it felt like that?
100%. I haven't touched either one of these in a while. Probably since before we stopped being on air together. It's been a minute. I really haven't been able to figure out exactly what's going on in here. I mean, the big move that happened in October, it seemed like it was really about to be onto something, and then things completely changed. I'm glad I haven't been in it because it's been kind of confusing. So I've just been watching from the sidelines. I haven't been. There's really been no serious interest from me. And there's been so many other different things, as you know, that I trade. So I've kind of allocated capital there. But I have not seen many trades in bonds that really pique my interest. Can't figure them out.
Well, it's been chop. You've seen pushes higher in IVR, but we're talking about, well, these look like big rallies in volatility, Jamal. That's certainly an illusion. The high IVR is basically 25. You zoom out a little bit and you'll see how quickly that flattens out. The fact that we've seen Fed rate cut odds come off over the past week and a half, 2 weeks, and treasuries have held the line makes me think that the market is looking at treasuries as a place to lock in yields in the event of recession as a potential hedge. I could be wrong, and this could just be more sideways grind here. But against 112, we're talking about the risk to reward right now. Narrative aside, if we hold 112, it feels like this is a good long. And if we rally up into 114, given the recent price action, you'll probably want to reduce your longs. No reason to overthink it. Same thing for the bond market in ZB. If we're near 116 and a half, good place to add long. If you're up above 119, maybe lighten the load. But the turns, the longer term story here, this is the big picture, Jamal. We can't forget this. And this is certainly something that I looked at immediately when I came back to work. What's going on with our mega breakout? Are we seeing, and let's go back further in time now. Wow. COVID highs, right? What's going on with our major long-term bottoming effort down here? You know, that's a really funny place, 116 to pivot, because that's been an area where the market has been contending with pivoting for the entirety of this year. This is actually a really important thing that the market may have just done, bouncing off of 116 after this pullback in. I think that if we want to be coy and get long stocks and try to ride this Bronco until it kicks us off, the least harmful thing that we can do for ourselves is get some out of the money bond exposure with enough duration. Because if the stock market goes sideways, the Fed's cutting rates for bad reasons, the bond market is coiled and bottoming on a 5-year chart, a weekly 5-year chart. And we should not ignore that, whatever the story is being told otherwise.
I don't disagree. It's just been hard to trade them given, I mean, I've been calling this outside of today. I've been calling this the greatest market ever. You've been able to trade so many other different things, whether it's futures, whether it's nat gas, whether it's even oil that has bottomed at times and bounced back up $1 or $2 the very next day. We've seen it in, obviously, equity futures have been just moving all over the place. This is definitely one of those trades that takes a lot more patience in bonds right now, and it requires duration. So I like where your head is, but it's definitely one of those that requires some duration, and it's going to require some time.
I think there is a way to express this, because if we go out to the H6 contract at 101 days, so why do I care about 101 days from now? If we think about the CME FedWatch tool that we looked at the start of the show, there were a few meeting dates laid out there: December 10th, January 28th, March 18th. Why do we care about 101? Because thinking about the timing of this, that puts us at February 20th. Between the December meeting and the January meeting, we are looking at one of those two meetings producing a rate cut. Just one of them. On the odd chance that the market sees a need for 2 rate cuts during that time span, it's probably not for a good reason. And why do we say that? We've seen the inflation data.
Yeah.
It's not exactly cooling off. So it's not going to be inflation that's pulling us back in. It's going to be the jobs. So this 122 call, that brings us to the high that we had in April, 122 and 5 ticks. So if we can go to 122 and we short the 124, I can risk 3 to make, risk 1 basically to make 6, a little bit under that. I'm willing to spend $300 over the next 101 days. $3 a day to hold this position as insurance. That's a long call spread here. I actually think that's a great addition to potentially put into the pocket right now. Whether or not the trade gets filled, we'll see, but there's decent open interest.
No, it's a good idea, and that's the play, honestly, right? Like it's a trade that requires patience. It's something you can tuck in your back pocket and you don't have to look at every day.
No, so we have some bond things going on here. Bonds notes, they've been working a little bit, they've been working out today. They're edging up higher. Double bull in notes. Doing some lifting. Gold and silver have calmed down. They had a really nice move yesterday, which for you, Jamal, would I surprise you if I told you that I was long silver again?
Not at all. I'm glad to know the new baby hasn't changed you. I'm glad to know this.
No, I had a discussion with a reporter 2 days after Luke was born, and I was asked, are you planning on buying gold here for him? At all-time highs. And I said, I'm wondering if I've bought enough of it for him. Like, that's my primary concern.
Yeah.
So with the first kid, it was like, okay, we'll do the typical 5% allocation. And then this time around, we allocated 15. And it's like, that wasn't enough. So silver here, though, is beautiful. We've been talking about this the past few days now. We had the completion of the initial head and shoulders pattern, Jamal. Left shoulder, head, right shoulder. Finished up by October 28th. Instead, focus becomes left shoulder, head, right shoulder. Inverse bottoming pattern. The measured move off of that is roughly 52, which is a neat little coincidence with the October 20th swing high here. So we're riding this up right now. We had the breakout yesterday, but we put the position on last week. How are you handling the metals market after what appeared to have been a very crazy month of October with gold and silver's push surge?
I don't know if the other overtime guys told you, but I came on the show on that Monday the 20th, and I absolutely pounded the table, literally, about gold, and it was just overdone. It was clear. I mean, it was way above that 1 week moving average. And on top of that, if you looked at the options, you could see that there was no longer any upside skew. As a matter of fact, it was flat, and that was like your cue that something was about to go down, literally. And I think I had, as a matter of fact.
Can you repeat that? Can you repeat that, by the way? That's a really important tell in the options chain. You observed on October 20th that there was a change in the way that the gold skew. Can you just put a finer point on that? Because that's one of those little sticky notes you put onto your computer, you write into your notebook and say, whenever I see this, I specifically don't go long.
Yeah, you knew something was wrong with gold because of the fact that we always talk about how there's upside skew in gold. Gold crashes up, right? One of the things we talk about with skew, when we see it in equity markets, you can look at SPX right now. It crashes down. That's why puts are usually more bid on a volatility basis and usually dollar basis than the upside, right? So in any instrument you want, pick any one you want, whether it's gold, whether it's silver, whether it's stocks, whether it's a biotech, always get an idea of what the skew is. Most equities, the skew is going to be to the downside. In gold, it's to the up. So you just find equidistant things. Whether you find at the money and you look $50 in either direction, or you can literally do it by delta. You can look at 25 delta in one direction, 25 in the other, and get an idea which one costs more. It's literally that simple. For gold, it should almost always be it costs more to the upside. And on that particular day, you could see it was flat. And I showed them that in real time. We were sitting on the show. We talked about it. And up until that point, I think I had on a short MGC contract in the Tasty account. But in the personal account, too, this was that much interest. This was so interesting to me. I started building a put position in GLD from like the 13th, 14th, 15th, which was painful, by the way. It was about 2 weeks. I had some about 3 weeks out and then some about a month out. Just on the idea, and they were a little more in the money, and so obviously we kept going higher, which sucked. We came back on that Friday, the 17th, and then the very next Monday, another huge bid, and it just seemed like, okay, this is about to get ugly. And sure enough, it did. As soon as that happened, though, it was clear it was a different trade, right? Like as soon as you had those couple of days, it reset. Sure. And I was completely out, and I really haven't been in since. I have a GLD put spread, that's about it, but I haven't been in since. And I've been waiting, honestly, Chris, I've been waiting for what's happened the last couple of days for gold to show us which way it wanted to go off of 4,000. You could just see 4,000 was the level that there were clearly a lot of buyers and sellers at. Like people had made a lot of their bed at that level. And I was just curious to see which ones was going to win out. Arguably, you could say that the buyers have won out, and we might be looking at a shot towards 4,200 next. But it's going to be a lot more orderly now. And you know what's crazy about this, too? This is the third, probably, regime of gold we've seen this year alone. We remember earlier this year, right? We were playing upside call spreads, and it was orderly playing along, not like what we saw in October. It was just orderly playing along, and it would get a little bit elevated above the 1 week moving average, eventually pull back a little bit, and then maybe continue its climb. And then we saw what just happened in October, complete reshift and set. And now I think we're seeing another reset and shift here. So I'm still kind of trying to figure it out. I don't really have a main position yet.
Something fun with.
Bless you.
I miss sneezing. I miss sneezing on the show. For some reason, I don't sneeze between 1 and 2 p.m. unless I'm on the show. Okay.
No, you're allergic to trading, but you still love it, and you show up every day and you do it.
Exactly. August 26th, you get this crossover where the 1 week moves above the 1 month, which is above the 50-day moving average. Yesterday, for the first time since August 26th, we've seen a 1 week moving average cross above its 1 month, which is already above its 50-day. So I'm not going to say this is the same thing, but it is a reacceleration of bullish momentum. Right? If we follow any similar path that we did back in August, then we've just begun the next leg of the breakout. From my view, nothing's changed. Has the U.S. government done anything differently? Open, closed? Is it still retaining its posture towards trade that it had at the start of the year that carried it through September, October? Yep. Is the Fed cutting rates? Is Trump going to get more appointments to the Fed, which will make it more likely that those rate cuts come swifter? Yep. All right, so then why are we bearish? China's still buying. What do we care about anything else? They have to get all the gold in the world in order to substantiate their gold-backed yuan settlement system. So, Jamal, we broke out. We're now moving up, sticking long, staying long, not in the GC Z5 contract, but over in the H6. No, we're in the G6.
The one thing I will say that has changed, it seems to me, just looking over the last 4 days too, it almost seems like the gold relationship with the dollar is back again. Now, it's early, but I tell you what, that thing got out of whack too. I mean, you were seeing them kind of move in the same direction, and it really didn't make much sense more recently. The other thing too, which I up until today had been happening, gold, the S&P 500 and Bitcoin were moving in the same direction every day, either for like the last 6 days in the same direction. That seems to have changed a little bit too. So there's been a reset happening here overall. But I tell you what, it makes me feel good. If you want to trade gold again, it makes sense now that it's moving opposite of the dollar once again, at least the last 4 days.
Jamal, yesterday I put on a position in copper as well. Curious if you've gotten back in, because I know you had a hell of a month of July and August in copper. But here I saw the volatility in CPR, the equivalent ETF, the fund, 66.2. Yesterday was the high 50s. So going over back to HG, it seemed like a decent place to try to do something typical Tasty short iron condor against recent highs, against recent lows. Mm-hmm. So here I am. The short put spread side is 455, 465. The short call spread side is 5455. Looking to just do this mechanically. 40 would be 43 in and then 21 out. Has the copper market been enticing to you? Has it calmed down enough for you? I know that it wasn't easy. And I guess psychologically, traders may be able to take a lesson from your pain, right? How do you get back on the horse if you have? What's keeping you away from this market if you haven't gotten back on the horse?
Yeah, so it's funny because I wasn't even paying attention to copper until today. We just had, Thomas Westwater on Options Trading Concepts live earlier today, or as he's known by some people, Tuesday Tommy, on the show. And I actually worked.
I thought it was Westwater Wednesday.
It used to be. I know, confused the hell out of me too, Chris. Look, things have changed a lot, okay, since you've been gone. Don't ask me. I don't make these decisions. All I know is the man literally filed papers to change his name from Westwater Wednesdays to Tuesday Tommy, and that's just what it is now.
Dedication.
Yeah, it shows for him. He made a good, compelling case, the idea today of what's going on with copper and a lot of demand and what's going on with, energy right now overall, right? And so Mikey and I both looked at the idea of doing a calendar call, the 6-strike calendar call between long January, short January options long, and short December options. And again, the nice thing about this is that both of these are within the same future contract. And I employ anybody, if you're doing a spread, particularly in futures, make sure both of the options that you're dealing with are within the same future month, right? And so in this case, we are in even though it's Jan-D spread, we are in the H contract, which is the March contract for copper here, 514 right now. So I'm trying to get the 6 strike off. I probably just need to move my price up a little bit. I'm a nickel away. Not even a nickel, whatever that is. But I need to, I'm just going to go to 0.03. Let's just get this thing on and done. Fill me. Come on. Do it. And still didn't done it. But yeah, that's what we got going on.
Why calendar call spread here?
Well, this contract is not very cheap, and it's actually, this is about $700 a premium. At this point, I think it might be $800 now what I did, but it's more digestible. I mean, I've had a ton of positions on more recently, so I'm trying to find more capital efficient ways to get some of my positions on. I could have gone with the micro copper contract, which is MHG. Could have done that, but even that is about $1,800. And at that point, I made fun of the show. I've made fun of futures right now, and again, our gracious partners in CME. But I thought it was pretty funny how, and again, this just speaks to volatility a little bit. The micro copper contract is actually a little bit more expensive than the micro ES contract right now. For whatever different reason, I'm sure there's reasons for it, but I just thought that was funny because obviously copper can be way more volatile. So you could argue maybe the copper futures contract is cheap right now. I just decided to go with the calendar spread and options because that's even cheaper to get some exposure on.
Yeah, the micro copper contract tick value is $1.25 compared to the $12.50 for the big guy HG, and then the overnight requirement is a tenth, $14.85 versus $14,850. So. No options, unfortunately, but it is a tradable product if you just want to ride the futures themselves. I think the sideways chop is, a decent, if not logical, place to look in the short term. But we move on. Energy a lot stronger today, Jamal, which isn't necessarily good for me. We'll go to natural gas first because this has seen a huge surge, up 5.33%. It still has that 50.8 IVR. So while I am trading this in a short iron condor posture right now, I can't tell you that I'm feeling too comfortable. How is it doing today? It was underwater before. It's actually up $19 now. So I guess it could be worse. But natural gas here
it can
moving
definitely
to the
be
upside.
Worse.
I was looking at the NOAA forecasts because this to me has been a decent guide for understanding demand in the short term, right? Once we get through this cold spell in New York and Chicago, it was snowing here today. I know you guys had a lot of snow the other day. We're talking about 80% of the country's population experiencing above average temperatures for this time of the year.
Yes, we need it.
So I don't know. I don't think we're going to be advancing too far. I'm going to hold the short iron condor position. Maybe the fundamentals are wrong here, but today's actually not as bad of a day as I thought it was earlier when the position was deeper underwater.
It makes you nervous when you see the orange line, the expected move line move up into your contracts, right? Yep. And that's what's going on with me. I'm short the 510 call right now as a result of being short the strangle. I was short the 510, 330 strangle. I rolled my puts up to 360. That's something that hasn't been breached in this contract, so I feel okay with it to the downside. But yeah, we need to pull back.
Crude oil, similar story here, Jamal. Where are we? Back to 61. Was this a good place in June to put on a short iron condor position once Iran and Israel finished their kerfuffle? Yep. What about in August? You bet. And September? Sure. How about October? Absolutely. Do you know why? Oil doesn't do anything. It tends to trade sideways unless there's geopolitical risk. So
yep.
We have a rebound today. We're back to kind of the Bob Barker number. The price is right here for oil at $61 a barrel. I'm back into the sideways trade as well. Short iron condor, it's not the most appealing thing in the world. It's not the moonshot trade, but it is something to do. And so if you were looking at the strikes I'm in at right now, Jamal, that's still a 64% probability of profit, risking 3 to make 1. Standard tasty fare, 35 DTE.
Actually, it's been crazy. The last couple of weeks, you've been able to either do an iron condor and or use 59 as a floor to get $100, maybe $200 out of oil if you want to use an MCL contract too. So it's been a good trade, I guess.
Just been bobbing and weaving and not doing much more than that. We're going to keep it moving here, though. The dollar is mixed as we wind down the show. We see ourselves looking at the euro first and foremost, which still leaning short here, and we're back into the 1 month moving average. So this is kind of a line on the sand, if you will, for the dollar. Any more strength in the euro, the pound, through these levels necessitates perhaps a reconsideration of view. You can see where the pound, let's get rid of U trend line and take U horizontal. The August low, that's kind of holding up at present as resistance. But you can see if you're through 132 in the pound, if you're making a little bit more of an advance through like 116.5 in the euro, the dollar's probably losing some teeth. Why would the dollar lose some teeth? Doesn't matter. But in a world where it is, where are yields going? Probably lower. Good for our bonds and notes position. What about gold and silver? Probably going up. So I'm leaning long the dollar here in the short pound, short deltas in the Canadian dollar, the euro, the yen. But it's not the biggest. They're not the biggest trades, right? They're inconsequential compared to what's happening elsewhere. The yen to me, though, is absolutely delightful because this is my least favorite currency in the world still. And the fact that it's not getting any strength when its yields are going through the roof is a major red flag. So 11.6 IVR. I have my put spreads in here, 59 DTE. Don't see a reason to get off that train, Jamal. The water's warm, 64, 65. I still think there's opportunity right now, particularly if the dollar is able to, if the yen is staying weak when the dollar is losing yield, it's just, there's nothing good there.
Mm-hmm. Yeah, I got long dollar again 4 days too early, clearly, but I just got long dollar again via, like you said, short deltas in the euro and got a long put spread in there. And so that's the play. I still like the idea of being long dollar. I just had taken it off for a while, but now I'm back.
If we're reconciling this, sure, we just ran into highs from August, poked through, fell, okay, but bouncing at the 1 month, which has been a backbone over the past few weeks in recent touches. And this is still a series of higher highs and higher lows off of the low that we set in the middle of September following that Fed rate cut. If there is a place for this market to reaffirm its uptrend, it would be here. Here's the move off of the low from September, from October. So if you wanted to get long dollars, today could be the day.
Mm-hmm.
If it breaks here, however, we have different position management to deal with in our currency futures tomorrow, but that's tomorrow Chris's problem, Jamal. Today, Chris is having a fine time. What's on the calendar? You could see the sleep is really loosen some screws up here. Lots of Fed speakers. I'm sure you missed them, Jamal. I certainly have. All the favorites, the Williams, the Paulsons, the Bostics, even the Murins. They're all here. Delightful. We'll see the market move tomorrow over the course of the morning. Keep in mind those speeches, 9:20 a.m. Eastern through 12:30 p.m. Eastern. So you get a 3-hour block where Fed speakers could be moving the needle. And of course, you have the House representatives voting on reopening the government. Huzzah! Jamal, you and I are done and dusted here. Oh, why is the slideshow breaking? Already done and dusted. We're out though. I'll be back in about an hour and a half for overtime. You're back just shortly as well because you and I think, are partners now. We bump up into one another.
No.
After Dr. J, right? No?
No. Engineering and trade has been sunset, bro. That's it. I am done. That's right.
Well, you're now the new boss on OTCL, so you've earned it. Dr. J is coming up next. They couldn't get rid of him so easily. So he'll be sticking around here because you're watching Tasty Live, Jamal. See you next week, buddy.
Later.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and tastylive does it. Again, they teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Jim Schultz,
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Tuesday edition of the new time edition of the program. Man, you're here and I'm here, and man, it's going to be a good time had by at least you and me. And so thank you so much for being here and being a part of what it is that we are doing. If you're watching over on the tastylive network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion. And of course, you can communicate with your brethren who are also watching the program. Man, you can celebrate if you're a bull. You can celebrate if you're a bear. You can celebrate if you're delta neutral. Everybody is celebrating today because it's 34 degrees outside in St. Petersburg, Florida. And let me tell you something, it ain't right. It ain't what the good Lord intended. I can assure you of that. But thank you guys for being here and being a part of what it is that we are doing. If you have a question for me, I will drop it in the chat box. The earlier you get the question in the chat box, the higher the delta that I will get to the question. The expected move on the number of questions I get to per show, old time, new time, whatever, it's somewhere between 0.1 and 0.15. So the earlier you get that guy in, you might land within that fairly tight expected move. So, Ryan, bring us into the market. Let's have a little look-see at what's going on across the board. All right, so things are looking good. I guess all is right in the world again. Sort of, maybe. You mean S&P's up 20? Okay, S&P 500 is looking pretty good. You got the risk-free instrument, also known as the NASDAQ futures, which is an extremely high-risk product, just to be very, very clear. Down 43 on the day. You got the boomers just doing some boomer things, up 563. And you've got the Russell 2000 Futures Index up 490 on the day. You got bonds are up. You got notes are up. Got oil up, man. Look at the shifties, only up 250. Look at the Hunt Brothers up 62 cents on the day. And so that cheese and pepperoni, man, it's really pulling its weight. Like, it's really doing some things. I can assure you they're not putting pineapple on those pizzas over at some Hunt Brothers establishments. And so that would explain the bullishness on the stock, or I should say the product, of course. You got volatility. Volatility is probably getting beaten up a little bit today with the market somewhat strong. You've got volatility futures down 11 cents. I don't know if I'd call that beaten up, but maybe it's just a light dusting of something. Then the old VIX down 22 cents. So volatility is down. But all right, what I want to do today, though, let's continue our little journey through the portfolio of figuring out what's going on with the different positions that I have on, and then I will get to you all. I'll get to you all, see where you guys are at, and then later on this week we'll have other things happening. We'll have educational content. We'll have some more B- humor, some B- jokes, and some B- stories. Of course, it's all coming on down the chutes, and you can only find this on the tastylive network. Like, you can't find this anywhere else. Like, can you find consistently B- humor anywhere else on the internet? I don't think so. Like, speaking of expected moves, like, we're right there between like the 80 percentile to the 82nd percentile in terms of the grade distribution. And so, all right, let's take a look at. We left off. We only got through Amazon yesterday, I think, right? I'm pretty sure that's right. We got to do Delta Airlines. We got to do Delta Airlines. We got to do GLD. Man, I see you guys in the house. Man, look at you guys. Man, I see Rancid Vipers here. Look at this, man. Danish Dynamite. I owe Danish Dynamite an email, if I'm not mistaken. Man, Sam L showed up. Joe YQ in the house. Man, look at Up Down. I see you, Up Down. I see you in the house. I appreciate you, my friend. And so, man, look at you guys, man. I see, who else is in the house? Let me see. Rex Kramer's in the house. Dr. Jim in the house. This is the segment that I wait for, man. Look at that. I surprised and delighted somebody long before the surprise and delight segment of the segment. And so, man, I appreciate you so much, my friend. I appreciate you for saying that there, Rex Kramer. I'll send you the cash that we agreed upon for you putting that in the stream at this very time. But I wouldn't wait by the mailbox necessarily. So, all right, let's go ahead and, oh, wait a minute. Hold on. Hold on to your britches. Do you guys see what I see? Man, look at this. Guys, it's a new day. All we needed was a new time slot. That's all we needed. We could not get this done at the 2 o'clock Eastern time slot. We couldn't get it done. We tried, we failed. We could not get this done at the 1 o'clock Central time slot. We tried, we failed. Guys, look at Starbucks. Look at this thing. And forget about the fact that it's up $1.50 today. That's obviously all amazing. It's up $1.50. It's up to 86. Let me open up my position here. We've got our shares, which you see those guys right here. We got our little leap option action right there with a little long 55 call, kind of as a long share substitute. All that's well and good. And it's all right there front and center. But take a quick little look-see And what's going on over here? Look at our P&L open. It's evaporated. Look at this P&L open. It's a thing of beauty. Now, of course, it's still red because, hey, if you're Dr. J, you're Dr. J all the way. But it's not nearly as red as it was. Guys, check the tapes, man. Like, you'll see it, right? I've been LA Chargers from the very beginning. Check the tapes. You will also see that the P&L open on this position, it was a hefty, $1,100, $1,200, $900. I mean, it was pretty robust and pretty plump to the downside there. And look at what has now happened. And it's all because we brought in this leap option. And this is honestly why I don't typically look at the P&L open. Right? Because it doesn't really help you in making day-to-day decisions. It doesn't really help you in figuring out where I'm at on the trade. I would much rather take a look at, the activity page, or you look in the Allison chains or whatever. You can look at obviously the order chains here from the positions tab, but still looking at P&L open is not necessarily going to give you what you're looking for. When you start adding to positions, you're layering in tranches, you're taking away tranches, you're making adjustments, what have you, the P&L open is not necessarily going to help you. But should you find yourself in a multi-month long street fight against the P&L open bros, this is all you've got to do. Just add a little something to the position and boom, P&L open completely reset. P&L open basically like you're starting over from scratch. This is some good stuff, guys. I think we can just call it a day. We're 7 minutes in, but I mean, can I do better than this? Can I outperform what we've already done in the first 8 minutes of the show? I don't think so. I mean, I'll give it a shot, but I'm pretty confident that we are indeed going to fall short. But man, look at Starbucks. They laughed at us, man. They laughed at us. They mocked us. They jeered us. And they said, Dr. Jim, it's just not very good coffee. It doesn't matter. Who cares about the coffee? It's all about the coolness factor that Starbucks has been able to basically lock down in the marketplace that no other coffee establishment has even close to a hold on. Right? Again, the quality of the coffee, irrelevant. Right? Nobody's walking around with Caribou coffee voluntarily. You do that when there's not a Starbucks around. Nobody's walking around proudly holding a Dunkin' Donuts cup. Are you kidding me right now? Like, are you kidding me? It's Starbucks, baby. It's Starbucks all the way, ride or die. And this is how we do it. So Starbucks looking pretty good, up $1.45. And there you go. I'm obviously in a good mood about this Starbucks position. And the fence guy, man, he is crushing this fence. Like, we may have this thing done maybe Thursday or Friday of this week. And he's doing it all himself. Like, he ripped down the old fence, gone. It's already gone. He's already got new panels going up on the new fence. I mean, he's digging posts. He's got gravel. He's got concrete. He's got all kinds of crazy stuff going on. And so I'm very excited about the new fence situation as well. But all right. So we talked about Starbucks probably longer than we ever should talk about Starbucks. But it's okay. That's kind of how we do it. I mean, 2 o'clock, 2:30, it's all going to be the same. You can bet your bottom biscuit on that guy. But let's go to Delta Airlines. So Delta Airlines, a little DAL action. So we have a strangle on 52.5, 65 strangle. You can see you got the stock at 58.40, and we're up about 30 cents on the trade. And so of course, you can use the P&L open column, especially when you have a trade that you have not adjusted or added to or subtracted from. The P&L open is going to show you where you're at on that position, of course. And so right here, it does show me that I'm up about 30, 35 cents on the trade. So what are we going to do? We're not going to do anything. What are we going to do this trade? Nothing. Right? We're going right back to the default setting of doing nothing on this trade. Right now, it's working out perfectly. In fact, it's working rather swimmingly, I might say. You've got Delta Airlines at 58 and some change. Our strikes are 52.5 and 65. We basically have, in fact, here, let me bring up a chart really quick. Let's bring up a chart of Delta Airlines. I don't want to bring up, that's a 1 hour chart. We could click on the 1 minute or the 2 minute to get Errol Coleman those royalties, but I don't really want to do that. I'd rather look at dailies. Well, I'll click on it one time real quick. Well, that's a 3 minute. That doesn't get anybody anything. But 2 minutes, I just got my man 18 cents. So there you go. You guys should be doing the same, of course. We've got to help mine. He's just a young kid. He's just making his way in this world. He's just making his way in this life. And so give my man a little 18 cent royalty every time you click on a 2 minute chart. But if I go to a daily chart, let's see. If I go to a daily chart, let's do like, I'm going to do like a 6 month daily chart. So again, remember that my strikes on this trade are 65. So that's going to be up here. And then what was it? 50, was it 52.5? I think it was 52.5. So down here, right? So this is basically the playground that we need Delta Airlines to live in. I mean, look at this, man. Look at these wide lanes. This is like the Elaine Bennis wide lane stuff. Look at that. Look at how much room Delta Airlines has to wiggle and waggle and zig and zag. I mean, it's right here. We have so much room on both sides of the market. This is the textbook example of a strangle that's working. This is the textbook example of a trade that's doing exactly what you would like it to do. In my opinion, there's no reason to go in and kind of override the process. There is no reason to kind of go in and usurp, just the natural movement of the stock in doing what you want it to do. I don't think we should take it off early. I don't think we need to be controlling Delta. I think this is just kind of a sit on your hands and just let the thing work, man. Just sit on your hands. You're in a great spot. Let the strategy do the heavy lifting. And so that's what we're going to do right here, with a little bit of buffer on the up and the down for a little bit of wiggles and waggles. And so, all right, so that's Delta Airlines, wiggling and waggling. Let's go to GLD. Actually, I'm going to skip GLD for a second. Well, wait, am I? No, I'm not going to skip GLD because we can take a little victory lap on GLD. So look at gold up 64 cents today. And the futures are not up very much, only up a couple of bucks, and back over 4,100 though. So the shifties are obviously celebrating on their way to 4,500 here in the next, couple of weeks, I think. I mean, according to Peter Schiff, it's going to be by the close today. And so, again, hold on to your britches because here she comes. But GLD, we are up about 80 cents on the trade right now. We're very close to the profit target. You could make the case, hey, take that guy off, book the profits, and move on. I talked about this ad nauseum yesterday, so I'm not going to, kind of rehash all that stuff and just regurgitate everything we talked about yesterday. But you just got to be careful managing your winners too early because you need a lot more winners to make up for the fact that you're not getting 50% anymore. You're getting 31% or 37%. It makes you feel good, right? But are you making money in the end? I mean, that's ultimately what obviously we're trying to do. And so for GLD, I'm going to sit tight. I'm going to sit tight. In Peter Schiff, we trust, of course. In Schiff, we trust. I mean, it's very simple. It's a little catchy, and so we'll stick with that. So that's Peter Schiff and everything you ever wanted to know about Peter Schiff, although I don't think I shared anything about him personally or professionally for that matter. But I think that's enough. So IWM. Okay, so we're sure to put in IWM. Now, this one is a little bit different because we are quite literally knocking on the door of this profit target. I mean, we are at 48 or 48.5% of a 50% target. You don't have to be militant about the rules either. You don't need to be so rigid that there's absolutely no flexibility, allowed when it comes to, hey man, I'm 4 cents away. I'm gonna stick to this profit target and I'm not gonna move. I don't think that's necessarily the worst strategy I've ever heard, and I was a lot more rigid. If you go back in the archives and you check some 2017, 2018, 2019 tapes, oh man, first of all, the content is 100% cringe. So get ready for that. Right now, it's only about 97 to 98% cringe. So I think we've improved a little bit, and the trajectory of where we're headed, we'll be at 90% cringe by 2030, 2031. But if you go back, you'll see I was a lot more rigid with my profit targets, a lot more rigid. And so now I've adopted a bit more flexibility. I've adopted a bit more all right, let's not be so just, inflexible around the edges. If you're at 48.5, 49%, okay, maybe you take that guy off, especially when you're talking about undefined risk. I mean, this is a naked short put, right? So, I mean, it could all crash boom bang on us today. I mean, of course. I mean, is it going to happen? I don't think so. Is the administration going to let it happen? Probably not. I mean, what are we doing? 50-year mortgages, 100-year mortgages, 300-year mortgages. We've got 20-year car loans. Man, it's amazing. It's absolutely incredible. And by amazing and incredible, I mean, we're going to have all kinds of problems really, really quickly from all these things. But for right now, man, it's party on. For right now, you just buy it today and it's higher tomorrow. And so it may feel like these things are never going to go down. And it may feel like, man, let me squeeze as much as I can out of these trades. It's a little bit of a mistake, in my opinion, because you want to stick to the process. You want to stick to the mechanics and kind of stick to what it is that you're going for. Because, I talk a lot about taking 50%ers and turning them into 45%ers or 40%ers or whatever, and how problematic that can be. I actually think it's more problematic if you go in the other direction. So if you take a 50%er and you're like, man, this is working out really, really well. In Schiff, in Schiff we trust, in Trump we trust, in whoever else we trust. And you're like, I'm going 50% to 55%. I'm going to 60%. I'm going to whatever. That's a little bit tricky too, because now all of a sudden, especially with undefined risk, you are exposing yourself to unlimited risks for a longer period of time, right? And you just have to be aware that if it does reverse, now all of a sudden you're giving up all the profits you've earned on the position, along with the unlimited losses you had and you were exposed to from the very beginning. And so I really, as much as I don't love taking 50%ers and turning them into 40%ers, I like that a lot more than taking 50%ers and turning them into 60%ers. That to me is way more problematic. So all that to say, in IWM, we actually are going to do something. So in IWM, let's actually go ahead and let's do a little something. So let's close out of this IWM trade. And yeah, so I mean, 50% of max profit will be $1.11. We're going to close it for $1.16. So it looks like we're going to get what, about 48% approximately. And so that's really, and we're going to free up a ton of buying power. So you can see that right here. This was one of our bigger buying power positions. And so to be able to get that guy off the books is obviously super, super nice. So let's go ahead at $1.16. We even got improved to $1.15. So there you go. There's IWM. And then let's see, where are we at? Okay, we got a couple minutes till the halfway mark. Again, I'm getting used to these halfway marks at 252. I have a little post-it note right here on my desk that says 252, and so right now I see 248. We got a couple of seconds. Although I may have to ratchet that up now that I think about it, kind of like a zebra, right? Like when a zebra is going in your direction, what do? You ratchet it. So now that we have the new time slot, and we also have the production team. I mean, they're on us, man. They're on us about this getting done with 5 minutes to go business. And so I am going to make sure that I stick very hard to that rule. And by that I mean I'll probably hit it about 10 to 20% of the time. If I try to hit that, though, that obviously, now we have to ratchet up like the midway point of the show. So the midway point of the show is actually 250, not really 252. And so let me talk about one more position here. I mean, we've got Kimberly Clark, obviously. That's doing okay. We've got PayPal. Let's just do the rest of the positions, actually, because we can do it quickly. We've got PayPal. This is in an okay spot too, but I'm going to sit tight. I'll let it simmer there on the back burner and see if we can't get a little down move there in PayPal. That'd be super nice in the coming days and weeks. And then Qualcomm, Qualcomm, this was an earnings play from the other day, and right now we're in a great spot. I mean, Qualcomm looked a little. Did Qualcomm really do anything from earnings? I don't think it did. It was pretty much a non-event, I think, from the beginning. But right now you can see, I mean, we're in a great spot from a strangle standpoint. So I'm not going to do anything with that. But so there was there was quite a rally on earnings. So there you go. I mean, there's your rally up to 205. Wow, that's quite a rally. Was that from earnings? I feel like Qualcomm was actually, has it been 2 weeks? I don't think so. When did I do this trade? Wait a minute. We have to get to the bottom of this. Let me bring up my change here really quick. Yeah, that's not right. I did this trade on November 5th. For earnings. So November 5th is, hang on, let me zoom in a little bit. So November 5th, yeah, that's like over here. So this huge rally up in Qualcomm, whatever that was, it was AI, it was AI related. It's probably AI generated, actually. This candle that you see right here, this may not even be real. Am I real? Can you be sure? You can't. But if you look at November 5th, we're somewhere around there when we put this strangle on. So right now, my initial inclination was correct. We are just meandering around, which is perfect. When you have a short strangle on, like, you welcome the meandering. Like, you long for the meandering. And so the fact that Qualcomm is doing exactly that, it's perfect. I wouldn't change a thing about this Qualcomm position. And so that is the whole portfolio. And so there you go. That's some good stuff. So let's go to you guys, man. I see you guys in the house. Where are you guys at? Let me see if I can surprise and delight somebody else in the middle. I've already surprised and delighted somebody before the surprise and delight window there, Rex Kramer. So I appreciate you, my friend. But let's see, where am I at? I see a really, really good one. Where is it at? Here it is. Okay, beautiful. I see David A. Spinwall. 3264. What's going on there, David? I appreciate you, my friend. David says, hey, Dr. Jim, I'm new to selling strangles. Man, welcome to a very, very exciting adventure. And by exciting, I mean it's going to be quite terrifying a lot of the time. But it's also going to have moments. It's going to have splashes of excitement. And I think it's going to be worth it in the end. But David goes on to say, I'm trying to learn why do we roll the untested side instead of closing the winning side and rolling the tested side out in time and further out of the money. Okay. So yes, this is a great question. So I have a strangle on, right? Market rallies, because it can't go down, of course, it's not allowed to. Market rallies, my short put is drying up, right? The short put is the quote unquote winning side, as you put it. And, the mechanics are to roll the short put side up and not take the short put side off, but to roll the short put side up. So why do we do that as opposed to taking off the short put side? And I'll deal with the rolling out and rolling up situation kind of separately here in a second. But why do we choose to roll the untested side as opposed to booking the winner? Well, there's really two reasons. So number one, and you can look at the Market Measures archives, you can look at the option jives, you can look at what the Tasty Research team has produced when in regards to this, unless there's something new in the last couple months that I'm not aware of, which is possible because it's not possible for us to keep up with all the new Tasty Research because there's so much stuff coming out every single day. It's impossible for us to keep up with every last little piece of content that they produce. But as far as I understand it, what you're describing, David, is legging out of the strategy. So you put the strangle on and then you take one side off and leave the other side on. That's called legging out of the strategy. It's been shown by the Tasty Research team that there is no advantage to legging out over time, which may seem a bit counterintuitive because you're like, wait a minute, this is a winning side. Why would I keep it on? Why would I continue to expose it to risk? And that makes sense to me. And so, if intuitively it makes sense to you to take off the untested side because it's a winning trade, I don't see a huge problem with it from the Tasty Research team has shown there was no advantage to legging out of a strategy because I don't think it's shown there's a disadvantage either. So if that does jive with you, even if there isn't an empirically shown advantage to doing so, I would say go for it. Go for it. But before you do that, there's another point though. Remember, when you roll up the put side, in our example, right, the stock rallies, it tests your call strike, you're now more bearish on the position. When you roll up the put side, it does more effectively neutralize your delta on the position. And so you'll still be bearish, but you won't be as mega pint bearish as you were when you just have the naked short call on. And so by rolling the put up, you're able to bring in more premium, you're able to improve your break-even point on the upside, and you're able to better control your overall delta on the position. To where instead of being short, 50 or 60 deltas, maybe now you're only short 20 or 30 or 35 deltas. And so that's kind of the idea behind rolling up the put side instead of closing it out. Now, if you are brand new to the show, David, welcome aboard. You may or may not be familiar with this line. For every gimme, there's a gotcha. Now, we've already laid out several gimmies and several gotchas, so we're kind of at an inception level of analysis here. We're a couple of gimmies and gotchas deep into this thing. There is another gotcha, of course, with rolling up the put side or any untested side. If we did the reverse and the market was going down and the untested side was the call side, it'd be the same thing. It would just be flipped over on the other side. If I roll the put up, now I am exposed to whipsaw risk, whereas I would not be exposed to whipsaw risk if I took the put off. Now, what is whipsaw risk, of course? Well, whipsaw risk is exactly like what it sounds like. The market's rallying up. I'm rolling up my puts to bring in extrinsic value, to improve break-even points and control deltas and whatever. And I'm like, all right, I just want to get my break-even point under control on the top side. And then all of a sudden, the market crash boom bangs. And then all of a sudden, the market just goes down significantly. Now, all of a sudden, you're actually worried about your break-even point on the downside. Well, naturally, if you had taken off the put, then you wouldn't have to worry about that at all because you have no risk to the downside. And so these are the types of things that you want to consider when it comes to rolling the put side up. Again, only you can decide what makes the most sense. But I think standard practice is to roll that put up and control your directional bias, a little bit. I think that's the way to do it. Even with the market ebbing and flowing, like the way that I personally see it, I still kind of like rolling that put side up. Unless if it's selling for absolutely nothing, like nothing, then maybe you go ahead and extract maximum profit out of that. That would make sense to me too. But what about the rolling out of the tested side and also kind of readjusting that strike? Well, that's this whole idea of kind of recentering the strike that's tested or recentering the whole strategy. That's totally fine too. The research team has looked at this as well. And I'm not sure if there's a huge advantage to recentering over just leaving it the way that it is, but it certainly is a way that you can play the market when it comes to, do I want to continue to be directional, which would be not recentering, or do I want to roll out in time, use that extrinsic value that I'm bringing in from the rolling out in time to recenter my strike or reposition my strike such that it's in a more favorable position. I think that's totally fine too. It really depends on your own personal outlook, in my opinion. Do you want to be more directional? Then that would be not recentering. That would be remaining bearish and seeing if the market kind of comes back to you. Or do you want to put a greater emphasis on extrinsic value, time passing, maybe even volatility contraction, and less emphasis on direction? That would be recentering. Again, I don't know that there's a clear answer. I don't know that there's a clear pathway forward through the forest. I think you need to blaze your own trail in a lot of ways here. But those are a couple of things to think about. I hope that helps you with selling strangles and just getting started. And again, very exciting, very terrifying journey that you are going to be on now. I'm very excited for you, my friend. And so let's go to the beginning, though. Thank you, David. Thank you so much for such a great question. Brian Dowdy's in the house. What's going on there, Brian? Brian says, hey, Dr. J, update on eBay. Oh, eBay. That's right. Yeah, I remember the eBay position. My 85 December covered call is now down 300 and in the money. Good problem. Okay, so the call's down, but you're in the money. Basis of shares at 84.5. At the moment, I'm going with the do nothing strategy. But at what point should I do something? Again, I'm pretty sure this is an investment for you. So you're going to be adopting the do nothing strategy for a while, right? Because remember, I mean, if you're at eBay, you may not be physically at eBay. I don't even know if they have physical stores. But now you have, do they have physical stores? Has anybody ever seen an eBay store? Like, that seems like a bit of an oxymoron. Somebody let me know. Has anyone ever been inside of an eBay store? Like, I don't think so. But let me know. But eBay at 87, right now, keep in mind, you sold the 85 strike, right? And you sold it for whatever you sold it for. I can't remember what you said. I don't think you said even in there. But right now, you're in December, so you still got 6 weeks to go or whatever. Right now, you're in a really, really good spot. Like, you're in a good spot from the standpoint of, you're going to make some money, not a ton of money, but you'll make a little bit of money on your stock, 84.5 to 85, and you would keep all the premium that you collected on the call when you sold it if eBay stays in the money. Or if eBay stays above the short call and the short call stays in the money. If this is an investment type of situation, typically when the short call goes in the money, that's a very much do nothing scenario. That's a very much you're sitting tight and just letting it work. I think rolling up and doing things like that this early is a mistake because eBay could just as easily be 83 or 84, come time, next week or whatever. And then you'll be kicking yourself for having rolled up because now it's like, man, the short call could very well expire out of the money. And so I would just sit tight and I would just go live your life, which of course your life is being here with us, watching From Theory to Practice reruns. And so I appreciate you, my friend. But I would do nothing. Doing something doesn't really come into play until much, much closer to expiration for an investment style covered call, in my opinion. And I'm pretty sure that that's what you have here, if I remember correctly. And I did have my blueberries today, actually twice today. And so we are on point. Harold's in the house. What's going on there, Harold? What's going on, my friend? I appreciate you, my friend. I got my chess rating up to 900 at one point. It has since, there was a little chess rating mean reversion. We're now back under 800, comfortably back under 800. And so, but we did touch 900 there for a brief second. And so I was very excited about that. But Flower Power is in the house. What's going on there, Flower Power? It's a shame they don't put the new schedule up somewhere, but I think they're still trying stuff out. No, I think this is the new schedule. And I think they posted in the chat like several times throughout the day. It would probably be helpful to have on the website, of course. But it's still very, very new. This just started yesterday. And so I think that the programming that you see now the intention is that it's going to be this way for a long time. And so by a long time, I mean, we got at least a couple of weeks. And so we got at least until Thanksgiving, and then we probably have to change it up again in December. But that's an eternity. Just like that's an eternity in the markets, just like that's an eternity for the P&L Open Bros now. What are they going to do? Guys, what are the P&L Open Bros going to do? Pour one out for your local P&L Open Bro. We are under a $100 loss in Starbucks now. What are they going to do? They got nothing left. Nothing left at all. And so, again, hopefully the schedule sticks, and hopefully this P&L Open sticks for Starbucks. That would be pretty nice. But anyway, I appreciate you. And so Brian Dowd, let's see, where are we at? Oh, Mr. Pillow says he's confused with the schedule now. Yeah, I mean, it takes a little bit of adjustment. Change is hard. I get it. Brian Dowdy, I'm a Dr. J trader. Those are famous last words if I've ever heard them, for sure. Samuel, happy Tuesday, Doc. I'm with you on the dad bod journey. Who said you cannot work a diet? Yeah, I'm pretty sure it's been empirically verified by all the bro science that's out there. But we're going to keep trying, Samuel. Like, don't let them tear us apart. But let's see. Those legendary walking lunges alone earn you an extra scoop of cookie dough gains and glucose in perfect balance. Yes, gains and glucose in perfect balance. That's a good one. I like that one a lot. Scrum everything. Appreciate you appreciating us, Dr. Tim, and I appreciate you appreciating me appreciating you like very, very much, my friend. So thank you so much. Stay classy with those Adidas slides post leg day. No, see, it's the way to go after sneaking sips of Ghost on your way out of the studio. Zero Delta that August finds out. Yes, definitely not August. Her name's Autumn, but I love it. I'm going to tell her that you called her August today. That's great. We don't normally get August. We usually get she gets a lot of Aprils, and she gets a lot of, what's the other one? It's not August. It's something else. I don't know, but August is good. That's good stuff. But no, the Adidas slides. The Adidas slides are pre-leg day, the Adidas slides are during leg day, and the Adidas slides are post-leg day. And so it's an all-encompassing type of deal. It's not just like a, out the door type of thing. Sergio's in the house. What's up, Sergio? Sam L says, Doc, the new show hour really changed you. Not even one earnings trade today. What happened to the fearless risk-free stocks hunter we used to know? Must be the new B- Zen phase. Nah, man, I'm done with earnings. I'm done. I like keeping my cash. I'm done. I can't do it. But who do we got today? Let's see here. We got, wait a minute. Is Beyond Meat today? So are we going to make our triumphant return with Beyond Meat? Even I've got a line, guys. Even I've got a line that I can't cross, and I'm not doing Beyond Meat. I just can't do it, man. I can't do Wolf. And Wolf, wasn't Wolf this morning? Did they crush it? They crushed it with their numbers, right? How's the stock doing, though? Wow, that's hilarious. Stock getting hammered. That's so funny because I'm pretty sure, if I'm not mistaken, weren't they like way above revenue estimates and way above profit estimates and all kinds of things? And like, yeah, man, I'm not Wolf, Beyond Meat. Nah, man, wake me up when we got something that's real. Like NVIDIA. When is NVIDIA? Isn't NVIDIA coming up? They're coming up pretty soon, I think, right? Ooh, next week, November 19th. Oh, you know what's kind of brutal? So obviously, I mean, the Wednesday from Theory to Practice slot is here, so with that's amazing. But man, we really had it, didn't we? We really had it made. We had From Theory to Practice during the FOMC. We had it. The one and done, man, like a musket. It's over. It's 100% over because now you guys get to enjoy Chris Vecchio during the Fed announcements and FOMCs, which don't get me wrong, that's a big uptick from us. But man, I was really excited. I was very excited about big things to come. And the next thing you knew, it got snatched out of our hands. And so there you go. But we will get to play NVIDIA earnings, which is next Wednesday. And I mean, I think I'm done with earnings, but I don't know. You never know. And so and by done, I mean, no, we'll see what they got tomorrow. Flower Power says, I can't achieve any alpha without any direction. That's actually a good point. And I'm not sure. Yeah, that's actually a very good point. So I would argue, yeah, that's real. This is such, you may not have even meant it this way, but this is such a Zen level question. Like this is like a mastermind level question. Can you achieve alpha in the markets without taking a directional bias? So if we think about this from just purely an options perspective, this would essentially mean that you are deriving all of your profits and all of your edge from time and volatility. Like let's leave out the interest rates and let's leave out the dividends. And so maybe there are some, just mastermind and master craftsman row scalpers out there. And then, hey man, more power to you. That's amazing. I don't think I can do it. I'm not even sure it can be done. So if you're doing it, I wouldn't tell a soul and I would just keep doing it. But time and volatility are going to be the two ways that you're going to essentially, manufacture this edge. Can you do that without direction? I think it might be hard. I really think it might be hard. Even though the market is very random, the market is very unpredictable in my opinion, I still think without playing some type of directional bias, however you play that directional bias, I think it could be difficult to actually squeak out an edge in the market. So I agree with you, Flower Power. I really earnestly do. That's a very interesting comment that you made. Well, let's see. Joe YQ says, hey, Dr. J, any ideas for Oklo or Circle earnings? We got Circle tonight? Circle. CRCL. We got Oklo? Little Oklahoma for you guys? Yeah, I'm not going to touch Oklo. I don't even know. I mean, I don't even know what they do, but Circle. They do something with the internet, right? Yeah, it says Circle Internet Group. So there you go. All right, Circle. Okay. Guys, I wasn't going to trade earnings today, but this one is so obvious. I can't possibly pass it up. right? Like I would put this one in the UST bill bucket. Again, when you think about Circle, don't think about balance sheets. Don't think about fundamentals. Don't think about technicals. Don't think about any of that. Just think about Circle as an idea. Just think about Circle as a way of life. When you think about it that way and you understand that Circle is an internet group, how could you possibly not be mega bullish on this stock? Have you ever used the internet before? I mean, it's a remarkable product, man. It is a remarkable thing. So what I'm thinking, and they've got earnings in the morning. I mean, the morning earnings are always bullish. And by that, I mean, it's pretty close to 50-50. But if I go to, let's do a front week. I don't know, should we dust off the expected move butterflies? Are we back? Are we back? I think we're 100% back. So let's do a 102, 112, 122. I mean, there you go. I don't know what more I can do for you guys. It's $1.50. $1.50 for a $10 wide butterfly? Man, they're just handing these guys out on the street corner. Right? Just like the guy that's handing out the flyers to his discotheque. They're like, man, I'm not going to that, but you should be doing some Circle butterflies because this is a great price on these butterflies. $1.51. Man, that's nice. 102, 112, 122. The stock is at 100, and we're obviously in the 3-day cycle. And so I like a lot of things about this trade. I'm not even going to talk about it anymore. I'm going to go ahead and let's do it. Let's push it out. I need to be a bit more efficient with my commentary, because I want to get to more things. I mean, they're trimming the time, 5 minutes to go, blah, 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 blah. And so, I mean, I understand it. We got to do it, but I got to be a bit more efficient, which is going to be very hard for me to do. But let's see, $1.57. They're not giving it to us. That means it has to be a good trade. Who told me about this trade? This was Joe YQ. Holding $1.60. They won't even give us $1.60? I mean, what are we doing here? $1.62. What is this stock? Hang on a second, guys. Now it's personal. $1.64. Am I going the wrong direction? Okay, we got Phil there, $1.64. Man, that was brutal. So Circle is Joe YQ. All right, receipt has been collected. All right, beautiful. Thank you there, Joe YQ. Appreciate you, my friend. Up and Down says, Dr. J, what is the meaning of life? Please say beer. Well, it would only be if we're talking Natty Light Ice. And I'm not even sure that's it, but at least you're on the right path. Like, at least you're moving in the right direction. Like, if you're talking about, like, Heineken's and, like, other things like that, like, no, it's got to be Natty Light Ice or, obviously banana daiquiris if you want to go in a slightly different direction. But I think that would be a good start. Let's see. Ordenu says, greetings from Italy, Dr. J. How about Disney and Cisco? Is Disney tomorrow too? I think they are. Disney's in the morning. No, Disney's in 2 days. So we can do Disney tomorrow. Now we're back. We're 100% back. It's too much fun. It's too much fun. You guys smell that though? It's a little smoke. It's kind of in the distance, but it's close. It's closer than you might think it would be otherwise. And so, yeah, we got a little circle for you guys tomorrow. But all right, let's see. Let me get to like one more real quick. Let me see. Well, I see James Bond number 4. It says happy pre-hump day. As I'm using the backtesting platform on Tasty, there was a ratio called a MAR. Could you elaborate as to what this means? And do you use the backtesting platform for your trades? I haven't used the backtesting yet. I know it's really powerful, and maybe it's something we should do together here on the show sometime in the future. We could learn together. But MAR, what would be an MAR strategy? I don't know. I don't even know. You have no idea. MAR. I don't know. I have no idea. We'll have to learn that together. Maybe I'll ask some of my own brethren on the network and we'll try to figure it out. But I got to go, guys. I got to run and get you guys to Tim. And I see you guys, though. I see you guys in the chat. Small trades often. Man, look at Jason. Let's see. I see Sergio Lambrus. Sergio's in the house. Ryan's in the house. Man, Rhett's Meat is in the house. Man, look at you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar. Não vejo a hora de te encontrar. Minuto longe de você, eu já não sei esperar. Madrugada chegou. Madrugada chegou. Madrugada, madrugada, madrugada chegou. Madrugada, madrugada, madrugada chegou. Não quero mais, não quero mais, não quero mais. Não quero mais acordar, não quero mais. Não quero mais. Madrugada chegou. Madrugada chegou. Madrugada. Não quero mais, não quero mais, não quero mais.
Hello, hello. Well, the government shutdown maybe is going to get totally undone by tomorrow, although the repercussions really remain to be seen. For one thing, data. When things are operating normally, we have this kind of steady drumbeat of data that comes out, and I always look at the calendar ahead for the week and see CPI, PPI, jobs report, FOMC, etc. Some of those things wouldn't be affected by the shutdown, like the FOMC would have continued going on its merry way. Whereas the 40 plus days the government's been shut down has negated the introduction of a lot of data. And so there's an enormous backlog. And I'm not even talking about the hundreds and hundreds of reports. I'm just talking about like the monster stuff, like the 7 or 8 really big events each month. So I don't know when those are going to come out. And I also don't know if it's going to be just like a giant lag, or if all at once are going to be seeing here's September and October and November all at once. I don't know, but I'll keep an eye on it. It'll be interesting to see as they kind of play catch up, how things get jostled about. Anyway, data is coming, and the markets have moved along anyway, government or no government. And the lift from yesterday is still very much intact. We had a sell-off early today, and that's gone. Almost everything's green now. ES, RTY, YM, CL, GC, PA, SI, everything. The NQ's down a little bit, but ever since like 2 hours after the open, it's just been straight up. I'm happy to say that my own positions are almost all down, which is cool. 27 different shorts, 5 of them are up a little, but on the whole they're down, including some real nice ones. So define the lift here. It's still working out all right. So I've got some of them loaded for us to thumb through, and let's kind of catch up with this completely inexplicable market here. We begin, as we usually do, with the spider. And our old friend, the wedge there, is still kind of the defining feature of this. And as we look here, you can see that we are getting once again into the vicinity of lifetime highs. We had hung out here for about a week in lifetime high territory, had this brief slump, which freaked everybody out. And now we had a big lift yesterday and today, even though we opened a little bit weak. So really no meaningful change there. The principal resistance at this point, I suppose, would be this trend line up here, but that would also be at lifetime highs. I'm focusing on individual stuff. This is pretty inscrutable right now. The cubes are also up. They're actually off their lows, but they are down a little bit. Like I said, 0.5%. Pretty much an inside day compared to yesterday. Not too far from these lifetime highs. But some of those cracks that we started to see, like with semiconductors, have started to show. And we're well out of earnings season now. As I say, we're in a data desert right now with respect to the government, so I'm not sure what's going to motivate this thing to go one way or the other at this point, except the media talking about Santa Claus rallies and seasonality and things of that nature. And SMH, the semiconductor ETF, this is down reasonably hard, about 2%. And in this instance, same wedge, but as I pointed out last week, on Thursday we cracked it for the first time ever. On Friday we fell fully hard below it, but formed this hammer candlestick pattern. And that was enough to send this thing leaping back into the wedge. But interestingly, we're back below it today. So the relationship of the prices to its pattern is still very much there. It just can't seem to make up its mind which side it wants to be on. For months and months, it was within the wedge, and it was fully below it Friday, fully within it yesterday, and fully below it again today. So I think this is breaking down. And what we want to see, of course, would be another failure of this support level down there. In emerging market land, this is up about 0.25%, quite near lifetime highs. Very minor resistance right there, like so. I've got a short position this with a very tight stop, which is that exact line right there. We'll see. The nice thing about EEM is that it's very heavily traded, very tight market. And when it's this high, the risk of loss is pretty minimal to my way of thinking. One other item that I did today, because as I said, I got 27 short positions. I do have a couple of longs. One of them is IEF, which we've talked about before, and we'll look at in a bit. But the other is Dust, which is the leveraged bearish against precious metals miners fund. And my view and hope is that miners are either done with their bounce or close to being done. Should it cross above this line here, then forget it, out of the trade. As it is now, though, we've had another good day on this. We had this big lift, but I do think we've got resistance here. So I never hold on to these leverage funds long, of course, but at best, 2-3 days, maybe even 4. We'll see. But anyway, I am long Dust to take advantage of what I think is going to be a drop in this. XME is actually down about 1.25%. And this is, of course, the superset of miners. This is precious and, copper and things like that. And so we broke this trend line some weeks ago, and we've been persistently beneath it. This peaked way back when, on the 15th. And so this has been slumping pretty hard. But getting back to precious, as far as gold itself, GLD, it is up modestly, not even $10. Not even 0.25%. And I see the major resistance points up there, which it may well not even get to. As I've mentioned over and over again, the dream scenario would be for gold to sink to $3,300 to $3,400 or so, and then get aggressive again, because the modest amount of selling that's happened with precious isn't exactly enough to shake out any loose, any weak hands there. It's been pipsqueak. So I do think gold and silver will be easing back. As far as our friend palladium goes, this is the third green bar in a row we've had. And as I've mentioned, I see this is very much range bound. The bottom being down here around 124 and change, and the resistance up here. And we have spent weeks, as you can see, up, down, up again. So this is a real decision point. And as I said all along, if gold can weaken, I think it'll drag palladium down with it back to this level here, which would be an amazing bargain, I think, if we can get there. Now, yesterday, I mentioned a new position that I was a little hesitant about because it's a real young stock and a real high flyer. And I'd said, this is the sort of thing that can go up 20% or down 20% based on earnings. And that was CoreWeave, CRWV. So I was short it, and mercifully the direction was in my favor. So this is down about 16% today alone. And it's already fallen a lot. In fact, during the brief history of this company, you can see it came public, had a couple of good days, backed off for about a month, and then went on this complete tear as the whole post-Liberation Day exuberance kicked in. So this thing went flying hundreds and hundreds of percent higher. It sold off and then resumed a new rally. And what I was looking for was to basically repeat this kind of thing. We had a nice rounded top here. It led to a big sell-off. We've got another rounded top, and so far so good, because as you can see, this is just falling hard. I would also add it's getting close to what might be a fairly important support line, because there's still activity here to kind of slow things down. If it slips below this, there is precious little ownership at any concentrated area here, and so it really opens up the possibility of a much harder fall. So worked out, tightened up the stop, and I'm sticking with it. So that's CoreWeave. Another one, which is pretty new, which is breaking down, is Bath & Body Works BBWI. We're at not a lifetime low, but a multi-year low on this, many, many years. I haven't drawn anything on this, but I can just kind of rough it out real quick. Something like that. That's pretty crude, but something close to that. So what we've got here is a right triangle failure. And let's see here. Let me just, as I say, just kind of rough this out real quick with you. Like so. Well, I'll just make it real sloppy. So you get the general idea there. We've got a huge right triangle. We've broken beneath it. And there's this nothing holding it up at this point. So that's BBWI. And this is another situation like we saw with Cracker Barrel, when you can have already lost 50, 60, 70, 80% and still got zero is the support level. I mean, you can still keep going. So I'm hanging on to that one. Roblox, also slipping more. That's another. These are just some individual short positions that I just want to highlight. AMD was an interesting one because for some reason today it had this big intraday spike. Luckily, I didn't get stopped out. My stop was actually just above yesterday's high. It got very close, but it did not get stopped out. So still sticking with AMD. And another one that's a good example that the already established diminishment of a price should not foreclose one from shorting a stock is Axon. Because Axon was about $900 and it's in the 500s now, but this has kept falling nicely because on this one, I shorted it somewhere back here. I don't remember exactly where. We had our big fall. I covered here and re-entered the next day here. And that's worked out. So we've got it slipping like so. And we're actually starting to challenge the lows we saw on that big post-earnings tumble. So Axon's going well. And one other kind of crazy one is OKLO. I don't know how you say that, OKLO. And a friend of mine on Slope just mentioned, hey, this has earnings tonight, so I'll be watching this one with interest. As with CoreWeave, this is not a big position. These are kind of crazy shorts, but it's a nice little top. And so we'll see, fingers crossed on that one. And one last individual one, which is also going pretty good, Rigetti, RGTI, which is down almost 5%. And it's been gently slipping away because the whole quantum space, D-Wave, Qubit, Rigetti, SMCI, and so forth, it's lost a lot of luster lately. About a month ago, it was just white hot, but these are starting to ease back. Okay, a couple of other odds and ends. One last individual one, SMTC. This one's having a good reversal today, down about 5%. And this one, I pointed out yesterday, this had a gap, and we sealed the gap and a little bit more, and then we pushed past it again yesterday. I shorted this one yesterday, and it's down nicely. I'm going to hang on to this one as well. Hopefully we'll see maybe a trend break on that one. So all kinds of good stuff out there. On the happier side of things, on the more bullish side of things, Rivian. This one just keeps powering higher. It's very impressive. I've been a fan of this for a long time, but I've always been baffled why I couldn't really kind of get off the mat. Maybe it's finally happened. May not have, though. This it's many times, it has seemed to sort of reach escape velocity. In every single instance, it's gotten beaten down again. This could be yet another instance of that, but this uptrend is held, and this is just doing very, very well. But just to loop back quickly to the whole thing about quantum, here's QUBT, and you can see it is not doing well. We peaked here, and this was a false bullish breakout because we got above it, and that was it. That was the lifetime high. It was up like in the mid-20s, and now this could be a single-digit stock in a few days. So you can see that failed bullish breakout portended bad fortune ahead. So it's been slipping the way ever since. Just like the time, it looks like we're at the bottom of the hour right now. You know what? That's as good a place as any to wrap it up. So as we exit now, the YM is up over 500 points. ES is up 14.5. But you know what? Most of these shorts, they're doing all right. So I'll see you here tomorrow, and we'll catch up then. Bye-bye.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Dear Karen, Thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
We are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes, and that's on a good night.
I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime.
I think we're going to overtime. Here it comes.
Shalaka! Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof!
Take one. Hey, baby. I like the looks.
Got the need for speed? No problem. At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jenny Andrews, we are back, my friend, for last call today. I'm very excited to see you again. I missed you for that hour and a half.
Yeah, you almost didn't see me. You almost didn't see me. I almost fell off a ladder.
I know. She was getting on a ladder as she was coming in. I don't know how you have time to get. I mean, I came in hot and just came in my seat. I don't know how you had time to pull out a ladder and get up there.
Okay, I didn't have much time, but I knew it was my only window of time. So we got off the train, coming home from the SIBO. I pulled in, saw them. They had put up some of my Christmas decorations up wrong, and I knew they were going to be coming back to fix it. So while I could kind of reach it, I got on my ladder and made some adjustments, and I had a neighbor from across the street yelling at me like, "You better get off that ladder.
Get off the ladder." They put up your Christmas decorations, and I feel like I can speak freely, so I apologize in advance if this is bad. But you remember when I had those people put together chairs for me? And you know how if you have a chair on a back, it leans back like this?
Yeah.
They reversed it and screwed it in, so you had to sit like this. Remember? I was like, what is this?
Yes, I remember they had them backwards. Well, yeah, they did some of my Christmas decorations wrong. And so they're coming tomorrow to fix it, but I had a very small window of opportunity to add to it while I could still kind of reach it before it gets too high to get up there.
Yeah. Oh gosh. So I'm glad you're safe. Did you wear your trading coat on the ladder?
So there's like swag. It's like two swags that are gonna go on the, like, I have a Juliet balcony up on the second floor, right? And they put it over the door, which is maybe 12 feet high or something like that. So I didn't need that big of a ladder. But once it's up over the second story, I could never reach it. So I was like, oh my gosh, I could reach this. They're not moving it yet. And I was running, making bows, getting ornaments, doing all this stuff, like tying it all to it.
I love it. I love it. We need pictures. We need pictures when it's all up, okay?
Well, it's not.
I put my house decoration photos out on November 2nd.
Yeah. Now, once it's done, I'll post something once it's done. So that, and then I came in rushing to get to my Oklo position. I decided I just wasted some money buying some wide put spreads to try to protect some of my stock.
Oh, you just did that last minute too? Let's take a look. Let's jump in the platform. OKLO has earnings today. I mean, it's been a wild ride. Spoos are up 14. I've seen them up as high as 20. Mixed bag of tricks though. You've got NASDAQ down, but Spoos up. We're not even talking about the Dow anymore. And so it is a mixed bag of tricks, but OKLO has earnings tonight. Let's take a look at the trade page. We did nothing in here. Number one, it's a $104 stock and it's kind of expensive for this account.
Yeah, we don't have to do anything. It's expensive to trade. It's expensive to trade, and there's a lot of premium in those options. But On also has earnings, and Circle. What was Circle looking like?
Hold on, I'm just gonna look at On real quick because it's a $35 product. We've traded it before. They're my OnClouds. OnClouds where every single person in Disney had OnClouds on.
I didn't Nike say in one of their recent remarks that they're losing some sales to OnCloud.
I mean, I wish maybe I would like this if it wasn't on. I do not like ticker. I do not like it Sam I am. I don't know why. And I feel like if you just put one in there, it's like onion on. Okay,
I bet we could do a cheap diagonal in on though.
But I would do a diagonal because like I said, they were everywhere. Every person, I mean, I had mine on too, but everybody else I know had everybody
so cheap. But do that 35, so at least we have 350 wide. So then if you do the 35, 38 and a half, we've got 350 wide for $1.50.
That's not bad.
That's not bad. This could be our
Nike's losing to on.
Hold on.
Then we have an earnings trade in. And then I'll look at is it CRCL or CoreVive that has earnings today?
I think CRCL has earnings.
CRCL, let's take a look. Yeah, earnings November 12th. So this is, we were looking at this on the train a little bit. Today is November 11th. Your parents' anniversary.
I don't know I don't think we looked at Circle on the trade. I think we
No, I did. I mean, and I will quote what I said. It's tomorrow morning, which is another reason why I kind of don't want to trade it. Because today is November 11th. Happy anniversary again to your parents. But you can see this is November 12th before the bell opens. Not that matters, but it does kind of change things a little bit, doesn't it?
I mean, I don't care. It's just not as fun because you're not watching it. We're not like, oh, let's watch it and see what it's doing. It's not quite as fun, but I don't.
And I looked at maybe a Jade Lizard, but this is to the tune of $3,355. Nope.
Circle has, it's,
we can't afford this. We need a bigger account for earnings trades.
I think that CoreWeave and Circle, if I can remember correctly, and I could be wrong, don't quote me on this, CoreWeave and Circle IPO'd around the same time.
So we'll take a look. I'm going to quote you on it. So here we've got, what is the date today? I'm kidding. I really don't care. 6/5, okay?
Okay, yeah.
I think they were close.
And CoreWeave is April, okay, or March.
Oh, no, March.
So they were both like IPOs this year. And all year, CoreWeave buying power or margin or whatever you want to call it has been very good, while Circle has been very bad.
Oh, and you tried to get this taken away from us one time when Scott was on. I remember that. I was like, don't say it, Johnny. Don't say it.
Did we sell the puts in Circle today? Did we get filled?
We in CoreWeave we did. We did not. We did not. We did a downside ratio spread. We did not in Circle because this is $700. So to your point, one is this is a $90 stack. Hold on, I gotta wait until this goes away. Hold please. I can't change the symbol until that goes away. Okay, and then CRCL. And this is a $99 stock, which isn't that crazy.
No.
But take a look. Just gonna go to here. $3,055. None of this adds up.
That's crazy. That's crazy. Yeah, that's totally crazy. So it's interesting though. Like sometimes these IPOs are nice because there's extra premium in those options. Because CoreWeave and Circle are both in my top 10 for the year, in my top 10 for P&L. I just got a message. Just doing this. It says, turn on reactions to use hand signals.
Remember when we would do like balloons?
I know. So they're both in my top 10 for the year on P&L. because there's been a lot of premium in these too because they are newer. Sometimes when products are newer, there's extra premium because people don't know where these stocks are going. And I have liked having these this year.
Yeah, they're not bad. I mean, I could go either way with these. Tim Knight was just on talking about which had earnings, CoreWeave, CRWV.
No. Circle's tomorrow morning. CoreWeave.
No, this one had earnings yesterday, and he was talking about how it went down 15% because he said this is one of those stocks that can go up 20 or down 20. One of those on earnings, and I mean, it's not a bad. It's not a bad guess.
Getting back to someone's question on IV, you say CoreWeave could go up 20 or down 20. Go to the trade page and look at the IV. The implied volatility is 84%. That means it could be, 85% higher by the end, in a year, or 85% lower.
Yeah, which is kind of crazy. Crazy. Okay, today is a fantastic Tuesday, Jenny Andrews. And do you know what comes out on Tuesdays?
Cherry picks.
Yay! It is our TP. He's our third fill-in, and he's our cherry picks guy. So the cherry picks come out every Tuesday. If you are not signed up, sign up for this. It is a great newsletter every Tuesday.
Oh, and there goes that handsome guy. He just scrolled on by. All right, there he is. And it's so funny because, and I haven't brought this up in a long time, but we were in Texas, and Frank the Great said TP is a redhead.
Oh, he did. But I think I've had more support. I think Frank the Great. I love you, Frank. I love you. I love you. I love you. You might need glasses like Jenny has because.
But
he's not ready, and he didn't show up. You know what I would have done? I would have cut a locket of his hair and brought it home with me and showed people and been like, "Do you think this is red or not red?"
Here's the thing, Liz. Here's the thing. Like, everyone sees color slightly differently. So I'm never going to be so adamant on like I'm right on a color because to each person, color.
Oh no. I've said this before. My family could repopulate the redheaded society.
Well,
I have so many redheads in my family that I get every time there is any type of article about how redheads are stronger and faster and taller and have a better pain tolerance. I get the articles. I feel like I have the ability to say whether you're a redhead or not a redhead.
Well, for those of you watching, while Liz and I were talking about TP and his red hair and redheads, hopefully you read the cherry picks because they scrolled by.
Well, I hope so because I can't read them anyway. They're way too small, Jenny. So I was hoping you were all reading it and reading it and reading it. Now, to put this to bed, TP himself says he is not a redhead. So if that helps at all with this discussion, TP himself says he is not a redhead.
When next time Frank the Great is on. Oh, okay. You know what? Maybe we'll stop right there, Ryan. Let's go back a little bit. Let's stop at that trade idea. So, Cherry Picks comes out today. If you want to read what you saw scrolling by during the show, all you have to do is sign up. They come for free every Tuesday. Cherry Picks, they come for free. We'll show you momentarily how to get it. In the meantime, we're going to take a look at this trade idea that TP put on the Cherry Picks. Let's put it in. Keep an eye on it.
No, I'm not going to lie to you. I can't really see what it is, but I know he's doing something in IEF. Now, fun fact, I was also listening to Tim Knight, who's also one of our favorite people on the network, and he was saying that he was bullish IEF. And I know you were on the ladder about to fall off. There were two things he was bullish on, and my ears perked up because he never says the word bullish, right? And so one of them was IEF. The other one was Dust. Now, he did say for Dust, it's short term, like he's never in these long term. Sure. So I don't know if it's the same thing for IEF, but I did hear two people on the same network mention it.
We'll look at both. I don't even need the trade. I can tell from his P&L that he's bullish in IEF. So let's look for a bullish trade in IEF. Before we do that, Ryan, I don't know if you can pull up the art card on how people can sign up for Cherry Picks. There, free data-driven trade ideas, Cherry Picks newsletter, weekly market insight, tastylive.com/newsletters. You can get these free, delivered to your inbox. Cherry Picks, it's every Tuesday.
Every Tuesday, yes.
Yeah, every Tuesday.
Cherry Picks Tuesday, Cherry Bomb is every day. But yes. Right? Cherry Bomb's every day?
Yeah, I guess if TP's still sending it every day, he's busy working hard.
So, and these are good ideas. Now we know, like I said, I like when you see this is the trade idea and we're going to come up with our own. We know they're both bullish. We know Tim Knight and we know TP are both bullish. So let's jump into the platform and take a look. I kind of am in the platform while you were looking at the
coming up with your own IEF.
That's the only one that I can see. My only issue here, Jenny Andrews, and I think you're going to notice this pretty quickly, is if I go to the 38 day and I just go to these puts, 44 cents on a $90 product, no bueno.
Buy that 94 call, Liz.
That's what I was going to say. So if you're going into this and, our normal thing, and I'm pretty sure he did a call debit spread, I believe TP did, which is not a bad thing. So you could buy a call debit spread. You really can. And sell one of these. This is the $95.99. You're paying 50% the width. This isn't bad. Bada bing, bada boom. I might even bring that in.
I said buy that 94 call just to say we could replicate 100 shares of stock using $300, and we're giving up. I said 94 to not give up anything, to give up 9 cents.
I know. I just wanted to show. So you can do the debit spread, which is I think what the infamous Tom Preston did, and I'm sure he was probably wider. Or to Jenny's point, you can buy this the 94 call. It's the market is 305 at 320. You could do either.
No, I'd rather just buy that call. I'd rather buy that call, give up a dime, and then I'm long 100 shares. If it goes up, I can close it quickly. If I have that debit spread and it goes up, that short's going to become the at the money. That's going to have a little extrinsic value. And look at this. Look at this chart.
I think it can be kind of deceiving because it looks like this is a big mover and a shaker. It's not that moving that much.
No, it goes from like 93 to 97.
Yeah, that's what I'm saying. It's not as if it's that big of a rise. So I think realistically, even if we buy that call, this is 97 to 97.50. That's what that is right there. Do you see what I'm saying?
Right.
So I do think it's not that much of a mover and a shaker. You could also do
and I'll have you know that Frank the Great is texting me right now saying TP is a redhead.
No, he said, "Are you doing assumptions tomorrow?"
No, advertise what's your assumption tomorrow. We have what's your assumption tomorrow. So send in your assumptions, any trade ideas there. What's your assumption? Send them in tastylive.com/assumption. Send them in.
I mean, really, Frank, we do need you as a handler, and I appreciate you because sometimes we go off the rails of the crazy train and we need to be corralled in. We're supposed to be talking about what's your assumption tomorrow. The boys need your help. Send in the assumption. Make sure it's liquid products, right? Make sure it's liquid products and give those boys something to work with tomorrow.
All right. So in the meantime, let's throw in a trade in IEF. Whatever.
Well, I was just gonna kind of to put this to bed. When they said we're gonna be bullish IEF, the first thing I look at is a naked put. There's no premium there. Second thing I would look at would be the diagonal. No premium there. So what do we land on? I wholeheartedly agree.
I mean, when there's no premium, I just buy an option, and why not? I'm not gonna go. Yeah, buy an option. That's gonna act like stock. That's it. IEF. We're long. Now we're synthetically long 100 shares.
Now we are synthetically long.
I don't need to sell an option for 20 cents.
Yeah.
Because then one day when IEF is trading 99 and
99
and we look at that call and I say, Liz, why did we sell a call for 20 cents?
Has it ever traded 99? Ooh.
Oh yeah, look at that. Look at that.
Over here. So this is the day it traded 99. We'll get there, Jenny Andrews. Now, almost. Wait, right here. So in September 17th.
All right, I gotta get this pushed out to the follow page. Hey, hold on.
So I mean, it's not bad. We have 32 days to see where it goes. The debit spread's the same thing, but when you're just buying that one call, it's not that bad.
Okay, so I have so far our little on diagonal, and then our IEF pushed out to the follow page.
Good job. I'm gonna check your work because I don't believe you.
Go ahead and check.
Okay, you did it. Okay. Oh, look at the bats are trying to share a box like we are, Jenny.
What are you doing? Oh, they're together. They're together now.
Together. They're in the box together, yes. So there she did. I'm just checking her work. She did a great job.
What did Jim do in Circle? He bought a butterfly. Copy his trade. Let's see it. Copy it.
At 217 today, he did it, so maybe we will. So duplicate this trade. I'm just going to pull it up this way so it'll be easier for us to look at. Here's his comments. Jim Schultz playing Circle to the upside with an expected move butterfly for earnings tomorrow. 3 days.
102, 112.
LG, let's go. Let's duplicate this trade.
Yeah.
So let's open it up and take a look. So he's,
There it is. $1.64. I like it.
Yeah. You know what? We're going to pay, $1.64 was what he paid.
No, it's only $1.25.
It's not $1.25 because it's 38-cent debit at 212. I'll pay $1.35.
I gotta, I hate to do this to you, but I'm going to go into my account and put this on too. I didn't put on a trade in Circle yet, and I kind of wish I did.
You don't have to do you're not doing anything to me because I already put it in.
What do you put in, Dr. Jim's?
Yes, it's so easy to do.
You put in Dr. Jim's already.
Jenny, I've got two computers. I can literally look at you and trade my account at the same time.
I mean, this, Liz, get a good look at me on last call because it's not going to last long because I like to be in my own account during this time of the day.
I know, and it is fun to do. Okay. But yes, so what else do we want to do today? So we have a circle trade in.
Okay, so we did Dr. Jim's, and you did that same exact one.
I did. I paid more for mine, though.
What price? Yeah, I was going to say, what price? Did we get filled in ours yet?
We are not filled in ours. I'm going to have to pop it out, though. Wait, no, we are. We got filled at, 133.
Filled at 133. Okay, I got to circle.
Filled at 133.
There is a lot of premium in Circle. Those options.
Do you know what I like about it? So, Dr. Jim, I'm going to give you, where is my certified badass option trader? He's not watching. But you know what you get for that, Dr. Jim? You're going to get a certified badass option trader card because it totally reminds me of, Jenny, when we were in Texas and you went and got, I went up to the top and had drinks with a bunch of the boys. And Tom was telling me about the rat trades, and Frank the Great, I know you know what I'm talking about. And so every month or every year or every whatever, they would go to these things called rat trades, and it was risk averse traders. And because of that, they would do things like this, like butterflies, because in this, all that you can lose is what you pay for it. This is a symmetrical butterfly that you can actually make about $870 with.
Yeah, right. And but again, it's got to go
up.
It's got to go up, and it can't go up too far.
Well, it's interesting because this is, I think, more bullish than I would say because his shorts are outside the expected move for the cycle.
Yeah, so it's got to go up, but not too far. Like it's got a wide butterfly for $100 product, but Circle's had a very big range this year. If you look at Circle's range this year, it's been from 70 to 300.
But you won't make money in this. Let's realistically talk about this. Now we're going to talk about it at expiration. But if I paid $1 and change for this butterfly, and I have the 102 here, anything above 104, you'll make money. So from 104 to probably 119, you will make money.
Well, but then if it goes too far, you won't make anything.
You won't make money past 122. Or probably 120. That's what I said. It's a big, wide range. You just take your break evens and subtract them from your longs. And that's how far it is to make money. Now, you're not going to make the $1,000. You're not going to make the $800, but you could make $100, and that's on expiration. So I'm going to show you real quick. If you go to the analysis page.
Now, if I publish the circle trade, to the follow page, will it say Liz and Jenny's trade, or will it say duplicate of Dr. Jim's trade?
Oh, the world will never know. Do it.
I mean, I don't know. I sent it, but it should give credit to Dr. Jim.
It should give credit where credit is. Did you really send it?
Yeah, I did. Refresh. Hit
there it is.
There it is. So I wish it would say on there, this is Dr. Jim's trade.
You know what the best part is we don't give any details either. So we took the trade.
I love details. I'm trying to do a show, make my own trades, and ship these all at the same time.
That's what I'm saying. So it's our trade now. Sorry. I mean,
no, we never steal credit from anybody. There it is. Yeah, there's your wide win range.
No, but that's what I'm saying. So we knew the upside. So anywhere, even over 122, it's big. And I'm not saying it's got a pin here for your $800. But if it goes all the way up to, which is outside its expected move by a significant amount of, if it goes up to 117, you make $347.
I cannot believe these stocks that have been cut. Like Circle was 300. It's 98. I can't believe some of these stocks have been cut in more than in half.
Yeah.
Now I know it IPO'd around 70 or something or 50. I don't know, but
yeah, I understand they've been cut in half, but that was not normal either. Going straight up from what did IPO 65 to 300 in a matter of.
Everyone wanted it. It's all FOMO.
In June. So in 1 month it went up that much. I'm gonna go back.
Everybody wanted it.
So there is our trade for that. Okay. That's good for earnings. We have everything that we need to do for earnings in there. Right?
And we've got all like baby earnings trades on baby trades. So we'll see.
Yeah, you can't hurt us. We're like David Goggins. Ooh, look at this, Jenny. Should we take it off?
I told you. No, it didn't even move. It's just a wide market.
It is a wide market. No, it's not that wide.
What? Wait,
No,
wait.
no,
You paid
something
something
is
a
a
bad
miss.
mark. It was a bad
Something
mark.
was a miss. Okay, good. I was like, we paid $3.15 for it.
Yeah, IEF doesn't move. It moves $3 all year, and now it moved $1.75. Oh my god.
Oh, and here's Nike that was going against on. I'm only opening this up because it's a Jade Lizard, which has 10 days left, and we are up 42%. I'm going to cancel replace and take this profit.
Sure, yeah, sure. Jade Lizard.
Oh, only because it was Nike, you said, that thinks on's going to kick its butt?
Well, no, I heard in like some report Nike said when they were talking about earnings, you know, a couple of the brands that were maybe taking some of their business, and on was one of them.
So Rivian is another one we've got.
Rivian's up $1.68 again. Look at the Rivian chart. Rivian's been we've been taking up. Whoa, Rivian. See, I don't even notice this move in my account because I just don't have enough Rivian. Like I got too many other.
You might have enough Rivian, but you got too much other stuff in there too. I kind of agree with you. But we're gonna take this now. Do we want to follow it up? Let's just take this right now, and then maybe we will.
And remember, Tim Knight was bullish when we compared Lucid, Rivian, Tesla, and Rivian was his pick. And I would say, congrats, slow clap for Tim. You don't look that excited.
That's what a slow clap is. You can't go like this for a slow clap. Okay, so then we've got that off. Here, Snap, another one. So this is 38 days, but we're at 52%. Now, we only sold it for 59 cents. Let's take a look at the Snap chart. Let's take a look at the Snap. I'm closing it.
Wait, are we at 50%?
We're at 54%.
Sure, take it off. I wanted to do, those puts seem so good to be true, too good to be true. I wanted to just do like a lot of them.
Which puts?
Those Snap puts that you just took off.
I know they did, but I mean, we just put it on for 50 cents.
No, I don't mean in here. I don't mean in this. I just like when we were putting those Snap puts on, they seemed.
This is what she wants me to do.
Just like keep going, ticket. What would the max be? Like how many what would be the max that would allow you to do? Like you hit a limit where it's like
Jenny, I don't know if this is still true or not, but I know when we first started the show, if you would do you wouldn't be paying commissions on anything over 10. How about that?
Is that true anymore?
I don't know. I don't know if it's true anymore. You know who will tell us? Frank.
I don't know. Yeah, it used to be over 10 contracts, then you're capped at 10.
Yeah.
I'm not sure.
Okay. What else is there? Let's take a look. Anything else that needs to be managed? No, I think we're pretty good in the management.
Do you have any final words you want to say to me? Because I might not wake up in the morning.
What's happening to you right now?
I don't know. If Oklo's down too much, I might.
Oh, Oklo. Okay. I was like, oh my God, what's going on now?
I might not get out of bed.
I'm telling you, I don't think you should watch. I don't know what time it comes out. I know it's after the close.
Is it after the close?
Yeah, it's after the close, but I don't know. I mean, sometimes it'll say an earnings whisper, but I really think it's kind of crazy. It's kind of quirky when it's like the 4:15 ones. I don't like those.
Like Apple?
Yeah. You gotta wait and wait and wait and wait and wait for Apple.
It's like a mind game.
Oklo, you're gonna be great in Oklo. I think it's gonna be everything you've ever wanted and more.
That's fine. It's fine.
Did you see that SoftBank sold out of $5 billion of Nvidia today?
Well, it only moved at 3%.
That's what I was gonna say. And can you imagine? And your stock
57 million contracts have traded.
And it only moves your stock 3%.
Yeah. That's why some of these big ones, the really actively traded ones, I don't want to say like don't move as much, but when you've got so many people playing the game, and we say this all the time about illiquid stocks, when you don't have that many people playing the game, it tends to move more because you don't have as many like resting orders sitting. There are people in the game. When you've got these big movers.
Oh, it's 3:00 already.
There's the bell, Liz. Now, maybe Tom and Tony used to sit around and wait for earnings to come out. But I don't have that kind of time.
Oklo, let's just give it.
No, we're not watching it. We're gonna sit here and watch it.
I think it's out.
It's not out. It's not out. I'm not gonna sit here and let everyone watch my doom.
Okay, Oklo secures. Wait, this was at 7 a.m. Never mind.
Yeah. I have no idea what
it's not doom. Positive vibes only. Good vibes only. Woo doo woo doo woo doo woo doo woo doo.
All right, Wizzo from Bozo. Now I'm really gonna have nightmares tonight.
Positive vibes only in Oklo. All right, Jenny Andrews, you have a wonderful night.
Let's check Circle.
Okay.
I
try not to fall off a ladder.
I want Circle to skyrocket. 98, 60. Nothing.
This is tomorrow. This is tomorrow. This is the one.
Oh,
that's
yeah,
tomorrow.
yeah. Tomorrow morning. That's tomorrow
Okay,
morning.
let's check on. Nothing.
All right, I got
anticlimactic. All right, Jenny, don't fall off any ladders.
I got a ladder outside that's calling my name.
Don't fall off any ladders. Everybody have a wonderful night. Good luck with your earnings, and we will see you tomorrow on the trading floor.
All right. Goodbye, everyone. Stay tuned for overtime.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Stocks meander. We'll go with that. It's Tuesday, November 11th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan to take you through the next 30 minutes as we wrap up. Well, futures trading day closes at 5 p.m., so Ilya will take the handoff into the close. It was a remarkable day. Stocks continue to sag on the tech side as investors question whether or not AI is overvalued. But the money's not leaving the equity market. S&P 500 up. The Dow Jones up even more into what is a new all-time closing high here. Russell adds a little bit as well. Bonds with the market close for Veterans Day. We do see ultimately a slight push higher. Fed rate cut odds jump a little bit after that ADP weekly report showing the economy shed nearly 12,000 jobs in the 4 weeks ended October 25th. Gold and silver. Well, silver's able to push higher and gold climbs off of its lows. Energy has a firm day and the dollar mixed, if not slightly lower. Guys, we're running out of time here on Overtime, so let's get through this quickly. Dylan, AI was knocked a bit lower today, but the broader equity market's still holding up. The S&P 500, 6871.5 here after hours. Nothing to be concerned about, even though we see headlines like SoftBank's Masa Son is selling his entire stake in NVIDIA.
I mean, you can't have it both. You can't. I'll answer your last comment first. You cannot have it both ways and look at SoftBank and Masa as an idiot who got bamboozled by WeWork and all the other things, and all of a sudden he's a genius. because he's selling me NVIDIA. My perception of that NVIDIA sale was really having less to do with NVIDIA and more to do with the all-in position on OpenAI. It sounds like they're sort of like, it's like they're digging through their pockets looking for extra change to try to fund their OpenAI position. And so that's kind of how I see that. As far as the overall market, I mean, this is sort of market back in the Bloomberg days. The headline would be, stocks, hover on records amid, limited price action. I mean, it's kind of one of those days where but you can't really be too dismissive of it because look at the levels. You are dancing at or near all-time highs. I think what becomes interesting, and I, not to be a broken record, I don't think you were in this conversation last week. I think it was right before you came back, but just sort of the idea of rotating into the worst performer of the Mag 7 as a trading hypothesis. And I got lucky with that, sort of pressing that through Amazon. And I've been pressing it back through Microsoft and Meta, obviously. And so I just think that is a very reliable, I think you're in a much better position to be getting long a Mag 7 underperformer than trying to time any major sell-off or anything like that. And I see no reason for concern other than the obvious reasons for concern, which is the price levels and incredible optimism that is almost impossible to justify. But that ship sailed, 2 years ago.
Oh yeah. I saw a really fascinating stat today. Every year since 2013, if you look at the start of the year, January 1st, Goldman Sachs says their basket of most shorted stocks. And every year since the start of 2013, that most shorted basket has outperformed the S&P 500 every year. And that's going to be the case again this year.
Can we get an ETF securitized? I mean, at this point.
Just a basket of crap.
Yeah, just ye old Goldman's basket of unloved stocks.
What do we make of this today? I mean, I have to agree with Dylan there. I was looking through the headlines about SoftBank, and they already are 21% funder of OpenAI. It seems like they're just trying to, I don't want to say get away from the space, but they're taking their winnings from NVIDIA and they're dumping it now into other AI opportunities that will be more application facing. Isn't that a good sign ultimately that we're trying to go beyond picks and shovels, which is what this really has been the entire time thus far?
I mean, the problem with picks and shovels and all of this would-be rotation is the thing that one Michael Burry has been warning about, and you increasingly are starting to see these things appear in other conversation, basically saying that you really should be listening to what Mike Burry is saying. He's not saying that the technology is bunk or that the thing is somehow wrong or bad or not plausible as a narrative. What he's saying is nobody's paying attention to one tiny little tidbit that makes this different from railroads, from telecoms, and that's depreciation. These GPUs obviously are the biggest kind of engine of what this thing needs to be what it is, and they depreciate in 4 to 5 years. Railroads don't. Telecom lines don't. And so the kind of spending that we see here to ramp this thing up, it isn't a one-off like a picks and shovels phase in those things would look like. This is not one of those things where you build the thing and then you rotate to demand, and since you've upfronted all of your capital expenditure, your capex is out, now you're just minting money. But that's not what's going to happen here, and that's not the nature of this thing. The level of output in money to get all of this stuff up and running has to be spent, then respent, then respent, then respent, then respent, because these things depreciate very quickly. And so the amount of money that you need to keep this thing running is astronomical. Not surprisingly, a lot of that money has increasingly started to come from non-bank credit. We spoke while you were away with Dylan about how much we should be worried about non-bank credit. Because when you look at what the market seems to be sniffing out, just take a look at BX shares, take a look at APO, take a look at KKR, just as avatars. And take a look at what they've been doing really all year long. So the market is not blind to the idea that there is something in this space that maybe smells untoward hiding under the rug. And so, yes, of course, there are these efforts at rotation. Yes, of course, there are every which opportunity to get money and deploy it while the getting is good. And the getting is good. There's no question. Nothing has collapsed. But when we talk about rotation, I think we have to remember it's not clean, because what we have now is an incredible expansion of credit, an incredible demand for money, and I should say non-bank credit. So all of those things that we told the banks they couldn't do after '08, it's not about the banks. This is about non-bank credit. They weren't told anything. And so we have a situation where we have this huge expansion of credit. The market is freaking out about a single Fed rate cut in December up until they get the shutdown news yesterday. And lo and behold, it's been 24 hours. The market has stalled. And the shutdown end isn't even official yet. So they got their headline, they priced it in, and where are we? Back to worrying about rates, ostensibly. Because the follow-through, again, is where? I don't know, but it's not in the NASDAQ today. So if all of this hopium is real, if this rotation is real, if the thing is expanding into a glide path toward its eventual sort of maturation as an industry, markets sure aren't showing it. And the concern, again, isn't that AI isn't real or that it isn't the transformative technology that it's supposed to be. No. And in fact, things like DeepSeek might be the answer, because they have technology for this that's less power intensive, ostensibly, that's less expensive to deal with from a depreciation perspective. But lest we ignore what's going on here, this is not a clean rotation into you build the railroads, you put the railroads on the tracks, we're all rich. That's not what this is. So it's not surprising, really, that the markets are stalled today, and it's not surprising that they're still worried about rates.
The Apollo, KKR, Blackstone, those are the private credit story is really interesting to me. I don't know if there's something super actionable there at present.
I wouldn't say yet. It doesn't look like yet. I mean, if you were going to sell these things earlier in the year, then okay, good for you. You're prescient and you sold them. But I'm not trying to chase this now.
Corporate high yield bond indexes and ETFs are holding up. HYG, J, and K are both fine. You'd like to see them a little bit stronger given where stocks are, but that's really nothing to, in my opinion, in the short term to complain about.
I mean, they're kind of idling, let's say, if you kind of squint since what, July-ish?
Yeah, but you know.
But not falling. Not
falling. So
there's no fire here.
No, there's no fire here. And we can see that there's no fire in the market today. Gold takes a little bit of a breather. Dylan, I know you're not much of a precious metals person, but it's hard to ignore the fact that these alternative measures of currency storage, perhaps, Ilya, Bitcoin, gold, silver, they're holding up again. They're starting to perk back up.
Bitcoin had a nasty drop.
Yeah, I know it wasn't a great day today for Bitcoin, but we're starting to see signs of, couldn't get through.
What a reversal at the spot where you'd want it.
Yeah, well, I mean, I was hoping to get it through there, but we never did, so nothing.
I mean, I'm still short, so, hope is in the eye of the beholder.
Dylan, the government's going to reopen. It's going to stay open for 2 months. The continuing resolution funds the government through January 2026. So it's not like this story's over and done with yet. Do we keep betting against the competency of the federal government in its current iteration?
I think you do. I mean, I think that's the surest bet that exists. I think it's not even a bet. I mean, I think it's a certainty. I think it's a foregone conclusion that the government is fundamentally conflicted, self-serving, narrow-minded, and incompetent. I think that the question is the degree to which that reality, how that plays out. I mean, the unfortunate, I'm being somewhat demure, but the unfortunate thing with this most recent shutdown is obviously all the human lives, that all the people that lost, or all the economic stress that comes from it. I guess I'll put it that way. But I mean, I just think that the air traffic control thing was just really disastrous. I believe that when the midterms come next year, however unappealing the Democrats are or will be, that the situation with the air traffic controllers going into the holidays this past month is going to be a signature piece that's going to be impossible for the Republicans, the Trump administration to get away from. But what I don't know is how does this actually play out in the financial markets, if at all? I'm more intrigued by what's going to happen with the Supreme Court and the tariffs. Because I mean that seems like it could actually be something. Just because the sort of the peanut gallery seems to think that there's a reasonable chance that the Supreme Court's is going to rule against the president's authority to unilaterally levy all these tariffs.
Yeah, Trump came out and said that the Supreme Court was given the wrong numbers.
The dog ate my homework.
So the Trump administration's lawyer had the wrong numbers when arguing in front of the justices here. Quote, the unwind in the event of a negative decision on tariffs would be including investments made to be made and return of funds in excess of $3 trillion. It would not be possible to ever make up for that kind of drubbing. That would truly become an insurmountable national security event and devastating to the future of our country. So even though these tariffs weren't in place until earlier this year, and the country did exist for the past 248 years prior to the implementation of this particular round of tariffs in year 249, evidently, this would be a non-sustainable path forward if we were to just wind back the clock to where we were. Now, granted, the tariffs are supposed to be addressing certain issues that have cropped up in the wake of globalization, but they haven't solved any of those problems because the tariffs have been in place for a number of months and manufacturing jobs are down, industrial jobs are down, exports are down, farmers are getting bailouts that they didn't need before. What's the positive upswing here? And consumer prices are up. Margins for companies that are heavy export facing or import facing down substantially, which is leading to the curtailing of employment in those industries. So I'm just waiting to see what the upshot is here. Aside from the fact that, gold's doing really well. That's about the only silver lining, golden lining I could take away from it. But Dylan,
because again, I'm the last one to have a decent explanation for anything gold ever does. But do you guys, either of you, have a reason why gold is doing what it's doing?
I have a theory, and obviously, I mean, it's sort of a theory by exclusion. When you look at what gold is doing, it's obviously not doing it for its traditional reasons. Just look at yesterday's surge. It happened at a time when bond yields were actually biased higher. It happened at a time when the dollar was at best even. Yesterday, the dollar was kind of even keeled because on one side it went up against some currencies like the yen and then went down against others like the Aussie, mostly on risk-off grounds. So that was a perfect case in point for an environment in which gold should not have rallied historically, and boy did it rally. You then look back to the beginning of the year and you see this relentless rise, regardless of what bonds are doing, regardless of what the dollar is doing. What that suggests is that gold is not a creature of those forces here. Instead, it seems to confirm this idea that we have a speculative narrative. That speculative narrative is multipolarity increasingly. That with the coming of the new Trump administration, the pressure on China is growing greater. That the likelihood that the U.S. deploys economic weapons on China grows more concerning.
Is it?
In practice, yeah.
He's been really soft on China.
He hasn't done yes and no. He's taken it back quickly, but he's created a whole lot less predictability. And so he's encouraged China to think ever more closely about how do we manage payments if they close the dollar store, or at least our access to it. We just saw that response. Why did we go through all that nonsense in the beginning of October?
Hold on, Elliot. I got to just peel this back to something simple. Trump's talking about having 500,000, 600,000 Chinese students come over to our universities, in part because as Trump has hinted that, and the reality is that if you don't get international students coming to American universities, not the ones in the cities, but the ones in, the suburbs and urban areas, those towns collapse because the universities and the cities or the universities and the colleges are the lifebloods.
Well, somebody explained this to him. Fully. But does that prevent him from going off the rails and saying 100% tariffs next week?
No, but in what world is the Chinese government allowing 500,000, 600,000 students to come to the United States if we are in a legitimate white knuckle fight with them?
Why in the world would that be a problem, especially if we are in a white knuckled fight with them? Again, economically. That is just another way to bring U.S. expertise back to China. This is an advantage, not a disadvantage.
We used to work with someone whose father was involved in the Chinese political party. And she was here as an exchange student. She was recalled to China prior to the onset of COVID.
Yeah.
I don't know if you recall it, right? So
of course,
when China,
she was fantastic, by the way.
When China feels like something bad is going down in the world, it calls people back home. It tries to repatriate its citizens.
I mean, this is a case in point of one person that got recalled to work in her dad's ministry.
No, but I'm saying if China's sending, Dylan, do you see what I'm trying to get at? Maybe I'm wrong here, but if China's sending out its young people across the Western world, clearly it's not too concerned about whatever economic tension there's going to be.
China's strategy to send out young people across universities around the world has been one of the greatest assets in its rise over the past several decades. Why in the world would they want to forego the transfer of Western knowledge and expertise in the middle of a trade war?
Right.
They'd want to accelerate it.
Trump is letting these kids here. So
of course he is. For exactly the reason that you just.
But I think that the question
that you just mentioned.
Because I'm of the belief that that multipolarity is a fantasy land, that it doesn't exist.
Of course it exists.
I'm not multipolarity. I mean a dual universe. I don't believe will ever happen. I believe that China.
No, I don't think it's going to ever happen.
I believe China and the U.S. are inextricably tied.
I agree with you.
Share the same fate, and so
I agree with you.
I mean, listen,
but Xi Jinping doesn't, and that's the most important thing. Or they wouldn't be buying gold reserves at the speed that they are. That's the thing.
No great decoupling.
They've watched what happened with Russia. They watched what happened with Iran, and they're preparing themselves for a level of engagement where they need to pull those tools. That doesn't mean that they're planning to decouple from the U.S. They just don't want to be told what to do. And by the way, they're succeeding. Because every time that this administration attempts to turn the screws, other countries go, whoa, 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 sir, here's a golden crown. Let's make a deal. Sir, here's this concession. Let's make a deal. Let's not raise tariffs in retaliation like in the case of Europe. We'll have a discussion. We'll figure it out. China? They've held the line every time because they are fortifying and have been fortified to some extent. They see that their systems with Russia and with India work. They just need to make them bigger and more scalable. And everything they've learned is that fortification has worked. Because when they flex economic warfare muscle, like with rare earths, this administration backs down.
I of the mindset that we're not decoupling, that Trump's not hard on China, that this is all kabuki theater. It should be pointed out that FXI has been outperforming U.S. stocks since the April low. And
that's really understandable.
Trying to round into what is ultimately, that looks like rising. It's a symmetrical triangle after an uptrend, Ilya.
I mean, the question isn't what U.S. markets trading this U.S. listed ETF think. The question is, what does Xi Jinping think? And when you look at the pace at which they're accumulating gold reserves, irrespective of normal market forces that typically guide gold prices, from the perspective of trading gold, that's really all you need. You don't need for decoupling to be a real prospect, which it isn't. You don't need for China to be on course to win the economic war, because they're not. Even just on demographic grounds, their days as an industrial power are numbered to maybe as little as 10 more years, depending on how badly this goes. They're already in a deflationary state for almost 2 years.
645 in 21-day out cycles from now, though. Like, that's not
right. All you need.
That's not this trade's concern.
Exactly. All you need is for Xi Jinping to believe that he needs weapons in a near-term dust-up with the Trump administration now for the next 3 years. That's all you need. And boy, have they been acting like it. And that's it.
Dylan, I think my takeaway from all this is Chinese stocks still look good.
Yeah, but we're talking about gold.
Do you take Ilya's, listen, no one ever knows why anything ultimately does anything, but at least there can be sort of probable cause. And Ilya's argument that gold's rally is some sort of a bridge currency or rises and falls on the marginal speculation of multipolarity. And the only reason the reason I like Ilya's explanation is because I don't have a better one. And the reason I dislike Ilya's explanation is because I think it's such a non-existent actual probability that I can't.
I mean, I agree with you. I just don't think that Xi Jinping agrees with us.
You think that the Chinese central bank is the gold buyer?
They're the marginal buyer right now, and the data shows it for the past year.
That's right.
But the other thing is, gold is a hedge against sovereign incompetence. That's what we were saying during the Eurozone debt crisis, Ilya. That gold is going up because people don't trust the sovereigns.
I mean, whether you want to call it multipolarity or sovereign incompetence, one would say multipolarity is a flavor of sovereign incompetence.
Yeah,
then sure,
sovereign
yes.
incompetence in the West, sovereign incompetence.
I mean, in this particular case, I think it's China that's buying. So China is making a stand on what it thinks sovereign incompetence means for them. They're the buyer. It's not others. If you look at other people buying gold, it's just not there. It's China. So it's their bet on our sovereign incompetence, that is to say, on the possibility that we really want to press the multipolarity button.
Maybe we will. But you know what? It's a question that we're going to have to answer tomorrow, because overtime is out of time for this Tuesday, November 11th. We're here every Monday through Thursday, 4 Eastern, 3 Central, right after last call. So for Dylan Radigan in Milan, Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Good luck trading. Stick around, though. More Tasty Live after this. Quick break. Then Ilya's back with Macro Money.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10
When we get together, everything is better. When we are side by side, hey, side by side, side by side, side by side, hey, side by side, side by side. When we are side by side.
Is the stock market rebound already running out of juice? That's the question that we're asking ourselves here after stocks surged yesterday and appear to fall asleep the very next day. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive, and we're going to unpack what is going on here and why these markets are apparently struggling to find follow-through. It's not like they're falling off a cliff or anything like this, but as we were talking about this yesterday, we, of course, raised the natural question about sentiment and the makings of the rally that started us off this week. And maybe, just maybe, some of those concerns are starting to materialize. So let's take a look at the price action here today. Now, of course, it was Veterans Day, so the bond market was shuttered. When you see these performance numbers for the 10-year and the 2-year, these are the futures, and not surprisingly, it is soggy going because the actual underlying market was closed for Veterans Day, and perhaps maybe that robbed the rest of the market of a clear directional lead as well. But you do see some interesting tidbits here. S&P and NASDAQ kind of a hodgepodge. S&P up a little bit, about 0.3%. NASDAQ down almost 0.2%. Again, the bond markets are kind of a mess, but you do get a little bit of a bounce at the long end. So the 10-year future indicating a pullback in yields. Gold ultimately resolves higher by a hair, but no follow-through on yesterday's epic surge. The dollar, kind of a mixed bag, not really going very far this way or that. But Bitcoin, as a sort of indicator of speculative appetite, seems to be pointing toward that appetite diminishing. It is off 3%, a little bit more, suggesting that something is not quite lining up. Now, yesterday, of course, was this explosive showing. S&P and NASDAQ with very impressive gains, best performance on a single day since May. Rates up across the board as bonds come off and generally risk on trade. Gold surges almost 3%, and that despite higher yields, and as we can see here, a relatively even-keeled U.S. dollar. It's up a little bit against the yen, flat against the euro, was down a little bit against the Aussie, which we don't see here because the Aussie tends to benefit when stocks go up. It's a kind of go-to risk-on reflection in currency markets. So the dollar ultimately, in its sort of more evenly balanced expressions, like against the euro, basically doesn't go anywhere. So that gold surge outside of higher yields and outside of a dollar that didn't by any means give gold a downward push of substance, that seems to suggest that there was a sort of re-engaging of speculative narratives for the year, and a sort of re-engaging of where speculative appetite has gone this year. Of course, aside from the famously aggressive stocks rally this year, thanks to AI-linked optimism, gold has been on a famously aggressive rally around this increasing tension between the U.S. and China, and a desire for a sort of go-between asset for third countries, it would seem, to navigate without exposure to this sphere of influence or that. Obviously, we have examples of countries like Russia, for example, that are now locked into China's sphere of influence, in the sense that they do most of their business with China, most of their monetary transactions are settled in yuan, because most of what they are able to do around sanctions relief economic activity-wise is with China. So you see a clear example of a country that's now locked into sort of that world, while most of the world still is primarily transacting in dollars. So you have this sort of situation as a running story this year, and it seems like the return of risk appetite encouraged people to re-engage with a whole host of speculative narratives, gold among them. But of course, again, what we get from Bitcoin is a clear sort of sentiment nod. It ultimately doesn't perform as well as you might expect, only a little bit better than the NASDAQ. Usually you might expect Bitcoin to be much more robust in its performance. And indeed, when you looked at it on the downside last week, you saw that sort of thing. Last week, of course, was famously negative around the idea that the Fed might be stingy about this December rate cut. When we look at what the markets have been doing, in fact, since the October 29th Fed policy announcement, they've shrugged off solid earnings. As we looked at yesterday, the S&P 500 for the third quarter averaging earnings growth of 13%. And if we look at tech, the obvious high flyer, the number there is more than double at over 27% year-on-year earnings growth. So clearly there was every reason for the market to go, AI supernova, la-di-da. They didn't do that since October 29th. Of course, we also had a very helpful meeting between Donald Trump and Xi Jinping where they walked back the most recent attempt at escalating the conflict between the top two global economies. That didn't help either. If we look at the chart of the S&P here, we can very clearly see that what has really energized this market at the start of this week, as we just saw, was news that this government shutdown might well be ending. Here's the Fed right here. This is the top. All through this, we had the story about the U.S. and China. In fact, this was the gap where it became clear that the U.S. and China were going to walk back the latest round of acrimony right here. Then you get the Fed. Earnings don't help because post-Fed, this just keeps marching relentlessly lower. You get an upside gap this week with this government shutdown ending sort of optimism. And today, we stall. Now, maybe we stall because of the bond market is closed and we don't get a lead from rates because, again, this was about rates. This was about Fed Chair Powell coming out and saying, look, you're probably not going to like this, but if you thought that it is a foregone conclusion that there's going to be a rate cut in December, let me tell you, not only isn't it a foregone conclusion, but far from it. And so with that in mind, you end up in a situation where the markets go from almost a 90% chance that you are going to have some sort of further easing, and you end up at where we stand currently. Here's the probabilities for the December 10th policy meeting. We can see that as of a month ago, we were well north of 90% chance of a cut. As of a week ago, which of course gives us the reference point beyond the Fed policy announcement. You can see that's already the 4th of November after the 29th when the Fed makes the news. We have down to around 60-odd percent, and we've hovered there since. Whereas the likelihood of standstill is non-negligible, hovering just below 60 or below 40% rather. The news flow that we got on this front today is not the most influential, but somewhat interesting. And we begin with comments from San Francisco Fed President Mary Daly. She spoke in an interview, and you can see the comments here are loosely dovish flavored. The balance of risks has shifted as the labor market has softened. We know that's been the Fed's tried and true song here since mid-September. Restrictive policy is putting downward pressure on inflation. Inflation expectations are well anchored. We don't want to make a mistake of holding on to rates too long, she says. If we unpack inflation data, we don't see inflation rising in services, housing, or inflation expectations. So one might say that perhaps in a familiar sort of way for Mary Daly, she's erring on the side of easing. And indeed, again, as we just saw, the markets themselves are erring on the side of easing. We're looking at a situation where the rate cut in December is still likelier than not. So the odds are better than even at 60 odd percent. But clearly the market has seen some indigestion around the possibility that maybe that won't actually occur. And with that in mind, the sort of forceful positive reaction that we saw at the start of the week kind of begs the question. Because, needless to say, this was this kind of very committed negativity, even in the face of AI optimism around these earnings reports that we've seen so far. And it was really around the Fed maybe backing away from building on more stimulus, at least in the near term. When we got this rally at the start of the week with the maybe end of the government shutdown, ostensibly the Senate has reached a deal to do that, and the markets started to sniff it out already in late Friday price action. That's how we got this recovery from this extended wick lower that we see and ultimately ended a little changed, and then that's how we get the gap. But what we also find is that as a consequence, here's yesterday's expectations, they went down. Because, of course, if you remove an important fiscal headwind, well, then maybe you don't need to cut as much. Markets clearly did not have a problem with that, but the question, as ever, is, okay, so you get a piece of data or a piece of news that gives you a knee-jerk reaction, in this case positive, but certainly could be negative, depending on what the news is, but then it doesn't last beyond the day, because once the dust settles, everybody kind of comes back to where they were before, which is to say, if what we're worried about is some sort of situation where the Fed doesn't deliver in December, and if that's enough of a concern that tech earnings don't help to shift the balance in sentiment, well then, is it really sensible that you get a lasting rally in an environment where what the news has done is actually made that cut less likely to some extent? And so what we see then is the markets stall. And the rally does not continue to carry forward, even though the probability that this shutdown is going to end hasn't been at all diminished in the past 24 hours. So what this starts to look like is perhaps not dissimilar from what we saw with the Fed, where we get the rate cut that the markets wanted. We already had strong expectations for tech earnings. We already had the Trump and Xi news basically off the table once Bessent had those meetings in Malaysia and essentially pre-announced that Trump and Xi would have a cordial sit-down. And so the markets were priced for perfection. So when the Fed came out and said, well, actually, the one little bit in your rosy narrative here, the inevitability of a December cut, that's not inevitable, the markets went, oh, well, if we were already priced for perfection and the world isn't as perfect as we priced, we got to go the other way. So now we have the shutdown off the table, and the question becomes, well, are you again priced for perfection? Except for the Fed. And ostensibly the answer is, well, yeah, it looks like that. So if this is what's going on, and the shutdown ending actually reduces scope for Fed easing, at least in a hurry, well, then perhaps this situation isn't as ripe for upside follow-through as it seemed when the markets were forcefully rising yesterday. So where do we go from here? Well, from a data perspective, we still don't have much on the calendar. We are looking at maybe inflation data comes out on Thursday. We're due for the October report. Obviously, the September one was released by special dispensation. On Friday, we might get September and October PPI. We might get September and October retail sales, depending on whether the Census Bureau and the BLS, Census Bureau produces the retail sales report, BLS produces PPI and CPI, whether they can be corralled back to work fast enough to get these things out in a timely way. Whether that happens or not, who knows? And so we might get some economic data. We might not. Earlier today, we got the weekly report on employment from ADP, automatic data processing. Obviously, we don't have official U.S. labor market data, so this is what we have to contend with. They reported that the U.S. economy shed 11.25 thousand jobs in the 4 weeks to October 25th. So we're looking at a situation here ostensibly where, at least preliminarily, there is some reinforcement of the Fed's narrative that indeed the softening labor market demands their action. But the prior week, the 4 weeks prior to October 11th, there was a rise of 14.25 thousand jobs. So if anything, we're net up 3,000 jobs over the past data window that this has been reported, which is, of course, this week and last week. The ADP numbers started to come out because the official figures are off the books, so they started to publish not just monthly, but weekly data too. So, not much insight there, but we are going to have a busy calendar of Fed speakers. Tomorrow we get Williams, Paulson, Waller, Bostic, Mirren. Mirren, of course, we know has never met a rate cut he hasn't liked, so probably no big surprise there. We'll see where Waller is. He was dovish over the summer and has kind of pumped his brakes a little bit. Williams, Bostic, typically near the middle consensus view of the committee, so that should be interesting to look at. Paulson, too. Thursday, we have Hammock. She's very hawkish. She's the anti-Mirren, if you will. And then Schmidt, Logan, and Bostic again on Friday. So lots of Fed speak. We'll see how that informs this narrative. The latest data that we have, of course, is the ISM survey that we got last week. That ended up with weaker than expected manufacturing. As ever, 50 is neutral here. Above 50 is growth. Below 50, contraction. The further you go in each direction, either the further you go above or below, the faster that pace. So the further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So we got faster than expected growth in services, but also faster than expected contraction in manufacturing. That probably evens out to something like slow growth overall and a bit faster in October than September because the service sector is a bigger part of the overall economy. But all of the issues that the Fed is balancing here were on full display. Employment in contraction mode for several months now, and again in October, across both services and manufacturing. The price structure, annoyingly elevated still. In the case of manufacturing, not surprisingly, prices are coming down because demand is shrinking, as we just saw. Services, where it isn't shrinking, prices are still near their peak highs of the cycle. And that, of course, continues to keep the Fed in this sort of tightrope walk where they're trying not to let inflation back out of the bag while dealing with what's going on the labor side of things to the extent that they can. Because, of course, they're trying to cut rates to spur hiring, or at least to backstop the labor market that appears to be shedding. But it's unclear whether they can do that, because it's unclear what sort of impetus rate cuts can give if employment is being primarily held at bay, or at least employment growth, by immigration policy, which has reduced supply, and by AI, which has improved efficiency. So it's unclear to what extent you might get companies, even though AI maybe has not improved efficiency for the majority of firms near term, they're certainly looking ahead to saying, well, how much efficiency might we be able to glean downwind? Let's not staff out everything under the sun now. Let's see. So to the extent that the tariffs have created uncertainty and AI has created uncertainty for companies to build labor forces, and to the extent that immigration has slashed the supply of labor, you end up in this sort of environment that the Fed has been scratching its head around for a while now, where you don't have very much firing, but you also don't have very much hiring. And maybe the firing is starting to pick up because, of course, just last week we got those challenger job cuts numbers, which showed companies are intending to cut significantly at this point. So perhaps we're finally getting to the place where the Fed's calculus is going to tip in a direction, but so far they appear to be stuck and going very slowly. The markets still expect a lot more easing out of them next year than they have owned up to. We have 67 basis points, so now a better than 50-50 chance of 3 cuts, 2 cuts already baked in, but of course the Fed has only owned up to 1. So even if the Fed were to do something moderately dovish with this commentary this week, the question is, well, how much more dovish are you going to get? The markets are already well ahead of where the Fed is just past the December meeting. So an interesting sort of setup here. We can see since we had this latest cut, this was, of course, that meeting where Powell said the scary things that the markets didn't like. Stocks topped and haven't attempted to scale the highs. The dollar has pulled back at the start of this week a bit, but still continues to be on a trend higher, despite, as we can see, the actual start of rate cuts. So that trend remains intact. Now, if we get economic data this week, we'll see how it performs. Recent data from Citigroup suggests it's tended to be better than expected for the most part, and the Atlanta Fed GDP Now model is telling us that most data going into the model has been relatively positive for GDP growth. But so far, we don't know, first of all, if we're going to get this data, and secondly, we don't know if the markets are going to like it, if it diminishes the probability that we get this December cut with economic strength on display. So if nothing else, what we find in today's price action is that after a day of exuberant cheering for the end of the government shutdown, maybe, likely, let's say, momentum has been sapped. And we're going to try to find out if we're going to get it, but if we don't get it rebuilt tomorrow when we return to an active bond market, well, then perhaps sentiment really did have only one day in it and we're back to defensive mode. Now, as far as positioning is concerned, I'm a little bit long gold at this point, which I flipped over at the start of the week once it rallied. Still long the dollar, very short the pound and the euro, though late last week, I cleaned up the trade on the Canadian dollar, took profits there. At the start of this week, took profits on the Aussie short, and have a little bit of a smaller exposure. On the spot side, I'm still short yen as well. That's been working. Still short a bit of risk through IBIT, the Bitcoin ETF. That's been working. That's down over 3% today. And long a little bit more on the metal side with a call vertical on SLV, looking for silver to keep going higher. Short risk through SPY, basically off that Fed high. That's obviously somewhat under assault here, but interestingly, because the trade was from those Fed highs, it's still narrowly in profit. So we'll see if that's able to be sustained. Long the bonds, that seems to be working better today. While we're shuttered, we'll see if it still does tomorrow. And crude oil still a little bit short there, despite a bounce today. We'll see if that bounce ultimately finds follow through. So we might have to unravel this one, but we'll see. It hasn't crossed any Rubicons yet. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.